Testing. Are we live? Wait for it. Wait for it. Is it live? Is it live yet? I think it's live. There it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hard chat. X out the chat. Hit the thumbs up button. Second link for the Nightly Watch This in main channel. First link for the Scream Alerts boot camp and real estate course. Follow me on Instagram at the Trading Fraternity. Keep it positive and respectful. New guys, don't be too shy to say hi or too high to say shy. We're glad you're here, but we have an exciting day today. We already got a little bit of a statement from Powell. I believe we are going to hear from him in a little bit more. I think you're going to hear a little bit more from Powell, as well as, what's his name, too, Powell tomorrow, and a few other Fed people. You got more bank earnings, airline earnings. You got a few updates here. It's looking pretty decent. Market is doing pretty decent here coming into the morning compared to yesterday. We will see if it holds up. The bonds, they did come back and reversed a little bit, so this is going to put us in an interesting scenario. We're right at the same spot, hopefully. You guys watched what we talked about on the watch list yesterday with just everything. Yesterday was a very interesting day, relying a lot on Powell, so Powell's testimony is going to take a lot. Yeah, you got a budget bill offered as well, too. There's a couple things, so we'll go over those in the morning. But how you feeling, baby? Good morning. Good morning. How you feeling? How you feeling? Are you feeling good? Are you feeling good? Is this the morning? Good morning. Hi. How are you? Oh, yeah, you're feeling alive. I hope you're feeling alive. It's a great, bro, it's Wednesday. Oh, man. Yeah, I'm just going to start making a big deal about every day. You know, like Monday gets me hyped. Tuesday, oh, my gosh, Tuesday. Monday's brother. Oh, and then the cousin, Wednesday. Oh, man. Oh, man, good morning. Oh, Wednesday, you get the real estate. Oh, yes. Oh, yes, Wednesday, it's lit, baby. I hope you stay lit, like, in a positive lit fashion, you know what I'm saying? Like, I hope you stay positively lit, not like, I hope I'm not like, if you were tripping out right now, I don't know how I feel about that. I mean, God bless, we still love you, but, like, I hope it's just a lit Wednesday and you stay lit, baby, okay? Okay, sounds good, sounds good. So, let's see what we got here today. You got Bank of America and Wells Fargo. So B of A loans and leases dropped about 12%. Net interest fell shorter of expectations. Wells Fargo had a 38% increase in the bonds. Powell already spoke today, so he already got, I think this is a prepared statement, but he's going to have a 2-day testimony. In his prepared remarks, he said that the recovery still hasn't progressed enough to begin tapering, and inflation will remain high in the coming months before moderating. So that's what we talked about yesterday on the watch list. Yeah, Valander got a partnership with NVIDIA. They've joined the NVIDIA stoplight program, I think, or something like that. So hype. We love NVIDIA. We love Valander. We'll see what happens. But Powell, in general, again, he is going to have to acknowledge the high inflation. That's what we discussed. So we'll see what he says about that. He had a prepared statements. The questions are going to come, I believe, at 11. So we have about 2 hours here until Powell gets on screen, and then we're going to go from there. He said measures will remain higher before moderating. Measures of longer-term inflation expectations have moved up from their pandemic lows and are in a range that is broadly consistent with the FOMC's longer-run inflation goal. So there's that. And then Larry Fink. This one was interesting. Did you guys hear Larry Fink this morning? He said he is not buying it. So after that, with Powell, he said, I do not believe inflation is transitory, he told CNBC. And on the same channel, Steve Mnuchin, you got to hear from Larry Fink, the CEO of BlackRock, and then you got to hear from Mnuchin. So Mnuchin agreed, and he said tapering should start immediately. And then Democrats may invite Powell to voice their support for another big round of fiscal stimulus just months before Joe Biden is expected to consider his renomination. Republicans will point to the risk of deficit spending. But futures are up here. Treasuries rose with the 10-year retreating below $1.3 weekend, and cryptos are steady with Bitcoin around $32,000. The oil has been settled So oil standoff, kind of. The UAE and Saudi Arabia have reached a compromise after agreeing on a higher baseline. A delegate said the new baseline is at 3.65 million a day starting in May 2022, so a long time ahead of us, up from the current levels of about 3.2 million. Cartel will set a new meeting date. This clears the path for higher production, possibly in September. Oil was a little changed, around $75. Beijing is tightening up on some of the crackdown stuff, allowing Alibaba and Tencent to work with each other. China shut down the Anhai province. They pledged to shut down all mining projects within the next 3 years. Credit, Goldman is offering bonds there, not too much. BlackRock, they had their earnings as well too. Its net inflows missed, outflows of $26 billion versus inflows of $8 billion. Earnings and profit beat. AUM was a smidge above the consensus at $9.5 trillion. Assets under management. Wow. How is lumber looking? If you saw yesterday in the watch list, lumber's actually came back down to the December 2020 levels. Very, very crazy, man. Very, very crazy. Infosystem raised the revenue growth as net income missed. Delta's total revenue beat as it sees a profitable second half. More corporate, Jeffrey and Sumitomo Mitsui announced a strategic alliance to collaborate on investment banking. SMFG will buy up to 4.9 stake. MasterCard will be barred from onboarding new clients in India from July 22nd. Apple asked suppliers to build 90 million next-generation iPhones this year, a 20% increase from recent years. Let's see. Brazilian President Jair Bolsonaro was admitted to the Armed Force Hospital in Brasileira for test. He complained about, oh, man, are you serious? Bro, President of Brazil in the hospital. He complained about continued hiccups for the last 10 days. Oh, man. That's crazy. We came close. A $3.5 trillion spending spree was agreed by Senate Democrats, paving a way for a bill to carry most of Biden's economic agenda without Republican support. The president heads to Capitol Hill today to discuss it. Talks on a separate $579 billion bipartisan bill also made some headway. Chuck Schumer wants to send both to the floor this month, which will allow votes up in the fall. Treasury yields have fallen for good reason. HSBC Stephen Major said economic optimism has probably peaked. There's too much debt around there. Let's see. U.S. credit spreads are down. Jerome Powell at 12 p.m. Eastern time. Fed Kashkari at 1:30. Fed Beige Book at 2 p.m. And then that's it. Let's see what we got. Deal making. Airbus beats Boeing. Enforcing deals. Okay. U.S. credit was affirmed AAA by Fitch last night. Outlook is kept at negative. Senate bill to legalize marijuana. That's what we're also going to get today. Factory gate inflation accelerated. And what else we got? Deals. eBay will sell part of its stake in Adventa for $2.25 billion to win regulatory approval to combine their classified business. Zomato's 1.3 IPO was fully subscribed on the first day. EQT Infrastructure will buy Covanta Holding in a deal valued at $5.3 billion, $20 per share. Broadcom ended talks with SAS Institute. I forgot about that one. That was last night. Avago. Get that on your list. InvestCorp Fund buys 5 U.S. properties at $420 million. What the hell did they buy at 5? It's crazy. ARK has been selling China stocks. They're waiting in her flagship ETF plunged to less than 1% from 8% in February. Ryan Jacob is launching a thematic ETF. Ticker JFWD. It'll invest in innovative, forward-thinking companies that the team believes are leveraging technology. L Brand fell in extended trading. I think we're doing good. The Apple estimates, watch the chip stocks with Apple set to plan iPhone output increase. Nike loses court spat over EU EU crackdown on tax affair. Delta to pick up used Boeings. It's looking good. It's looking good. You're going to get some events here at Third Bridge. Virtual marketing day with McDonald's, and then Microsoft, Nike, and Walmart have a Third Bridge thing. Interesting. Cool fashion. On this day in history, in 1979 or in 1789, a Parisian mob stormed and tore down the Bastille, or the Bastille. I don't know how to say that. A royal prison that symbolized the tyranny of the monarchy. The crowd seized the arms and gunpowder stored there, and its 7 prisoners were freed. The fortress's governor was killed, and his head paraded on a pike. One of many to lose his head in the reign of terror that followed the revolution. That was today. This day today in history. Okay. Good morning. Today is French independence. Well, look at that. We'll see if we get fed independence today with Powell. Bastille. But pretty straightforward today as far as some pre-market movers here. What time is it? 6:20. We got a little bit of time left. Mortgage apps came in. Oh, yes. Bastille, Christian Laviscu. You French? Are you French, my brother? Are you French? Is that how you know how to say? Je m'appelle. Okay. I'm just going to get back to the news. Okay. I'm not that, yeah. See what's about to happen next, okay? Good morning. Welcome if you're just joining. We love you. Good morning. Somebody needed to hear that. It's a good morning. Oh, yeah, I know you feel a little tired, huh? You feel a little tired, but you're a beast. You're a beast. They can't stop you, buddy. I'm just telling you what it is. They can't stop you. Oh, yeah, the attitude is in drive. I'm just telling you right now. That's all I'm telling you. Oh. Anyways, Affirm Holdings rises 1.6%. Analysts downgrade the risk of posed possible competing services. Bloomberg reported Tuesday that Apple is working with Goldman Sachs. Alina Pharma, ALNA, falls 28% after its planned share offering implied a slight discount. Apple shares rise 1.9%. Bloomberg reported that they're looking to build 90 million next-generation iPhones. Bank of America dips 1.7% as loans and leases in the consumer banking unit fell 12% from a year earlier. Net interest fell shorter of some analyst estimates. Citigroup rises 1.6% after posting revenue slightly ahead of expectations, driven in part by a 37% jump in equities trading. Conagra dips 1% as at least 2 analysts downgrade the stock to hold equivalent ratings for the company cut. It adjusted its earnings shares yesterday, or its earnings forecast. Watt gains 4% after announcing availability of kit charging electric devices from a distance. JEF jumps after SMBC said it is entered into a strategic alliance with the U.S. firm to collaborate on future corporate and investment banking businesses. SMBC. Okay, I think we heard that earlier. Jiuzhou Holdings, JZXN, rises 35% after announcing a pact to build battery swap stations across China. Minim, MINM, rises 50%, while other meme stocks are showing mixed performance. Peloton dips 2.8% after being downgraded to neutral at Wedbush, which sees a risk of slower engagement in the aftermath of the COVID-19 pandemic. Tilray, Sundial Growers, and Hexo all advance about 2% ahead of pending announcement for a proposal cannabis bill from Democrat Senate Majority Leader Chuck Schumer. And then Valodyne LiDAR, baby, VLDR, gains 6% after saying it has joined the NVIDIA Metropolitan program for traffic monitoring and analytics. So those are your top movers here. Let's see what we got. There it is. You got your mortgage applications. They came in at 16%. Woo, that's because you've had a really big decline. And somebody even asked me about that too. What's it called? They said somebody was asking me about the month over month with CPI and all of that. And this is up because it's the last couple months were down. So month over month or mortgage applications is week over week, so it's an interesting read there. But you're going to get your producer prices today, all of that. As far as our news, Let's see some top news. Let's see. What time is it? Oh, 6:24. Well, let's get a couple here. Let's get America's largest increase. BlackRock, again, Larry Fink, people are talking about that. Baidu, Cathie Wood sells China stocks. Alibaba, Tencent, Mul. They're going to be able to work together. I think a lot of Chinese companies will. JD, other platforms become more amicable. Ransomware gang offline. Let's see. New sentiment. Peloton actually cut to neutral by Wedbush. Conagra price target cut. Abraj slaps Abraj CFO. Apple buy now, pay later. That has the effect of firm. Alina Pharmaceuticals, a direct offering there. It says they're up, but I think they ended up selling off a little bit. Delta Airlines, all the airlines this morning. Actually, I got to put that on the list. Yeah, a lot of the airlines are going to be good. Again, Citibank as well. They were a top one AMC stock doing. Let's see the most positive. America Noville, profit more than doubled. L Brands, that's from yesterday. I'll actually get LB on the list too. LB could be a good one. 10% increase in gold production, Superior Gold. PepsiCo reported double-digit again. They might have a continuation. I think that one got slipped on. MINM. Again, this is the that's the meme stock for the day, I think. Minim. MINM. The Lander. Where'd everything go? Trend, MINM, Empower Clinics, Schumer's Pot Bill, Canopy Growth, all those are going up. Conagra was bad, positive. Ulta Beauty, raised to outperform. They could be pretty good there. Pepsi again, L Brands, MongoDB. Investor news. Nike can receive big boost in sales. It's time. It's time, baby. Listen, man. I already hyped you a little bit in the morning. I might have to hype you the rest of the day, okay? I might have to hype you the rest of the day. And what I mean by that is you can't be stopped, my friend. Okay, you are blessed. You are filled with opportunity. I hope you know that. And you know why? You know, a big part of it, you are internally blessed. You are internally filled with the opportunity. But just listen. Just listen. You live in the greatest country in the world, baby. You know, there's people protesting right now all across the world, and they are holding American flags. Wow. So you know what I'm going to tell you? Before we go and chase a dollar, before we try to enrich ourselves, before we try to do anything of that nature, we must pay homage to the people who have sacrificed for more than most of us ever would. And a lot of us do not realize it, and we take it for granted. And that is the sacrifice and service of the veterans of the United States of America. So before we do anything like that, we need to pay a huge special shout out and thank you to all the active servicemen, past servicemen, anybody who has served this country. We love you and God bless you. Thank you for doing what you're doing. I hope you know there's thousands of people out there who really do appreciate you, and we are in debt to you. So God bless you and thank you. And shout out to the police officers, the firefighters, the doctors, the nurses, the teachers, all the other public service out there. We love you as well too, baby. God bless you and thank you for doing what you're doing. Ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Stand at the dance! Oh, it's game time, baby. You're hyped, Horn. Oh, wow. Let's go, baby. It's feeling good. So our work is cut out for us today. We're going to get Powell here in a little bit. You already got prepared statements. You already got a little bit of bank earnings, airlines, all of that. I got a couple of names, not to mention everything we were watching yesterday, but I'm going to be watching Overstock, OSK, Ford, GM, Wells Fargo, Bank of America, Starbucks, Valander, Broadcom, AVGO, AAL, L Brands, and MINM, baby. MINM. That's going to be your hype play today. So we'll see how everything plays out. You got earnings. You got that credit spread strategy as well, so we could take a look at a couple of them. But call out any plays. Like the video. We appreciate you liking the video. Thank you for holding it down. And above all, baby, it's going to be a good day. It's going to be a good day. Who is thy will not as strong as thy fist? Who could stop you, my friend? Who could stop you? Watch the chip makers. Again, that Apple stuff could have a big effect. Yeah, they're up 1.7. A lot of the chip makers are going to run, given what Apple is requesting. You know, Apple is requesting a lot. Love thy video. Love yourself, man. Okay? Some of y'all should have... Woo! That's the bell poster. I was about to just go on a rant and tell you how fucking great you are. Round 1. Fight. So there it is. Watch Facebook. So let's see some of the other chip makers. Again, airlines as well. Those are already up 1%. Not every chip maker is up too much. What was I going to look at? The banks. So Bank of America is down. I think Wells Fargo is up, surprisingly. Citibank is up. Let's see what we can do with Bank of America. If Bank of America keeps dropping, that one might be a nice play there, ladies and gentlemen. Run it, Citigroup 2.8. Oh, TOT. Everybody in the TOT. Shopify 1.8. Again, we had that ghetto spread still. You could do a couple things with it. Shop 2.0. ASML 2%. Let's go. Apple shares open by 1.7. Let's see. Bank of America. So in 15 minutes. So get ready. We're going to make a play on Bank of America probably in 15 minutes. They're going to have their earnings call. Remember, the banks, they open up a little bit weird there. Starbucks got the morning fix. There's Intel on the low. Watch airlines as well. Even BlackRock. Again, chip makers are really, really leading it right now. Dow Jones, damn. NASDAQ is up almost 1%. You're very, very bullish on this in the morning. Let's see. I'm looking at a play here. See, I need Bank of America to drop a little bit. So, let's see. So, Bank of America, I'm considering it. They have their earnings. Their call is going to be starting in 5 minutes. Broadcom, again, Broadcom has some good news with it in both ways, even though they backed out of that deal. Valander has a deal with NVIDIA, or they're joining one of NVIDIA's like network things. So I'm running the numbers here. This is just like we did yesterday, trying to see which ones, what it would cost me, what's going to be the risk, what could be a good play there. Because the weeklies on Bank of America, you cannot collect as many premiums. That's the only thing. What? Starbucks at all-time high 120, Myrna 2.5, Datadog candle, Micron. Yeah, Micron, Qualcomm chip makers again. They're running off of the Apple demand news. Yeah, bro, these suck. The weeklies suck on Bank of America. So again, I'm hoping Bank of America sells off a little bit harder here. That's what we're waiting for. Apple, BA on the low. Net Cloudflare, Newegg up 9. Again, Mini. Was it Mimi? What was the stock? There's one hype stock. Qualcomm on the high, killing it. MINM. That's the hype play for today. But it's already came down. Broadcom, Bill. Broadcom's going to be nice. I watched the bonds too. Again, because Broadcom is pretty much saying that they're going to acquire somebody in the next 3 months. If not, they're going to announce a huge buyback with the money. Yeah, Boeing turned red there. Dow is the weakest right now. Only up 0.3, but still not too bad. So there's Bank of America selling off right there. Pepsi continuation. Starbucks almost up 1%. Yeah, Pepsi another 0.5%. Starbucks, Roblox, Nvidia's down. Qualcomm's looking fire. Qualcomm is up 3%. Oracle, JD, the China companies should do good. Again, the news that they got was actually pretty decent. Good morning, Josh. Love you all. Thank you for what you do. I love you, baby. Stay hyped. It's a beautiful day. It's a beautiful day, and we got Powell. And the markets are very, very bullish right now. It's looking very, very, very solid compared to yesterday. Again, we'll watch what happens with TLT. That did give us some less pressure here. As far as S&P, total flip-flop to yesterday. So today you have 390 names up right now, only 110 on the low. As far as the Dow Jones, 23 up, 7 down. So just remember yesterday, a lot of everything was down. You had a very, very big mixed bag. Okay, I have an idea. I'm trying to look. I might even sell it in the money on Young Bank of America. Break even at 38.99. What are they at right now? Oh. Ooh. So it has to go above 30. Pretty much it depends how it plays out from here. So I could whiff this one heavy. It's either because I'm going to wait here a little bit till their earnings call starts, but if it doesn't drop anymore, I'm going to lose that opportunity there. It's like right at the cusp. Yeah, we get Powell today. You already got his prepared statements. He said exactly what I said on the watch list. He acknowledged the higher inflation. He said it's going to run hotter, but he says it's not time to. But then a big development this morning, Larry Fink, CEO of BlackRock, as well as Steve Munchkin, our former Secretary Treasurer, both said that inflation is not transitory and that the Fed should tighten up immediately. Yeah, Overstock came back up a little bit. Airlines sold off, surprisingly. AAL's up 6%, but Delta's coming down there. McDonald's on the high. Walmart's coming down a little bit. McDonald's actually looking really nice. Facebook on the low, really. Interesting. Delta downgrade, I think. But I think as a peer group, they all should do pretty decent. So McDonald's is getting some steam right there. Let's see, Chipotle. Chipotle's not bad. Microsoft dropping fast. They're not as up as much. So again, do you see the difference between yesterday and today with some of the bigger names? I mean, Apple's doing great. But like Facebook, Amazon, they're barely up, but you have a lot of other names kind of supporting the weight right now. There's Bank of America popping, you see. So that same play right there, I think I already, 39 cents. That one, I already moved that 20% I was looking for. So Bank of America is coming up. I think I could sell the ones with more time. Let's see. Where's the... Yeah, Bank of America is the only... Out of all the banks today, they're the only one that's red. GPS up 2.3. Myrna on the high. A couple vaccine stocks are doing good. TLT kind of wants to bottom out there. No. TLT moving very interesting. UWMC, Google, Qualcomm. Are the Qualcomms back up? You got 36% on the short terms. But then the other August ones are actually still down. Very, very interesting. Walgreens, why are you so abusive? It just starts up high and then comes back down. I know it happens. It happens. There's Altria. Airbnb. Airbnb was doing good pre-market. Coinbase on the high. Yeah, Airbnb back down to 142. McDonald's all-time high. How about Starbucks now? Altria coming through the top though. A lot of back and forth today. You have some value doing good, some tech. It's kind of a mixed bag. Excuse me. Dow pop. JD on the low. Watch some of those China stocks there. CEI, Delta wants to come back up here. Wasn't Delta just red? Was it Delta? Or, yeah, right? So that's good. Let's see Delta. Bro, Delta, oh, that would have been great. JPM on the high, Honeywell. See that one right, that Delta, that was actually a big shift there. Honeywell's up 1%. That's doing good. Yeah, lumber is clapped. Bro, lumber is cheaper than the beginning of the year now. Isn't that crazy? So think about, I mean, I'm kind of scared for Bitcoin because Bitcoin and lumber had had an interesting relationship. You know what I'm saying? It's crazy. Not at this store, it isn't. Damn, son. Lumber coin. Not at Home Depot. So then when do the houses get cheaper now? Now that the wood is cheaper, how do we get a cheaper home, sir? So what, we got 642? I'm waiting for B of A. I probably already could have hit it. MA going crazy. I think MasterCard got clapped from India today. But they're doing good. Visa as well. Visa the other day was absolutely killing it. Where's PayPal and Square? PayPal, Square slightly up. Amazon up, but still not up. Qualcomm might chill out there. Let's see. Intel, not as much. And then SPY up 0.5%. NASDAQ came down 1/4. Everything, all markets are pretty much at 0.5% right now, but you do have it spread out between a lot of different companies. Schnabel, medium-term inflation outlook still overlooked. I think that's a UK speaker. Airlines jump after upbeat outlook from Delta and American. Yeah, so Delta had a good outlook. I'm surprised a lot of the other, like AAL is really ripping. Yeah, lumber commodity back to pre-COVID. The retail market hasn't dropped. It's more the spot future prices. And that's what I think. I think part of it was kind of speculation. But either way, still, still an interesting thing to see. Just remember, 3 months ago, people were they were blaming inflation on lumber. So to watch lumber prices go back down and CPI go above 5.5, 5.4, very crazy, man. Very, very crazy. The marijuana stocks is probably, I don't know how it might be a buy the rumor, sell the news, but I do think the marijuana bill coming out today is bigger than a lot of people think. I think in the fact that if they are able to, that's one of those metrics I've been looking for. I don't know if it's going to get passed, but if they are able to take it off of the Schedule 1 list, it could be very, very good. But then again, right now at the same time, you do have you have the budget bill, and you got a little craziness coming out of Capitol Hill right now. So we will see. I don't know how they're going to factor it. There's a lot that's being asked for today. If you think about it, they're trying to, they're ignoring this $600 billion bipartisan bill, and then they're looking for a $3.5 trillion bill, and then now they're going to try to get a sweeping marijuana legislation. I mean, we will see, but the stock's coming down. I mean, all of those weed stocks were up this morning, but like I said, if it does go through, maybe we hear about it in the future. It would be a very it would be a big bill. That would be something that it would open the way for Wall Street, because if they're able to allow banking and taking it off of that list, it would swing the door open for Wall Street. See, so Bank of America came down. That's what I was waiting for. I'm still looking at some of those credit spreads there. So let's see how we're going to fit this one in. SPY's coming down a little bit. Twitter option alert, August 2075 calls. Emerson Electric price target raised to 111 a share by Deutsche. American Partners made 25 a share. Westwood Holdings bid. Americana, I think that's older from this morning. Now you're kicking off. So now they're getting, Bank of America is getting questions right now. So there's analyst questions happening now. He said he was asking about loan growth and what will boost that. Follow-up question, should 2022 be material different than 2021? This is this is on the Bank of America conference call right now. Don Fario says that they aren't giving specific 2020 expense outlooks. The rough estimate is low $14 billion. There's a seasonal high payroll tax and 1% inflationary costs that have been seen in a few quarters. I see the mean-ass bounce in Bowen. I did not. Oh, this morning it was down. I like it. Again, I still like Boeing in the midterm with some of the other stuff. Again, though, I did cover it yesterday on the watch list. The reason why yesterday was so bad for them was because it really, it went fully opposite. It was very, very opposite to what the guidance they just issued a month ago. Overstock down bad. $38.50. Pepsi continuation. I'm waiting for that Bank of America. I may not take the Bank of America, so if the premiums don't look how I want them to, I want it to offer me a higher collateral for a decent, price. If that doesn't hit, I'm gonna pass up on it. So right now, hopefully you've been watching me. We are fishing on this one. We're waiting. He's striking it. He go to wide it. Yeah, you see it prowling around there. Held it steady. The S&P's dropping. Steady. Held it steady. Beautiful. You're doing great, Chad. You're doing great. Keep calling them out. PPPI, PPI coming in hot. Oracle gassing again. Watch Honeywell as well, too. SPY, little mini Chick-fil-A, not too bad. Just some early morning volatility or size moves. Netflix is actually leading. I haven't not checked Disney either. Playing with Bank of America, I want to sell some credit spreads if the credit is there. If I could see a good opportunity with some of the premiums, that is what I'm looking to take advantage of. Where's that low? That's 38.50. That's what sucks. It could go a little lower, but every other bank is up right now, so we just don't want them to flip flop. Let's see. Let's sell on the 38.50. That's not bad. I don't know if it'll break that. We'll see. That's lower credit. That's only offering 150 for that play. Well, Fargo dropping, good call out. See, okay, maybe all the banks are getting a little because Wells Fargo is up a lot. So then that could affect some of that right there. Is that PayPal on the high? No. Banks are doing weird shit. Again, they're having their earnings calls right now. So that's it. And the SPY just flipped. So this is, you could even see the financials drawing things down. We were up 0.7 and then 0.5. But now everything's dropping down to about a quarter. Delta clap in. MasterCard doing good. Visa just had a pretty wicked bounce right there. MDIA, was that the play from yesterday? Starbucks still hitting highs or what? 120. We'd like it. Yeah, Starbucks making another move. Watch McDonald's as well, too. They've been a nice one. When would lumber prices be reflected in retail? Probably a couple more months. Just depends on the situation. Or, again, this is the problem with price stickiness. That's what people, the biggest worry for the CPI is actually the stickiness of rent. We'll talk about that in a little bit. That's good. You're coming down a little. Where's L Brands? They had a good run up. They had earnings. They were a little bit lower here this morning. Let's see, JP Morgan. All the banks came down, but JP Morgan, that was a continuation. They flipped negative there. Viacom, AVGO came down. Qualcomm still holding. Intel, decent. AMD right at 0.10. Coca-Cola, again, Pepsi had some of the continuation too. Small caps. Well, small caps are outpacing, but they're still doing good. Dow right now is getting hit by financials, but it's still overall up. Again, I mean, you even saw TLT this morning. TLT is going the opposite way, so it's actually pretty chill for now. Again, Powell already gave a prepared statement, and Powell is going to come on here in probably like an hour or two. Netflix on high, Starbucks all-time high. Mm. $17. See, that credit's coming up a little bit as the stock is dropping, and that way, I like the 38.50. I'm waiting though, because if it keeps dropping faster, I can find a good one, or we could sell it in the money one. And I Broadcom to report buybacks. That's if they don't make an acquisition. So that's kind of the key right there. 38.84. I got filled on that. All right, I did a Bank of America credit spread. I did the weekly, so this one's a little bit risky, but I sold the 38.50, so slightly out of the money If they keep dropping, I will get clapped a little bit there. So we'll see how that one plays out. Which ones did I did? I did 38.50 and then buy the 36.50, 17-cent credit on 10 of them. Can you explain your view about how inflation is transitory or not? Overall, I lean more towards to the it's not transitory camp simply based on overall money supply. But that's it. That's the only factor that I could pull out of it. Everything else is kind of more just there is confusion. I think it's hard to put your finger on it, but at the end of the day, I do lean more towards non-transitory just because of money supply in general. Fed Munchin says Fed should trim assets. Yeah, that was this morning. The credit spread is bullish. Again, it's just like the Goldman Sachs we played yesterday. Like I'm saying, you have earnings. It shoots all the premiums over here. They've been able to come up a little bit. The idea is if it does make a move up, again, every other bank today is up 1 to 3% except for Bank of America. But the idea is trying to take advantage of some of that earnings premium. So we will see. But it is overall bullish in the shorter run. Basically, it's like 40%. It just, and inflation is just weird. I've been in the stock market for a while, and I remember when the Fed would say there was inflation and people would say no, and then when there is inflation, people would say no. So it's very interesting in that sense. Another one, again, this was a photo from the watch list yesterday. Where is this shit? Right here. This one just I found it fascinating. So here is the CPI, and again, these are the main 6 categories here. That's what you have in the orange, but like even if you took off the orange, all of these candles are still way bigger than every other candle. And then, even if you excluded the orange from here, used cars and all that, and then excused it from the CPIs here, the trend, just look at the trend of the white and blue, you still see it like double the size. Lulu pop. Yeah, Lulu made a move right there out of nowhere, 2%. Is there news? Oh my gosh, I'm typing in the wrong ticker. Lulu gains, Goldman cops it. New idea is at 8:04. That was earlier in the morning. Nothing new. But they got a price target raise earlier this morning. Yeah, so it's a CNBC pump. Yeah, the price target, that was old though. That was from an hour ago. Square pops. WHLM. Wilhelmina. Like, this is the modeling company? WHLM. Is this a SPAC or something? What is this? Philander bouncing back. Airbnb. Wilhelmina. This is the modeling company, it looks like. I didn't even know they had a stock. Airbnb is very bad. not based on the. I mean, the stock may not be doing well right now, but a lot of the reports have been actually good. People are waiting for it to base out. That's what it is. It's trading at a base right now. I know a lot of people have it in their targets, so you could take a little bit more immediate risk, and you could take Bradley Frizzle and the Peach, baby. Oh, no, man. That's what we need, baby. That's what we need. I love it. God bless you. Good morning. Get hyped. Everybody needs a little bit more Peach in their life. Moderna tops 100 billion market cap for the first time. So that Bank of America is coming down. It's probably coming against me if you guys want to see. Again, you shouldn't really damn, I already lost 50% on that play. So, again, you know how fast you can make that 30%. Now we're already dropping because, again, I shorted the puts. So if that put goes up in value, you're going to get clapped there. Coin pop. The Honeywell and Qualcomm. Where's the Honeywell? Yeah, the Honeywells are just still holding that 60%. So, like, Bank of Canada keeps benchmark rate. Bank of Canada sees economic slack absorbed in second half. I got my peaches out from Bradley Fraser. That's that shit. Bro, what is this thing? Is Wilhelmina a SPAC? Because I know this company. That's why I didn't know it was traded. Someone go, is WHLM a SPAC? When did it come out? Paola's going to be speaking, I know, at least by 12. Supply chain issues. Big pops on TLT. Man, what's up with these Bank of America candles? No, those bad. It was just tripping out there. Yeah, Wells Fargo holding the bottom there. JP Morgan. I think all the banks there, even the SPY's tripping out a little bit. Apple's coming back up. Non-binding arbitrary vote. Tick rotation. Man, my Bank of America, those candles are sketchy as hell. What is this market? TLT coming up. I want to see if it's going to revert. Again, this is all related here with Powell. So in a way, with Powell speaking today, if bonds go up coming into Powell, it's kind of hinting that there could be a little bit of bond vigilante in the sense that it could be pressuring him to want to do something. Microsoft leading the way now. They're at 0.8. Yeah, Qualcomm up 3.3. I'm messing with the bonds. Well, there's a lot. Again, it's just factoring in Powell. I mean, you're getting a very, very interesting reaction, more or less. That's going to be that's what I'm saying with bonds. This is just think about what you saw yesterday, right? You know, as you start to see, you know, it was after the bond auction, you got to see some of the reality of what bond traders are really thinking. So how this plays out here could get very interesting. Again, Powell is speaking today. So that's why I think we might get a little bit more fluctuations. I mean, if you look at it, it's still a pretty it's a decently wide range for TLT today. So we'll see. Square on the high. Qualcomm is almost 4%. Square's at 1.8. Getting some activity here. Low ticker is still picking up. SPY's kind of at right where we opened, but still up 0.4. Does Powell know what he's doing for now? Yeah, he does seem like he does. Yeah, that DVR. Well, make sure you guys refresh. Make sure you like the video. That'll prevent any DVR mishaps. I think I heard. The Qualcomm, the further out the monies are not up as much. But some of the other ones have came back up a pretty decent amount. I think they're up like 30 to 80. I need to double check. I can't remember. Yeah, 40%. These ones aren't moving, though. It's really, really weird. These August 180s. But we'll see. We'll see. So I'm 5 cents away from the money. So that Bank of America this morning, that one's clapping. I already lost $180, so I lost over 100% now. Because again, max credit you receive on that play was about what, 170. So you can see now I shorted the 38.5. The stock's at 38.5. I needed to close above there by the end of the week. Ooh. Do you love Powell because he came through with that TLT play? No, because that TLT play with Powell he didn't come through with it. We were just able to read it, everything. UAE says talks ongoing, no deal yet. Okay. I made a play. Y'all didn't help me out with it. Y'all ignored me on it. You know that? Y'all really ignored me on it. Y'all ain't like the video. Y'all ignore me. I asked y'all for something. You know? Y'all ignored me on it. I don't know why you had to ignore me on it. You know what I'm saying? The likes are... I don't care about y'all just ignored me. So it was the play I asked you about. I grabbed shares. Not a recommendation. You will lose money. Your DVR may be on too. So we'll see what happens. It's the play. We'll see. I think you was muted. Nah, I wasn't muted. I was like asking and nobody. They didn't. That's it. They didn't hit me with it. So don't trade it. Not a recommendation. I grabbed the WHLM stock. I just grabbed 200 shares at 677. So it got halted today, but they're already up 30%. So very, very risky. They're not a SPAC, but they have something up with it. But recently, I just saw one of their filings. It looks like it's not too crazy. It's not gonna have too much baby mama drama, but we'll see. Very risky. That's why 200 shares, $1,200. I mean, if I'm gonna lose 30%, That's going to be like what? $1 per share. I'll probably lose like $400. And Qualcomm Halden. Yeah, chip makers, all because of the Apple stuff. Netflix is killing. Netflix is the leader. PLXP News with Walmart. That was 2 days ago. Amazon came back up. Apple already leading. All big tech now. I think that was the flip flop, but now tech is the leader. Dow, S&P, all those came down. Yeah, I bought actual shares on that one. The other play I just made. Just keep it share. Again, anything risky, anything in that's cheap, I always go with the shares just because it's just a lot safer. You love is turned off? What's that mean? I love you. What do you mean? We hyped. It's a beautiful day. It's only 7:10. I can't wait. We got Powell. Oh, we have a long one. How long am I trying to keep it? Hopefully get some free shares out of that. That's the idea. I mean, if you get anything cheap with it, if it's volatile, you spend a little bit amount of money. It could give you a lot of good things. A lot of good things, but it's also very risky. DDD is up 5. 3D Systems. Yeah, I remember I traded this thing back in the day. I was like, is this same 3D? There was a 3D so just like there was EV stocks, there was like a 3D printing revolution at one point in like 2013, 14 and 15. It's pretty cool to see. But that everyone changed their mind. Ready to sell before end of the day. That's not how I trade them. I swing trade. So on any of those, like if you've ever seen any of the small plays we've made, I'm gonna keep. I'm not gonna hold it in the long term, but it's at $1,300 for 200 shares. I mean, I'll look at it next quarter. If it goes up 100%, if it gets volatility, we make it free. If not, I mean, I've lost more on a UWMC option for a month, essentially. So you could get the shares. It's just the sort of strategy it is. This is the small share strategy. A lot of you should be familiar with it. That's why most of them are very, very risky. They'll sit there. Some of them will do nothing, but it at least gives you a little bit more wiggle room. Bank of America hit the bottom. It might. I mean, so remember, Bank of America, I did that play here today. I have 2 different options. One, I'm going to use time to my advantage, first of all, because, again, this is a weekly play. And, even though I'm down on it, I'm still out of the money. I was still out of the money up until that bottom point. So if it falls out of there, the time decay will go very, very fast. And even if it does go against me, I am going to just use my average down strategy with it. Pope Francis returns to Vatican after 10 days. Xpeng will get additional net proceeds of Hong Kong 1.9 billion via option. Lululemon option volume rises. Like how you did it with Workhorse, yeah, and Workhorse, all the biotechs. There's been a lot of names we've hit it with. CoinRed, Chicle. Let me see, Qualcomm. Yeah, where is Validine? The Lander, that was good. They were up 6%, I think, in the morning. PayPal, Logi on the high. GDS may benefit from China data center expansion. And commodities, where's Datadog? That one came up. TTD, where's that play? We got 5% on that TTD. See, that one, remember, we sold both sides, so the stock has just stayed the same way. You get to see how you're up on both. But it's just only like 10 bucks, $6, but nothing crazy. But still, watch out. Facebook and Twitter on the high. Or no, I thought that was Facebook. Facebook's on the low. Twitter's on the high. What has happened to Uber? Wasn't it something a couple days ago? Oh, duh. You don't know what happened to Uber? Anybody know what happened to Uber? There's one thing. I mean, again, the reopening trade, and you saw some of them. They got clapped with the whole reopening trade thing a little bit, that reflation trade dying as people were talking about. But there's a big thing that happened to Uber. Yeah, Didi. They own part of Didi, so they got a little bit wrecked on that. SPY wants to bounce here. Overall, we've been selling off, but still overall open. Lulu's hitting another high. Broadcom mini pop. Senate Majority Leader speaks on Senate floor. He said road ahead on budget measure will be long. So still more budget uncertainty. Where's TLT? That might help things. Yeah, Broadcom coming off the bottom there wants to. I'm convinced they sold DD's stake. Nah, they've held it for a long time, and if they have a big stake in it, I don't think they would. I don't even think they'd be allowed to. I mean, the last thing they want to do is sell their only option in China. It's a weird situation. That's why the DD thing was so like, what the hell? Honeywell wants to make another run up. The premiums are still holding steady, though, believe it or not. Yeah, Uber still has 12%. Peak yields. Vertex looping copy cystic fibrosis. Get ready for Powell. What time is it? 10. We still got a little bit of time. SGCC market, it feels like we're moving a little bit slower today. But you're actually pretty good. You're pretty on par. You're on par with the average day. Almost 10 million here in the first hour. No weapon phone against me. Where you get try that. Let's go, baby. Good morning. Happy Tuesday. It's not Tuesday. It's Wednesday. Oops. That's crazy. It's crazy. Wednesday's beautiful. You're beautiful. Good vibes. Good vibes, baby. AAL, UAL coming back up. So let's see. You opened up strong, kind of edge down there a little bit. If some things start to pick up again, airlines, that's 7% right there. DAL popped, I'm sure. Yeah, if they've been going back and forth. But again, there's been a lot of imbalance today, which makes it interesting. Like Bank of America is down while every other bank is up. The airlines are ripping. Then you're seeing Honeywell getting a little bit of steam right there. Lulu pants on fire. Oh, yeah. So that was the first CNBC pump, and then they're continuing. They did get an upgrade today, so that's why they're up by Goldman Sachs in a price target increase. UMC spreads fire. Yeah, we already. That's taken as a loss. I think it's like $1,500, $2,000 loss. There was a big $1,500. There was a bigger one. I think even 20% of my loss on this stock is just from the option now. CNBC talking airlines. SGOC. Yeah, Twitter is up today. I lost that much on Bank of America. No, I think I'm down like $100 on Bank of America. The max loss is like 1,500 on Bank of America, but the stock would have to go to like 36. No, I'm down $100 on Bank of America. 180. Not 2,000. You could rewind and go back to the play and see. Amazon acquires Facebook's entire internet satellite team. Delta sees revenue at 65 to 70% of 2019 levels in third quarter. That's, I think, coming from their conference call. If Fed tapers, will that be bad for UMC? They did good in the initial talks of it, so it's a hard one to say. It's a hard one to say. Coin drop. Coin was, man, I thought Coin had a pop. I know strategy for inverse ETFs. Usually, if you could sense a move, then you could play them, if that makes sense. That's why I don't hold them. That's all. I think Wilhelmina got halted again. They popped back up. Yeah, it's second halt right now. That's good. Very, very good. I feel like they're halting it with a very little move. I think the shares are it's only 5 million shares. Coin just loves flipping. So does TLT. Intel. So now I'm below the break even on the Bank of America. Or not the break even, excuse me, the first strike price. My break even is about 17 cents below. Sam could be really good. There's also STZ Constellation. And then after Pepsi earnings, I think it could actually be pretty decent. Pepsi looks a little bit better. And then how's Sam look? Sam's actually the leader. Market is moving slow, but very, very average. It's following the average 10 million in a what's it called? 10 million in an hour. Delta on the high now. So Delta reversed. They just got that update on the profit. LUV, Southwest, UAL, all airlines are moving right now. SPY is hanging right below where we opened from. Not too bad. Not too bad. And you got Young Powerley. Oracle on the high. Bank of America hitting another low. Let's see where Wells Fargo. I think that's why. Goldman. DraftKings. Uber. Where am I? Snap. Oh, Snap. Very, very good. Yeah, so Bank of America, if this one's already going against me that heavy, the idea here now, I'm down 295, so now you're down almost 200%. That's, again, bigger collateral. You guys are going to get to see this one. But the idea is there's only 2 days left on expiration. We wait. We come here into the close. If it still keeps going lower, I'm going to be able to roll it over. And then we enter the mission. But my break even is 17 cents below 50. So what's that? 37. HA's the laggard, only up. I was Delta. Schumer attitudes towards marijuana have changed. What did he say? He's saying it's time for a change on federal marijuana laws. He's saying jobs, family, climate are focus for Democrats. I heard, I forgot who said it. Somebody brought up the idea. I think it was the BlackRock CEO. And what he said was very smart. I think when it comes down to like environmental and like EV and all of that, they should just have the Fed backstop the loans. So pretty much with like all these like crazy technology future stuff, instead of pretty much the Fed should back developmental loans to that's the role that they could play with stuff. If that makes sense. I kind of like that idea. CLDX popped there. They're the ones that moved yesterday. Powell speaks at 12, I believe. 12 p.m. Eastern. So in 2 hours. What do you mean by rolling over the Bank of America play? So have you ever seen me do a credit spread before? This is why the credit spreads are a little bit interesting, a little bit more advanced. That's why you don't want to force them too hard, or if you don't know what they are. But what you do is I would close out that play, and then I would reopen another credit spread to get the same amount of collateral. So essentially, you could keep the play going on a different timeline because I did do a short-term play with that one. You just noticed AMC. Oh, wow. Down to 35. 35 on a lot less volume sold. Yeah, Ulta upgraded Outperform. Wilhelmina unhalted. What happened with the vote? Which vote? U.S. crude stockpile is going to be coming in today. There's some expectations coming out on that. So I believe Powell is at 12:15. Let me double check. It says 11:50 Eastern, but then I think he doesn't come on until 12:15. So yeah, right around the corner here, about an hour or two. You have a lot you have a lot of things. And then after hours, Bank of America CEO, Wells Fargo CEO, they're going on Bloomberg. Microsoft's chairman and CEO is too. Fed Kashkari at what, 120? Senate stakeout. I don't even know what that means. But it's good. Again, Powell and what the effect with bonds. I mean, this is adding back to yesterday. Just remember what you saw yesterday and how, that bond auction had that reaction and everything, because this is now, I think this is all just responding to Powell still, where he is the next one in line to cause a bigger response. MO creeping. Yeah, MO is doing great. What about Walgreens? Yeah, all the other banks are coming down, or at least JP's holding, but Wells Fargo's taking a drop here. SPY's coming towards a low. Apple may squash the buy now, pay later party. What? By the dip on AT&T, if it's coming close to their earnings, Walmart on the high, or their ex-dividend, excuse me. Oil numbers are going to come in here. I don't know when. Soon, though. Walmart SPY picking up heavy there on the downside. Walmart going up. Let's see McDonald's. Last month with the fifth warmest June on record. Damn, son. SPY getting a little bit red there. Again, bonds moving in the opposite direction. CCIV making me cry. Don't cry, man. It's a good day. It's Wednesday. 7:30. We have a long day ahead of us. You're going to get Powell. You're going to get oil. You had a big move on the market. We're coming back down again. Just take a look here. Compare bonds and everything else. It's very, very weird. Because last time you see how bonds paralleled here. And now it's kind of doing the opposite there. I think Powell might be a little bit more momentous than I expected. Buy when it dips low. I can't wait to see Powell on my flip phone. What? I don't have a flip phone. Flight to safety. It could be again, but then again now, if those yields start coming back, that should help big tech right here. That was the flip flop that you got yesterday. And Bank of America getting clapped, so it already fell below there. That's surprising. Looks like we're gonna have fun with this one. You got like what? You got like 50 more cents a drop. Oh, excuse me. Crop, there hasn't been anything breaking, nothing too crazy just yet. Let's see. Powell's testimony could push the dollar higher. How inflation spike may go from transitory to lasting. There's a headline here. Overheating economy, either because demand rebounds faster than expected, supply disappoints, or combination of two, is this fastest route to durably higher inflation. If that occurs, Bloomberg Economics General Equilibrium models show inflation in the euro area and UK moving significantly above expectations. In the U.S., a flatter Phillips curve means a more muted impact. So this is comparing all the governments in the world. I'm not even seeing really what it's saying that much. Oh, they're saying excess supply. Supply disappoints, demand rebounds faster, a mix of the two. Interesting. Oh, you didn't see that chart? Or some of you guys are still on the Pledge of Allegiance, huh? Wilhelmina halted it. Are you serious? Why? You're kidding. Wilhelmina did not get halted again. Why would it? It hasn't even moved. Dog. Oh, come on. Bro, they're easygoing us. That's like a good sign and a bad sign at the same time. Look at that. Why would you halt? Look at this move. Does this look like it should get halted 3 times? Oh, come on. Oh, come on. CNBC, Apple covering. It's not an offer. It's this halted. It's getting halted every time it has a fat green candle. And it's not on I don't know if it's 5%. It might be. Very, very weird. That's what EasyGo is. It's a very small float. Palantir down 1.8. Bro, Bank of America is down 4.6. So that, again, I sold in there at like 2 or 3%. But that's a big move. That one's clapping. Oh, Citi's getting clapped now. So that's not good. What's happening with Citi right there? The Bank of America call just ended 3 minutes ago. Apple News on CNBC. Citi expects strength in fee income, is not expecting further decline in interest. Increases forecast for full-year expenses. Cost tied to consent order coming in as expected. Citi accelerating investments in card marketing. They just got clapped. Again, Citi was a leader. Dude, Citi was up the most today. Look at that. Bro, that's ugly for the banks right there. Yeah, that's surprising. I think it's starting there with Citi. Well, that's unfortunate. Yeah, they all just took a dive right there. The conference call just ended for Bank of America, too. No, Jerome is speaking in a few hours. We're going to get him. Citi is pretty bad. They were the best so far. Again, this morning they were up like 5. I think they were up 5%. Make the credit spread cash secured, puts as an average down. I could do it. I'm like genuinely not worried on that play. Again, we have a lot more. There's a lot of wiggle room on it, and it's a cheaper. The premiums on the bank stocks are a lot cheaper. So I think there's something you could do with it, but I'm not really. So I could either turn it to that. If I can't roll over, I could just go. I could buy the stock. I could do anything with it. Mm-hmm. My girlfriend's a model. She said Wilhelmina is a good company. Tempted to snag some. It has a brand name. I know it's a brand name. I think it's just trading very. I think it's such a small float right now that it's getting the easy go treatment. Like, look at this. Like, bro, we've seen so many move in. Like, where's the other one today? MINM. What was the other one? Yeah, MINM. Like, they were up what? Like, look at this. Not one halt was involved. That's why I like it. I like it a lot. Yeah, it's gonna get halted again. Watch. It's gonna get halted on 200,000 volume off of I guess six. That's a 10% move if you think about it. SPY coming down though. You're selling off. SPY's only up 0.25%. Small caps are down 0.3. Dow is only up 0.18. Yep. Oh, I thought they halted it there. I was like, okay, easy go. Netflix holding up nicely. Yeah, they did good. Watch Citibank there. I think you got an opportunity there if you want to play the banks. Yeah, Netflix is holding up very nice. Again, rates are going up there. So I think Apple is doing good as well too. Yeah, Apple looks so even as the rates are doing that thing, I would not be surprised to see TLT coming up. It's dropping a little bit, but I think they're catching up. Come on, halt it. Show me some bullshit. If they halt it, I'm going to go full tinfoil. Crazy. Biden due on Capitol Hill for multi-trillion-dollar spending plan. Baba talks on CNBC. They did good today. Or they did bad today, but they were supposed to do a lot better. Or Baba's doing good at least. I don't know about the other ones. Just go back, look at the daily. I know I told you my strategy with it. Again, I know you were talking me out of it from the minute I made the play, but this is the benefits of the small share strategy. It's way better than playing an option. You infer the equity market leads bonds. No, I'm talking about the short-term, I guess, phenomena that we've seen here, where you've noticed it over the last few months, where when the rates are going higher, the bigger tech names do not like it, but when rates go lower, they're able to react a lot better. Big tech, at least. That's why Amazon, Apple, Microsoft, Google, all those. Almost 10 times. I'm surprised they didn't halt it right there. Avago went down again. It's going to get interesting. I think even then, I think by the time Powell speaks, I doubt Powell will see. Will they let me? I'm going to see if I can get the market. Might be able to get market analysis. Did you guys watch the watch list yesterday? Did you watch the market impact analysis? Let me see. Oh, I don't think it'll. I don't know what to call. There's not. I don't know. There's not a function for it. Yesterday's watch list was uniquely hyped. Telling you. So that the market analysis thing, that was only for the CPI, but I'm trying to see if they have one for when he speaks before Congress, but I don't think there's an event for that. Yeah, I can only do it for economic releases. So there's no way to factor in how it's going to play with this congressional speech. No, a month, that's it. Their value discounted cash flows or even price to earnings. Yeah, that's when it comes down to some of the fundamental stuff in certain companies. That's why when I look at some of the value plays more specifically, but at the same time, it's what's it called? It's in this market. It's interesting. You could weigh some of those, but just back to the point metric system of you got to weigh everything nowadays from even supply side demand, buy side demand to just literally everything. So it's part of the equation, but it's not always the part of it, and it's not always exclusive. Lulu news is hitting again. Netflix going for $255. Be concerned about the imbalance of broader market versus tech. Some people are. I mean, that's what we showed the other day. If you looked at what's it called? If you go and look at the oh wait, what got clapped? But if you looked at the market weighted, the equal weighted S&P, it's not up as much. So that just brings up some of the breadth issues, whereas it could slow some things down to a degree. Oh, you got clapped? Turn DVR off. Y'all get clapped. My bad. Powell going to print more money. Whatever Powell insinuates today is going to be so key. It will be so key, but then at the same time, like I'm saying, what we really need to watch for is how he preps the market for inflation. You know, he has to, again, and I said this on the watch list. Do you guys understand that? Where like the only real catalyst that you have in the short term is that you have to deal with Powell. He has to address, what's it called? He just has to address this inflation report. You know, you can't ignore it, more or less. It's such a big number that now he has to acknowledge, and that's where I'm coming up with my assumption that he is going to say that everything is he's going to have to say inflation is going to be heating up in the next few months. He could shrug his shoulders, he's going to do it, but you know, it's kind of how he does it. That's going to be the key. Yeah, Qualcomm had a big dip right there. He's going to be asked questions by Congress, or I think today's the House. So he'll get some questions. Again, it's usually how it's going to play out. The first couple questions will probably be related to it, but where he goes from there. However, a lot of people are what's it called? They you know, he is discussing tapering or not. Again, you had statements today. I mean, this morning you opened up with you know, no, he wasn't wrong with his estimates. And that's what I'm saying. I think he's going to come out now and he has to say, hey, this is what we were expecting. You know what I'm saying? He's going to say, this is what it was. We expected to run higher. That's why you saw the data you saw. He's not going to change anything. He's going to stand by it 1,000,000%. But now that's what I'm saying is that in that process, he is going to talk about, he has to talk about it in a way, and he's probably going to hint at, you know, to kind of ease the market and calm it. He's going to say, yeah, well, this is what we expected. It's going to heat up a little bit more, and then it's going to come back to normal. That's, you know, this is kind of his plan. It's just now, you know, people get worried, you know, when the numbers start coming in high, this is why people are going to look at Powell, because they want to see if he's even panicky, more or less. Because is he going to risk inflation running or not? It's going back to that argument a couple months ago where do you risk it or not? You know, can you get this runaway inflation? And then that's what I was saying earlier, what you got this morning, BlackRock CEO and Steve Munchkin, very, very interesting set of people to hear from. Are we going to fall for it? Yes, 100%. And there's no reason to not fall for it until they change the actual policy within the next like 3 to 5 months. That's why I'm saying there's no real actionable event from it in that sense. Pepsi. That's a killer one. Saw damage control since 2019. I agree with you. Since 2018, 2019, you had a real big slowdown in demand. There goes Palantir. Apple options alert. SPY wants to bounce back up here a little bit. They did not halt Wilhelmina. TLT is still going up. So I think Amazon. Some manipulation. Ooh. What the hell just happened? Yo, that shit just crashed on me. What kind of shit is this? Hold on, I gotta reset this up. I know, back at 8. What did it go up to? Google launches travel insights in the United States. I don't know how meaningful that is. Oh, the airlines. They came back a little. Already 750 though. So time again, you had this little move, nothing crazy at all. Actually pretty bullish for the most part coming off of yesterday. But it looks like we were just getting ready for Powell. Banks slipped. Most banks were doing good. And then there was a switch gears moment. And then they all turned red. Goldman's holding up. Citi after that bounce. McConnell says Democratic budget plan wildly out of proportion. Yeah, well, I think some of the main points about it, they introduced this bill, but they did not mention anything about the debt ceiling and then something else, which poses an issue because debt ceiling is expiring end of the month. So then you might be able to do the extraordinary measures for a little bit, but you are going to run into that issue at the end of the month with the eviction moratorium and all that. TLT, new high. I put Horn instead of Hun. Yeah, Honeywell's nice. Qualcomm switched gears. That was unfortunate. Kind of moved with the banks. Affirm going lower. TLT moving different with the market. That's part of the confusion with yesterday. I mean, if anything like the market analysis showed. Where is it? Again, here's what I went over on the watch list yesterday. This is the market impact analysis after the CPI, but you could see yesterday's. This was actually on, this was statistically a lot different. But when you start looking at some of the other ones, you've only had really 2 that ended up down, I think July. And then the rest of them all ended up either at average or on the upper bound. That's what we showed. But this is kind of the conclusion there. So really in the last year, you've only had 3 post-CPI events like this. And I think that just highlights that you had a surprise yesterday. And you could see it. It's not even because some of these, they were surprises on the actual report. But this was your result with the market. So that's where I'm saying it's kind of it puts us in an interesting scenario, and that's why you saw how the bonds were acting all weird yesterday. There's definitely going to be that back and forth, so just watch out for that. And that's why I think as we get into Powell here, I think we're going to get some more moves. But again, he could only say so much where before kind of the market's going to be like, okay, if we get negative rates. We're not going to get negative rates. I don't think so. Or if we did, you're talking 2023 maybe. If, that's just to entertain the thought. I personally don't think we'll get negative rates, but that's if entertaining it wouldn't happen instantly. UP halted again off CNBC. Shout out. Up. Oh, yes. This is a Treasury bond ETF. What the fuck is this? Is this new? That's not good. Because I want what's it tracking and how does it affect? Very interesting. SPAC merger, but what is it? Up is it says 20-year. Am I tripping? Oh, wheels up. Okay. I was like, why is it saying 20-year treasury? I was like, wait, what? I was like, they just introduced a new fucking bond leverage tool. I was like, what? No, I think that's wheels. I just think my chart's not updating with it. I was about to say, what? That's crazy. ASON. Yeah, I've heard of up. They were supposed to SPAC and go public a while. Is that Wheels Up? No. Or is it Blaze? I think it was Blaze Helicopters or something like that. Airlines coming down. Low ticker picking up. So we had that little bounce there. What time is it? 10. You got one more hour till Powell. One more hour of moves till Powell. Lamina gassing hard now. Let's see. I don't know. They're going to easy go us just with the halt. They haven't halted it, though, so I could accept that. I'll take it. So still holding those shares again, even with this small share strategy. Like I got 30% on that, so I could get some free shares out of it. I'm just going to wait. Again, that's the beauty of it. No theta or anything. And it's a really small float, so I think I'm going to swing this one. There's no options, is there? Lulu, where is Lulu? Firm kind of coming down. Remember yesterday? SPY coming down too. Low ticker picking up. NASDAQ's the leader. Dow's the only one in trouble. So you got this is balancing out. Remember, it was a lot different in the morning. You got 290 names up on the S&P. 214 are down, but that's holding up pretty good at 1/3%. The Dow is probably getting clapped by banks. Oh, no, Caterpillar. Caterpillar's the leader on the downside. It's 50-50, though, on the Dow. Not too bad. Let's see, TTD. Where's that Bank of America? Bank of America down 475. So that's the credit spread from this morning. So a complete flip-flop from what you saw yesterday. Instead of gaining premium instantly, we lost it. So I've already explained we have a rollover plan in place. I have not executed it, but this time, with premium, we are playing time. So that's what we'll do. Wellbit halted for trading pending news. WBT, they got halted pending news. Again, I think they had negative buyout stuff the other day. So they dropped off of that. Remember, somebody backed out of an offer, but they just got halted. Do you think we'll have a correction soon? I am not too concerned with it. I think it's been over 9 months since we've had a 5% correction in the market. So I think it could happen, but realistically, I mean, I see it pretty clearly coming in with China and the Fed. I think once we have a policy shift, that is going to be your big move. That's when you would have a play worthwhile, I would think. And that's why I think we know what to look for. We already cut rates in 2023. I'm saying if, somebody was asking if we'd go negative rates, unless that's why I said that. But I don't think you would get I just don't think we'd go from where we're at now to negative unless there was a complete catastrophe. So that was just to entertain the idea of negative rates. Chill. I'm answering other people's questions with it. We're having some feedback, so relax. It'll be okay. It's a good Wednesday. It's a good Wednesday. We have about 3 to 5 more months of malarkey until we get until we get policy shifts, and that's why I think it'll be good. Thoughts on Facebook? They're not doing good today, but I would assume they would. We'll see with kind of the big tech. They've been going back and forth. And the earnings run up. A couple weeks before. It depends, though. Sometimes if the market, thankfully the market has been a lot more chiller coming into this earnings season. So other times, if the premiums are too high, it makes too many moves. If you kind of miss it, I wait a little bit before earnings. So there's not too much IV. You could lead into it by 2 weeks or so, a little longer. But if there's a lot of already premium and everything else, you can just move to you could either play the day before or not play it at all. That's kind of how I approach them. The Fed is going to be in an hour. It's not the Fed. It's Jerome Powell in front of the House, and they are asking him about his. It's like a semi-annual review. Apple on the high. Oh, Apple 2.5%, and mad option activity. Microsoft unveils Windows 365. Levi Strauss option volume rises, led by July 16th, 29 calls. Interesting. So we have the June. There's an update here. Consumers could disappoint, which could be good for risks. Here's the accompanying chart with ISM Manufacturing Services and Retail Control Group. It's saying there's a reasonable chance this Friday's June retail sales print will miss to the downside, perhaps creating a Goldilocks scenario for stock and bond investors to brace. Continued Fed accommodation without upside retail pressure. Retail sales are primarily manufacturing goods-oriented data set, with more and more spending moving to the service sector and away from goods and producers as economies open. It sets up the opportunity for retail sales to disappoint. Chart above shows both a drop for manufacturing and service PMIs for June, which would suggest little upside for June retail sales. The lack of service components in the retail sales data also suggests very little chance of the service sector to soften the blow off the top for the manufactured good. Once again, it's not all bad news. Growing U.S. economy at more moderate pace will keep the Fed's hands in their pocket. That's good news for both equity and bond news, at least for now. Ollie Group to buy Webull for $24 a share, all cash deal. So they're getting bought out at 20. Damn. They were trying to negotiate way higher than that, I think. So they just got bought out at 24. That's why I got halted. Apple 4 upgrades today to the moon. Tesla's popping. Tesla's getting a lot of steam right there, actually. Here, though, yeah, we saw though that there's mad activity on those Apple. That's what I was saying. There's a lot of calls on there. Tesla's popping. I don't know if there's any news on that. Nothing. Nothing that I'm seeing on that. Facebook offers Facebook Pay to Business as payment option. Facebook's popping a little bit off of that. I don't know how good that will be. That one's coming in early. Facebook offers Facebook Pay to Business as payment option. You got a little bit of a move, but SPY's kind of bringing things down here. Average down Bank of America. If I would wait till the end of the week, give it some time here. Again, it's a defined trade. So if it's already going against you, it's going against you. And then you have till the time. If it does bounce, we could take advantage. Otherwise, we roll over or return it. Facebook to start rollout of Facebook Pay with Shopify merchants. So there you go. You got volume coming in there on Facebook, and it's related to Shopify. See, there you go. It's coming in a little bit. It's not really moving it. WBT to be acquired, yeah. It's only like a 80-cent premium from where it is, but WBT got halted. Low ticker, very active, yeah, compared to the high. And now TLT's on the high. Where does that put you relative to yesterday? So you're getting, I don't know, we might reach the bond auction level by the time Powell comes on. We'll see. City selling off further. So banks are probably getting clapped now even more. Yeah, all the banks are getting clapped now. That's like a 5% reversal top to bottom on some of them, or even more. I think City is that's at least a 5-6% move round trip. Bank earnings were good. It was a mixed bag with it. Then people kind of bottom up. Again, you saw yesterday, but at least, these were kind of more of the weaker banks compared to Goldman Sachs and JP. Ba-da-ba-ba-ba. I'm in killed so much this last 2 weeks. What was there? There's the minutes. Then you got the Fed. More Fed. Hasn't been much. I mean, it's just been a lot of back and forth. Last week was pretty crazy, just with what the bonds were doing and all of the data, and then CPI yesterday. Oracle's still up too. Apple's still ripping. Yeah, Oracle's holding it. Dude, Oracle is crazy. Honeywell, I think the chip makers came down. Yeah, Intel is selling off now. Where's Boeing? Oh, airlines, bye-bye. Yeah, UAL was up 8%. Ay, Habibi, le queda. He's crazy. Got an egg McMuffin with tomato and mayo. That sounds nasty, but I'll try it. If you say it was good. That's crazy. Dude, a egg McMuffin. I don't know, man. That sounds worse than the bank stocks flipping. But you got to try it. Don't knock it till you try it. Some of you are like, oh no, that sounds pretty good. You like, oh no, a little bit of egg McMuffin and some mayo. That sound. It's called the egg McMayo. That's really good. Can I get an egg McMayo with tomato? It's an egg McMayo tomato. Wow, transportation stock. Again, they had earnings. So earnings is transportation in banks. It was a positive result, but then now it's kind of flipping here as the market is doing its thing. I'm sure by European close though too, we're approaching it. We might get a little bit of gas out of that. It's an egg McMateto. Like the video. I'm glitching out now. That's it. Egg McMuffin. Is it McDonald's? I like McDonald's. I don't, I hate to, I like the gym. I like being healthy. You guys should drink a lot of water. You should exercise. You know what I'm saying? But like, McDonald's slaps. I don't know why. I think it's just kind of how we grew up. Maybe it's still stuck in me. I will, like, I know some people who balk at McDonald's. They would never even like eat it. But oh man, I will eat that shit with no shame. Like with no shame. And I love it. I'll enjoy it. There's something about it. Like a McChicken, dude, for $1. Like, y'all don't feel me. Speaking of y'all don't feel me, I got a good philo today. Hopefully Powell doesn't take too long. We went to McDonald's for special occasion. We went to Burger King. That's it. My mom used to, she would get 2 Whoppers, and then she would cut it, and we'd all split like a quarter of it, because we were just one of those families, just popping out like a damn minivan with like 18 kids. That was us. So we would just, that's why we had to split the Whopper. So next time you see a family pop out of a minivan with 18 kids and they're all like loud and screaming, just don't judge, because that was us. I haven't been to McDonald's in 10 years. Hey, you could break a record today. don't go to McDonald's. So that this conversation was not to and I don't even have the what's it called? I didn't even play the earnings yet. So we don't have any earnings nor shares. So they did do good on the run up. There is a lot of expectations coming into it though. For their earnings, it's actually I think it's going to be pretty decent. TLT. Yeah, low ticker is fully gassing right now. So now it's flipping. Now you got more stocks are down on the S&P than up. That's a flip-flop. Dow is about to go red right now. That's flipping a little bit, but not by much. Surprisingly, the banks aren't weighing as heavy as I would have thought on the Dow. So SPY hitting a new low. God bless Chadadonia. Baidu on the low. So that got rid of their 3-day rally. BA crushing dreams. Again, BA's essentially, that's why I think a lot of people didn't get it yesterday. BA's guidance essentially changed yesterday with that news. The Qual Worlds came down. TTD's up. Bank of America down 375. It's again a little better, but still worse. And get ready for power. Where's our hype stock for the day? They didn't halt it in an hour, I think, so that's very good. I'm surprised this is it. I think this is and it does not ever trade volume. So that's why I was asking you guys in the beginning because none of y'all answered me too, man. I was very sad. It's like, man, I gotta look. I was like, I thought you guys would have the plug. I thought you guys were gonna be the plug on that one. I thought someone was gonna be like, oh yeah, Josh, it's talked about on Reddit, Stock Twits, Twitter Twits, Twitter. I was like, I thought, did y'all forget to like the video? I love you. Are you ready? How you feel? Everybody loose? You feeling loose? Get ready for Powell. You know what I'm saying? You answer IPO. I know. I already figured it out then. That's why I was like, man, it's good. But thank you. Thank you. DVR is on. Make sure. I turned off DVR. You guys were getting a little stressed out. Lucy Goosey. You know all the answers? Oh, no. Not even close. But I'm willing to try. I like exploration. We like information. We like hype. We like Monday through Friday, 30 minutes before open. Oh, yeah. Big Monday. You know, a lot of people don't like Monday through Friday. I learned that. I said, that's crazy. I don't like Friday through Sunday. But I do. I enjoy the weekends. Hopefully you do too. Powell is an uneducated fool. Okay, that's how you feel. Some people will agree with you, some people won't. I mean, that's Powell. I think he's educated on paper. He saved us in 2020. Oh, he said educated fool? Oh. Do you think the Fed will stop printing once we reach critical levels of the population? No, I don't think they will. I think Powell has a plan, and I think they're gonna push it as long as they can. But I don't even think they're pushing it as much as they are controlling it. Oh, Josh Owen the peach. I'll take it. Horn. Wow. We still love Bradley Frizzle and the peach. Amen. My dad is another very educated fool. Lost all his savings. Hey, man, people make mistakes. But, that's why. Just get a long term. Be wise. That's all. I mean, show some love. DJ, run that back. So Spy's slowing down. How do you feel? How do you feel about the change? It's a kind of a change of pace compared. This is how yesterday was. That's why I say yesterday was pretty slow. Fortiani, Mr. Fortiani in the P. Listen. Y'all stop trying to impede on Mr. Frizzle's peach. He has sovereign territory over the peach. But we love you too, Brandon. Hard. Let's go. I'm gonna get too hyped. Do you want the hype now? I could save it. I'm trying to pace myself. I could give you the hype now. I'm trying to pace myself. Listen. The peaches have unlocked it. I'm just trying to tell you, you're a beast. Okay? That's what I came here to tell you. If you're gonna put me on your speaker, as we got some plays, we're waiting for Powell. You are listening. Let me just tell you that you have opportunity, and things are gonna be a lot better than you expect. Okay? And you're here for a reason. That's all. That's all I came to say to you. That's it, okay? I'm going to tone it down now again. I'm going to go back to terminal mode. I'm going to go back to reading the headlines so we make sure we get you the fastest news in the world. But I hope you know you're blessed, okay? And I see, ooh, do you feel it, right? You feel it, right? You feel good. I think that's why I needed to tell it to you right now, because a lot of people don't tell it to you, and you haven't heard this enough, okay? That's why I have to let you know now at 8:16 a.m., okay? So just welcome. And you get a Powell Day. It's beautiful. There you go. Now relax. Chest to the sun. Yeah, it hits different when you hear it, right? I feel you. Amen. Amen, baby. Amen. Spy is chilling out right here. I got another peach and a weight. Horn! On it. When we talk about information, Joshua, you're a very educated man, but let me get some positivity out of you. We've talked about a lot of information all day today. That was just a good 60 seconds to let the people know that they're blessed. And they're always going to be blessed. And it don't matter with positivity nor negativity. The attitude determines a lot. So that's it. We will talk about information. Amen. Don't you dare talk about Powell like that. See, that's I like that comment. But at the same time, Powell right now is, I've gotten mad at Powell before, so I feel it. Everybody has their opinion with it. And Babinski has a peach. Lord. Oh, man. Y'all really want to get hyped at 8 a.m.? Y'all really want to do it at 8 a.m.? We could do it. Just wait till Powell come here. I can't wait for Powell. Dago. There you go, Dago. Come on. All right, listen, man. Can y'all just growl? That's it. That's all y'all need to just get ready. All the peaches. Yeah, just make them growl. That's it. So don't even send a peach without growling. There you go. Yeah, how do you feel now after that growl? Come on. I know you're rolling your eyes right now. I see you. Rolling your eyes. You're like, why would I growl? Just go growl and tell me how you feel. Oh, look at all that. Is this Peach Day? What's happening? Horn! Let's go. Wilhelmina running. Are they going to halt it? Is that at 9? Oh, hell yeah. Oh, 5. Let's go, juice trades. He gonna make juice out of the does that sound weird? Horn. Oh, growling by real estate. Hard. Look at that. Look at that. How are you not hyped right now? Well, welcome to the stock market. Welcome to Powell Day. Oh, Cole. Look, okay, and y'all can't even get mad at this hype because the market ain't do shit for 5 minutes. Okay? And we have Powell, and we got our meme stock hitting today. So, Dord! Let's go. God bless all of you, baby. God bless all the peaches. So, listen, don't let the hype get in the way of it, man. You are blessed, okay? I need y'all to smile today. That's it. I need y'all to smile today, okay? Just smile. Get in the mood. Get excited. That's it. Just excitement is great. Look at that. Look at that. Look at what just came. Look at how little excited. Look at now you got peaches. Don't stop though. No donations. That's it. You got Cole Real Estate paying me money. We paying a fee on it, man. It's fine. That's it. Y'all got the hype free 99. Y'all don't need nothing. It's fine. You see, it's internal. Oh, hard. It's Wednesday. I'm blowing up your eardrums. You got to get woken up. It's 8 a.m. Let's go. Whew. Armor on. Tell them. Tell them. There you go. How do you feel now? There you go. That was a 5-minute refresher. Just get you back in the game. And now look at that. Market's back. Look at now. High ticker balancing out. Dow recovered a little bit. NASDAQ only up 0.33%, matched up with the S&P. Small caps are getting clapped. Those are the losers here today. And then bank stocks and travel, we're waiting on those recoveries. If they are, United Airlines, that's an 8% shift. Let's see the other banks. I'm surprised Wilhelmina is still going. That got me hyped. Whew. Feel good. Feels good. Oh, the peaches out of Georgia, that's that frizz. I get my peaches out in Georgia, that's that frizz. I get my peaches out from Boomer, that's that shit. Stop. I don't want to stop. Just relax. See, that's it. Well, object in motion. So y'all better smile today. Okay? Let's see. I know you guys will like an update here. Let's see what we got. You know what you need right now? A great transition. You want a great transition? What's the best way to transition? Do y'all know? I got a great one. I got a great way to transition. It's very simple. Everybody likes a pretty chart. Right? There's actually no good pretty charts right now. These pretty charts suck. That's it. This is the only good pretty chart I got for you today. Oh, wait, I got to read it to you first. But trying to break free. Powell's testimony may lead the dollar to new highs. Federal Reserve Jay Powell testimony to Congress later on Wednesday could provide the impetus to the greenback needs to reach fresh highs. Bloomberg Dollar Spot Index has pushed to 11147 handle since mid-June, with investors looking for the Federal Reserve to announce a tapering of its bond purchases before adding longs. But after data showed U.S. CPI surged by June for the most since 2008, Powell may sound hawkish enough to drive another run higher in the currency. So there you go. Get a pretty chart. So here's the dollar chart. They got the moving averages and then where we're at. But this is that key level that we have not been able to break for a while. And it's kind of, anything hawkish of that nature that may lead us to another move there. Do you have anything that shows retail versus institutional? There is. I just have to find it. You have to just know what to search for it. Oh, you couldn't see that? Fuck. How you gonna make me do that, man? Please hold. I just closed it out too. I got you a pretty chart and then I closed it. I get my peaches out in Georgia. That's that frizz. So here it is. So again, this is just from the beginning of the year till now. We've seen a couple of big dollar moves, more or less, but this is that range here since pretty much last month, June, and the dollar should be trading the moving averages a lot lower. So we're at this high right here now. People are looking for a hawkish tone to send us up again, and it's what I was saying. He has to come off a little bit hawkish no matter what. USEG, U.S. Energy Corp, up 40%, got halted. It's up right now. Powell, 12 p.m. Pacific, Eastern time. So in about 30 minutes, we get Powell. Jay Powell says the government by cutting rate till they stop bubbling. And then what runs up rates? Demand, right? Or lack thereof. As people feel a certain way, right? That's what's happening every day. That's why there's a yesterday's event, like I showed you. You could look at the market analysis. The immediate reaction was statistically only happened 3 times this year, which is very important because we've only had this year to look at it. So the idea with it is that he's coming in and everybody is going back and forth as new news and data comes out. They're positioning relative to the news. Low ticker's picking up. SPY flipped gears right there. You're coming right down. Wilhelmina halted on the way down. Oh, they could do that. Okay. Yeah, SPY's picking up a little bit more aggressive here now. You got 30 minutes till Powell. I think bonds are probably going to come up here, so I think you're going to get a little back and forth between TLT and the bonds right now. Dang, Troy Grassley says cannabis bill puts the cart before the horse. Damn. Well, they are because they have there's one big sticking point in the marijuana bill, and it has to do with the drug tests. I forgot the actual mention of how it applies, but I think they're trying to, that's part of the whole issue with weed. If you think about it, yes, there's the financing and the banking, but there's like a lot of drug testing regulations. If you think about it, like think about all the jobs, think about even the Olympics, shit like that. Amazon's even coming down here. Where's Apple? Bowen selling off. SPY's coming down here. Another low. It's kind of picking up here. Look at the low ticker. You got a little bit of relief there as we were getting hyped, but nope. Rail plan unveiled by Northeast Corridor Commission. That's not related to any stock. Unless it's this one. No. Yeah, SPY coming down now. It's picking up even more. At least some of the bank stocks have chilled out here. Amazon got a little fresh low. Facebook selling off. Yeah, airline shift is crazy. You said Michael Phelps never care about none of that shit. You see how many gold medals he got? Exactly. Psh, haters. You know what I'm saying? Haters. The clapping continues. Wake up today thankful and blessed. Amen. Amen. Low ticker is getting very, very active right now. So again, it's all you had was the bonds got to recover, but you're bringing us right back to where it closed. Again, you had a big gap up, but I mean, it does correlate very, very in line here with the airlines and bank stocks if you look at it. So the market is, again, that was a lot of the underlying names that were up today that weren't big tech. It was banks and travel, and they were up in there, and then they flipped. Yeah, Jay Powell's statement already came out. So the market's not going to react to the initial statement. Those reds getting bigger. It's not going to react to the initial statement, but then they will react to the what's it called? To the questions. There's a 3.5 trillion spending bill close to being put in effect. The market is going negative. I think the market is turning. What do I think, Rudy? I don't. I think it's going to be a long way before they get it passed. I may have misinterpreted it. There was I think that they might be able to do budget reconciliation and may not need Republican support. If that's the case, then it could have an effect and tie that into the CPI and everything else yesterday. Otherwise, it's a big bill, so I think it's going to have a little bit of a. I think it's going to get a little bit more pushback, more or less, because because the bill is very, it's very immature in the sense that it doesn't even touch on the debts. I forgot the other one. It doesn't touch on the debt ceiling and something else. Let me find it. There's something specific about it. Let me see. Yeah, they want to send both to the floor this month, but the follow-up vote comes in fall. Powell talks in about 30 minutes, 30 or 45 minutes. It starts in 30 minutes, but by the time you get the questions, it'll probably be 15 minutes after. Let's see. Where is it? There's something else in the bill, but I know it doesn't cover the debt ceiling, which is ironic because you're about to spend that much money, and then in 2 weeks you're about to hit. You have to vote on the debt ceiling and get that situated. Mm-mm. Mm. Mm-mm. Oh shit. Oh damn. No, they might be able to pass it. Yeah, they're just gonna delay it till fall, but they might be able to pass it. This is for the 3.5 trillion budget. So the budget blueprint expected to be dominated by spending, tax increases, and programs that Republicans oppose would pave the way for Democrats' only bill that leaders plan to push through Congress using a process known as reconciliation, which shields it from a filibuster. To push the package in the reconciliation bill that follows through the evenly divided Senate, Democrats will have to hold together every member of their party and the independents aligned with them over what promises to be unified against the Republican opposition. It was not clear if all 50 lawmakers in the caucus, which includes centrists unafraid to break with their party like Joe Manchin and Kristen Sinema of Arizona, had signed off on the blueprint. The package is considerably smaller than the $6 trillion some progressives had. That's damn. They went from $6 trillion to 3, and we're like, okay, it's a good deal. That's it. I would rather give 3 than 6, but damn. Mm-mm. This is an interesting article. This is an interesting statement. It's saying Jerome Powell's market conundrum makes Alan Greenspan back in 2005 look quaint by comparison. That was when Fed Chairman Greenspan was grappling with surprisingly low long-term bond yields despite his interest rate hikes and despite concerns that government taxes might fuel inflation. Even so, borrowing costs edged lower much during Greenspan's chair. Interesting. I think we're lagging behind the banks and travel stocks here, or they kind of led the way. We'll see though as Powell talks. Just did my 10. Hey, man, did you get a bond auction? You got a short-term bond auction today? Let me get this up. Does Biden discuss bills with the Fed? No, that's not. That's where they say separate. Quotation marks. But, ladies and gentlemen, we're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hide chat. S out the chat. Hit the thumbs up button. Second link for the Nightly Watson main channel. First link for the Scream Alerts Bootcamp and Real Estate course. Follow me on Instagram at the Trading Fraternity. Keep it positive and respectful. New guys, don't be too shy to say hi or too high to say shy. We're glad you're here. But, my friend, you've been here for 2.5 hours. You got 4.5 hours left to go. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. Can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 2, you do 1. Can't do 1, get on her knees, do a push-up, plank the worm, anything, but get the body moving. Then, optometrist recommendation, stare at an object 10, 20, 30 feet away. Blink a few times, relax those pretty little eyeballs. Blink, 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 blink. Oh, I farted. Blink, 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 blink. Oh, yes. Feels great. Needed that. Wow. Next, I need you to drop your shoulders. Okay? Drop your shoulders. Fix that nerd neck, chest to the sun. Tuck your hips in. Flex the core. Boom, baby. Legs in front of you. Legs in front of you. Uh-huh. There you go. How you feel? Let's go. Come on. Do some lat pull downs. Arms up in the air. 90 degrees. By your side. Lift them up. And now pull your elbows down to your side. But relax your shoulders when you do it. Just use your back. There you go. And sit up straight. And drop your shoulders. But instead of dropping your shoulders by dropping your shoulders, use your back muscles to pull your back down. Pull your shoulders down with your back muscles. Oh, yeah. Activate the back, baby. Beautiful. You look amazing. Yeah, you look good. You wanted me to tell you you look good, huh? You look good right now. You look tall. I don't know how you did. You look real good right now. I don't know, with that physical posture, whatever you doing, man, it look better than the earnings we got so much, man. It's crazy. Tell me you ride a dolphin without telling me you ride a dolphin. Amen. 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 Yeah, back muscles underrated, bro. They don't feel. I'm telling you, I feel. I underrated them myself. Spy's making another low. Relax your jaw. Breathe in really deep. Breathe out with your tongue out. Do the dragon breath. Go. Clapping. SPY ticker's coming down. It's getting clapped as we clap. It's crazy. But I need to go to the bathroom. So hold tight here. Jerome Powell is on the way. We are going to be getting him in about 20 minutes or so. Woo. Look at the market. Talk to me, Chad. Talk to me. I can't see you, but talk to me. Talk to me, baby. You a pretty little Chad, baby. Ooh. Talk to me, baby. You a pretty little Chad, baby. Ooh. That's a good one. I like it. Oh, damn. I just pissed on the floor. Damn, the first burst missed. I wasn't looking. That's my fault. You a pretty little Missy, baby. Talk to me, Chad. Ooh. It's a long pee, bro. I really had to pee. Yeah, I'm still peeing. Okay, we're good. Flush the toilet. Good. Good. SPY still going down. Oscar with the peach. It's great to come back to. It's great. We love it. We love it. No halt on Wilhelmina for the way down. That's fine. I'll take it. Is it back to 6? Damn, we're just at 9. That's crazy. Fire Eye on the low. No, just low ticker is getting real active. A lot of stuff just looks like it's even just selling off. Pair oil. Yes, but oil's been high. Yeah, oil. It's there's a lot of things have the same pattern, but even right now, oil just took that final dip. But it's hard to say if oil was just catching up to everything. And SPY is now red. Every index is red. Holy shit, that was a flip. That was a flip. We need Jerome Brady already. Yeah, Amazon's starting to sell. I think once Apple goes, we're clapped. Yeah, Apple's up 2 something. If that flips, a lot of things are getting some weakness there. Now we watch Powell. Powell might reverse some of it. He'll keep it steady. Might be even a negative, depending on what he says, might be a negative reaction. And then by Friday, I don't think you'll get it. I don't think you'll get it again. Just don't forget you have earnings. And then you have a lot of big earnings on Monday or Monday, Tuesday. Beware of Treasury sell-off. There it is. Powell didn't break new ground in his prepared testimony to Congress, so the knee-jerk Treasury rally is likely to reverse in the next few days if history is any guide. Investors who believed in Powell's inner dove have been rewarded today. Treasuries and stocks rallied while the dollar fell after Powell reiterated that tapering is still some way off. But that's not a new message. He used the same phrase, substantial further progress is a ways away from the FOMC last month. Over the past 3 years, whenever Powell has gone to Hill, Treasuries have tended to reverse the previous day's move on the second day of his testimony. On average, the stock market and commodities tended to hold their gains, and the dollar did better on the second day. So we got our chart, baby. Isn't it funny? We were looking for this. But an analyst just did this analysis today. This just came up. So here it is. Here's the day of the testimony, where the 10-year, the average move was, how it moved the next day, the dollar, and then the SPX2. So coming in, when's the last time we had Congress? SPY was up 1% the next day. The Dow Jones all moved. So pretty much there's only been 2018, 1, 2, 3 out of 1, 2, 3, 4, 5, 6, 7. So little under 50%. That I don't think you only get so much. Commodities seem to do good the next day after Powell. The Dow has only had one down day after Powell. And then the bonds, though, it looks like the bonds are the ones that make the biggest move here. So we're probably going to get some bond market action after tomorrow, but that gives you some insight here to the market. And again, though, given that you had a non-average CPI report, maybe that could affect things. Only one duende. Jerome Powell live in 15 minutes. Get ready. Y'all got up late. At least you woke up. You got some good sleep. You didn't have to deal with the baby mama drama today. It's not too much, though. Could be worse. Your website said I'm 25. Is that true? How do you go from long live Biden to asking me my age? Is that how you start every conversation? I'm just curious. I'll answer the question, but I'm just curious. Because that's not, I don't know. I just don't know how we got there. Didn't sleep well, but I'm on vacay in Philly. Enjoy it, baby. Enjoy it. Enjoy the vacay. It's good. I just like to troll the Trumpanzees. Well, that's not nice. I want to be a troll. So I'm 13. The WBT, they got a buyout, so it's not going to go past what's it called? It's not going to go past $24. Opportunities to buy a firm puts. Did it drop again? Did they actually go up, though? Sleep is not the answer to this one. I don't know, man. I think sleep is an answer to a lot of problems. I don't know. Maybe that's just the 13-year-old in me. But I don't know. I feel like sleeping is... I feel like if some people shouldn't sleep as much, but then if they slept a little longer, it would change the world. I hope this one hurts many Democrats. I sleep well. Hey, man, just like I said to the other guy, just be nice. You know what I'm saying? We love everybody. Either way. But that's just bad vibes. Now, you know what I have to do? I have to hype you up with good vibes. Orn! You're beautiful. All of you. Republican, Democrat, Nonocrat, Nonapin. It don't matter what you are. You're in the game. Oh, you're alive. Oh, you get to breathe the same air, got the same blood. Oh, just enjoy it. Enjoy it. Love thy neighbor, please. Love thy neighbor. That's it. We could do that easy. Not really easy. It's actually quite radical of a concept. But still. Mm-mm-mm. Yeah, humans ruin everything, bro. Humans ruin everything. That's it. That's all. That's why. That's why some stuff you got to keep private. Some stuff you got to hold it to yourself. Believe what you believe. Love what you love. But that's it. Humans, when you other humans, they usually hurt things. So that's, you know what I'm saying. So be a good human. Be a good human. Beyond 100%. Oh, did those? I forgot about that. I don't know. It's 2 days left. There's no way those went up. Oh, only down 30 on that? Wait, I'm only down 7% on that play? That's the July, right? Yeah, wow. Oh, wow, I'm up 7 on that. That was the one we got squashed on this week. What play was that? 115? Yeah, 129. Ooh. What day was your long term the YouTube created? I believe October 19th. October 19th or October 14th. I don't have it open right now. Mm-mm-mm. No love for communists. Well, I'm not really a fan of communism, but I love everybody, man. So T-Lo, show some love, bro. Otherwise, keep the comments to yourself. Could go a long way. Even if you choose not to keep the comments to yourself, it's just not a good look. Hatred is not a good look in that sense. So we love y'all. I just want people to smile. We have another 6 more months left. That's it. We just want people to smile. We want people to get a long term, bro. That's all we want. That's all we want. That's all we want. We want people to get a long term. That's it. That's it. That's all I'm looking for. A long term. Maybe a smile. A smile in a long term. That's it. Mm-mm-mm. Protecting my nation is not hatred. Fuck commies. Okay, I'm like operating very peaceful right now. I just don't think you're understanding what I'm saying. Again, I'm not really a fan of communism itself, but it's just just I don't know how to. Chad, can I? How do I communicate this one with just show love? It's just love. That's all. Just like Mm-mm-mm. Yeah, well, you can't. That's what I quickly realized. I guess some people, hey man, if you don't want to listen to the love and positivity, that's unfortunate. You know what I'm saying? That's all. But it's clear. Some of y'all don't want your minds changed. There's no harm in that. There might be harm, but still, you do your thing. I just encourage you to be nice. I just encourage you to smile. That's it. Can you smile today? Regardless, just smile. Just smile. That's all I want. Just smile. Just smile. I don't care whether you like them or not, whether you this or just smile. Don't let anything not make you smile. Y'all don't feel me. Y'all don't feel me. No, they don't feel. You know what I'm saying? That's it. I don't care what it's not that deep. Just smile. Don't let anybody take your peace from you, my friend. Amen. Amen. Right, Moo? You know, Moo got made fun of his whole life. You know what I'm saying? Moo got made fun of his whole life. He still smile. He spent $500 on a shirt, and he wouldn't even tell me how much he paid when I asked him. And that's the whole point of buying a $500 shirt. You know what I'm saying? And he still smile. You should have saw him yesterday. Apple announced pay as you go. He smiled really big. He smiled really big. Some of y'all got mad. Some of y'all were like, it's a bad sign. But nah. He's like, oh my gosh, this is great. It's great. He was like, wow, I can't believe it. He said, I knew the cards would fall in my favor. You know what I'm saying? It's beautiful. It's beautiful. Two things make me happy. My daughter's smile and the long term. Hey, man. Hey. God bless you, bro. God bless you. Y'all providing long terms for the future. That's what we need. I hope I don't get my Off-White shirt repoed. That'd be crazy. Imagine that. That'd be a new reality show. Instead of like Dog the Bounty Hunter, it's just like people getting their pay-as-you-go shit repoed. So you're like, bro, they took the leash right off of my dog. I was just walking in the park and they say, yeah, that's not your leash no more. That's it. Mumu's out in the club. And then two just big bouncers just take his shirt off. And they're like, that's mine now. You ain't pay your $4.99. Son. That'd be a hit. That show would be a hit. Bro, they took my PS5. I was middle of a match. Doge the Dior Hunter. Yo, that's great. Doge the Dior Hunter. There it is. Oh, bro, we got something on our hands. My next play is wait for Powell here, and then either mess with the bonds, do something with that beyond put that we have, and I think that's it. The other, again, either bank stocks, maybe something with travel, but I'm gonna wait till Powell, and then bonds again. So it's pretty. We're waiting on Powell again. This is a pretty slow move. We just had a pretty big flip flop, but it could be a lot worse. And again, like I just showed statistically, with some of these moves here, we get interesting plays after the Fed. Wells Fargo popping. Good call. Five. Wells sees reserve releases if current trend continues. Comments on earnings call. So it's the reserve releases. That's why they're popping. Because again, they haven't been able to. They've been constrained heavily from the Fed since 2018. So that piece of news right there is allowing them to, if they are able to release those reserves, that could change a lot of the just overall what's going on with their company. That's not good. No, it's very good in the sense that that was one of the negative analyst comments towards Wells Fargo is those reserves, because it's pretty much they have a lot of cash, but since they got clipped with regulation before 2020. And they've been struggling, again, remember all those bad things all those bad things Wells Fargo was doing. So they were able to what's it called? It's going to allow them to use their money. And then it could allow the Wells Fargo may be able to repurchase more than $18 billion in the capital plan. So stock buybacks, everything else. China losing reserves shouldn't banks. No, that's banks, right? So the bank reserve requirement is us. That's domestic. That's internally. But the comparing the tightening and loosening of policy in China is comparing central banks' benchmark rate and then other, financial functions dictated giving the money to banks, right? So the government starts with the Fed, then it goes to the banks. Same thing with China. Starts with the government policy, then goes to their banks. Well, how they regulate their banks is domestic. So same thing with us. Ours is domestic, and it's handled in and of that self. So this is just for the bank itself. The timeline, I'm not too sure on that one. Let's see. That's just the headline. He's on the conference call now. I could pull up some of the conference call if you like. Hold on. He's getting into or loan originations. All he says is we plan to return a significant amount of capital to shareholders starting in the third quarter. That's like the only direct quote. Dip that keeps on dipping. Chuck Schumer already came on a little bit, but I don't know when he is going to be, what's it called? I don't know when he's going to be actually presenting that vote. Square buys Crew to strengthen workforce management offerings. A little bit of a pop there. Square acquires Crew to strengthen. They buy Crew. What's Crew? Is it a company or is it just a crew? Yeah, they've acquired a company, Crew Platform. I thought they got a crew. But it's called, it's a management company. They buy Crew, no terms. 3 crew, 1 crew. You are 1 crew or enemy of 1 crew. Square says acquisition adds workplace managing platform that will strengthen, complement, and scale its existing labor management. So kind of good, but I don't think it'll be too material. SPY bouncing again. I think banks are kind of lifting up there. Damn, JP Morgan's lower than where it was yesterday. Yeah, Wells Fargo's going again, up about almost 1%. Are you watching the Fed speech? We will. We will have it up here. Live and direct from the House of the Speaker. Well, not the Speak, but you get it. Please wait. It's loading up. So Maxine Waters is kicking it off. Why is it not loading for me? Yeah, he's about. Well, he's gonna have his prepared statements there. It's not loading for me. But we have updates with it. So, sadly, I don't have to work as hard for you guys today. That's sad for me. They do what I didn't know they do this. So for the Powell, they do what I do for you guys when I pull up the Google Docs. You see this? So as Powell is speaking, we will be able to get all of the we'll get analyst comments and Fed reporters while we're doing it all. Oh, you can't see? Look at this. So I don't know why the video's not working. I got to load it up, but so you know how I pull up a Google Doc? That's what you're getting right here. So you're going to get all the Fed reporter and comments and updates as it's important with analysis. It's not working though. I think it's because they're gonna turn it on right when he comes on, essentially. Because I think Maxine Waters is talking, so we just don't have to watch the other shit.
signed into law the American Rescue Plan. The American Rescue Plan, more than 58% of adults in the United States have been fully vaccinated than it does for white workers. To be clear, we will not have a full recovery without closing this gap. While inflation has risen in recent months, Chair Powell, you and other experts have attributed this to short-term factors.
And baby girl
Consumer
Maxine.
demand is way up, with people once again dining out, buying cars, and purchasing homes.
So
But
again,
supply chains haven't.
all of this is going to be what's it called? All of this is prepared statements. So we could keep it on if you want. I know some of you want to watch it, but right now we will have it live when Powell comes on. But for now, this is going to be all prepared. So everything that is said by Maxine, everything said by Jerome Powell, it has already been put in writing. This is kind of like the intro. So, but yeah, tell me if you hear it.
Home prices through smart investments or face higher interest rates from the Fed. The COVID-19 pandemic disrupted life for all of us and shifted the way we think about the economy. We see this in the huge number of women and people of color who left the workplace. We see this in a generation of young people weighed down by student loan debt. And we see this in the surprising percentage of workers who have quit their jobs, even as the unemployment rate.
I just sold 7 of those Beyond puts because those were a dud at the beginning of the week. They just came positive. So I sold 7 out of 10, made them kind of free, lowered the position. But yeah.
Income gaps, address climate change, and our child care crisis. And finally, end homelessness. The Fed must also play a central role in this economic transformation. The Fed must ensure that our economy recovers equitably, reverse deregulatory actions that roll back rules for Wall Street, and shore up protection so that our financial system is less vulnerable to shocks. Whether by partnering with the Treasury to implement a framework focused on climate change and financial stability, exploring a central bank digital currency, and implementing faster payments, or strengthening its outdated approach to bank mergers, the Fed must fulfill its role in ensuring a strong and inclusive recovery. Chair Powell, I look forward to your testimony this afternoon, and I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 4 minutes.
Well, thank you, Madam Chair. Chairman Powell, welcome back, albeit virtually. There's a great deal of uncertainty right now.
Oh, get hyped. Look at the bow tie.
You have earned and deserve
Look at this shit.
Another term as chair of the Federal Reserve.
Yo, my God.
You have proven to be a steady hand throughout this pandemic.
Y'all see this shit?
Our ongoing recovery. And you defended the independence of the Fed.
Drip on him, baby.
Thank you for your service. Thank you
for
your leadership.
Thank you.
Now, we're going to spend the next 3 hours telling you everything you've done wrong, but you do deserve another term. In all seriousness, though, the Federal Reserve needs to be laser focused on our economic recovery. Instead, I'm seeing more headlines about the Fed's actions to address issues like climate change, while a noble cause, but this should be something originating in Congress, not in the central bank. As far as our economic rebound, we're facing some very serious challenges. Put simply, America has a jobs problem. Not long ago, there weren't enough jobs, but that's not the case this time. There are more than 9 million jobs waiting to be filled. Employers across the country are competing for labor, offering signing bonuses, back to work incentives, and higher wages. The National Federation of Independent Businesses released a survey yesterday reporting that 63% of small businesses have already increased wages to attract workers. We should be seeing a boom and return to work, but we're not. Throughout the spring, job numbers continue to fall short of expectations. Yes, the June report showed 850,000 jobs were added, but this misses the larger picture. The labor force participation rate remained unchanged at 61.6%. The number of long-term unemployed Americans have increased by 233,000, and companies continue to struggle to hire enough workers to meet their business needs. We need a plan to get people back to work, not just in the short term, but in the long term. That's what we should be focused on. I wish my Democrat colleagues felt the same way. Instead, they want to continue the spending binge that they're all about, on a laundry list of progressive ideas that have no hope of bipartisan support and have nothing to do with getting Americans back to work. The $2 trillion COVID package that was passed in March wasn't enough spending for them. So now we're hearing that Senate Democrats want as much as $3.5 trillion in new spending and increased taxes on businesses of all sizes. And on top of that, another trillion for hard infrastructure. None of this is sustainable. This spend first and ask questions later approach to fixing our economy will not work. Our economy simply cannot handle this level of spending. Long term, it will lead to sluggish growth, persistent unemployment, and a declining standard of living. Simply put, the Democrats are addicted to spending. Taxpayers, families, and business owners will bear the consequences. We should instead focus on creating the kind of real economic growth that is proven to be enduring and stable.
Mods, no banning or timing out. It's political. We must give the people freedom here. Day 3. Let's see how it goes.
To have a recovery that works for all Americans, we need to get Americans back to work. Madam Chair, thank you for holding this hearing. I would like to welcome our newest Republican member of the committee, a gentleman who is not new to Congress, but is a returning member of Congress and has been on leave when he left the House Banking Committee. He's been on leave with the Rules Committee, and under our rules, he's gets to come back to his home base that he left years ago. And so we're grateful to have Pete Sessions back with us on this committee and in this room, and look forward to his service. Like we have so many great Texans on this committee, we're glad to have him on the committee as well. And with that, Madam Chair, I yield back.
Thank you very much, and welcome back, Pete Sessions. We're glad to have you back. At this time, I will recognize the gentleman from Connecticut, Mr. Himes, for 1 minute.
Jeez, hurry. Give me Powell.
Thank you, Madam Chairwoman. And Chair Powell, welcome once again before the committee. We are going to be hanging on your every word today with all that's going on out there. Mr. Chairman, 3 weeks ago, I had the privilege of being appointed by the Speaker to chair the Select Committee on Economic Disparity and Fairness and Growth. I have reason to believe that the ranking member may also come from this committee, and membership will come from this committee as well. Mr. Chair, I was enormously gratified to see a statement you made in May to the National Community Reinvestment Coalition when you said, and I quote you here, "The Fed is focused on these long-standing disparities because they weigh on the productive capacity of our economy. We will only reach our full potential when everyone can contribute to and share in the benefits of our prosperity." Mr. Chair, as you know, we see economic disparities in this country that we've never seen before. And you made the case that apart from the moral issue, there is a profound economic reason to address those disparities in as much as it is damaging our productive capacity. The committee looks forward to working with you on this issue in a bipartisan way. And I really thank you for highlighting that. And we'll ask you to continue to reflect on what the Fed can do to address those sorts of disparities. And with that, I look forward to your testimony and yield back.
Thank you very much. I now recognize the gentleman from Kentucky, Mr. Barr, for 1 minute.
Thank you, Madam Chair. And Chairman Powell, welcome back to the committee. I join the ranking member's view that you have earned another term. The CPI data released yesterday, though, does paint a grim picture. Inflation is accelerating at the fastest pace in 13 years. The 5.4% year-over-year increase is the highest since August 2008. Core CPI surged to 4.5%, the sharpest increase in almost 30 years, and 47% of small businesses raised average selling prices in June, the highest share since 1981. Let's be clear, inflation is a tax hike on everyday consumers and small businesses. While accommodative monetary policy, supply chain bottlenecks, and increased consumer demand associated with reopening the economy are contributing to the rise in prices, reckless government spending and the prolonged policy to pay people not to work are exacerbating the problem. The Biden administration's desire to tax and spend compromises any hope we have that this inflation is transitory and paints us into a corner of lasting inflation that will decrease the purchasing power of American consumers and small businesses. I look forward to today's testimony about the real and immediate risk.
He's not
higher
wearing
inflation.
pants.
I yield back.
He's not wearing pants.
Thank you very much.
That's
I would like to
his alarm just
take
went
this
off.
moment to welcome our distinguished witness for today, the Honorable Jerome Powell, the Chair of the Board of Governors of the Federal Reserve System. Without objection, your written statement will be made part of the record. You will have 5 minutes to summarize your testimony. You should be able to see a timer on your screen that will indicate how much time you have left, and a chime will go off at the end of your time. I would ask you to be mindful of the timer and quickly wrap up your testimony if you hear the chime. Chair Powell, you are now recognized for 5 minutes to present your oral testimony.
Thank you, Chairwoman Waters, Ranking Member McHenry, and other members of the committee. I'm pleased to present the Federal Reserve's semi-annual monetary policy report. At the Fed, we're strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. We pursue these goals based solely on data and objective analysis, and we are committed to doing so in a clear and transparent manner. Today, I will review the current economic situation before turning to monetary policy. Over the first half of 2021, ongoing vaccinations have led to a reopening of the economy and strong economic growth, supported by accommodative monetary and fiscal policy. Real gross domestic product this year appears to be on track to post its fastest increase in decades. Household spending is rising at an especially rapid pace, boosted by strong fiscal support, accommodative financial conditions, and the reopening of the economy. Housing demand remains very strong, and overall business investment is increasing at a solid pace. As described in our monetary policy report, supply constraints have been restraining activity in some industries, most notably in the motor vehicle industry, where the worldwide shortage of semiconductors has sharply curtailed production so far this year. Conditions in the labor market have continued to improve, but there is still a long way to go. Labor demand appears to be very strong. Job openings are at a record high, hiring is robust, and many workers are leaving their current jobs to search for better ones. Indeed, employers added 1.7 million workers from April through June. However, the unemployment rate remained elevated in June at 5.9%, and this figure understates the shortfall in employment, particularly as participation in the labor market has not moved up from the low rates that have prevailed for most of the last year. Job gains should be strong in coming months as public health conditions continue to improve and as some of the other pandemic-related factors currently weighing them down diminish. As discussed in the monetary policy report, the pandemic-induced declines in employment last year were largest for workers with lower wages and for African Americans and Hispanics. Despite substantial improvements for all racial and ethnic groups, the hardest hit groups still have the most ground left to regain. Inflation has increased notably and will likely remain elevated in coming months before moderating. Inflation is being temporarily boosted by base effects as the sharp pandemic-related price increases from last spring drop out of the 12-month calculation. In addition, strong demand in sectors where production bottlenecks or other supply constraints have limited production has led to especially rapid price increases for some goods and services, which should partially reverse as the effects of the bottlenecks unwind. Prices for services that were hard hit by the pandemic have also jumped in recent months as demand for these services has surged with the reopening of the economy. To avoid sustained periods of unusually low or high inflation, the FOMC monetary policy framework seeks longer-term inflation expectations that are well anchored at 2%, the committee's longer-run inflation objective. Measures of longer-term inflation expectations have moved up from their pandemic lows and are in a range that is broadly consistent with the FOMC's longer-run inflation goal. Two boxes in the July monetary policy report discuss recent developments in inflation and inflation expectations. Sustainably achieving maximum employment and price stability depends on a stable financial system, and we continue to monitor vulnerabilities here. While asset valuations have generally risen with improving fundamentals as well as increased investor risk appetite, holding balance sheets household balance sheets are on average quite strong. Business leverage has been declining from high levels, and the institutions at the core of the financial system remain resilient. Turning to monetary policy, at our June meeting, the FOMC kept the federal funds rate near zero and maintained the pace of our asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. We continue to expect that it will be appropriate to maintain the current target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. As the committee reiterated in our June policy statement, with inflation having run persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. As always, in assessing the appropriate stance of policy, we will continue to monitor the implications of incoming information for the economic outlook and would be prepared to adjust the stance of monetary policy as appropriate if we saw signs that the path of inflation or longer-term inflation expectations were moving materially and persistently beyond levels consistent with our goal. In addition, we're continuing to increase our holdings of Treasury securities and agency MBS, at least at their current pace, until substantial further progress has been made toward our maximum employment and price stability goals. These purchases have materially eased financial conditions and are providing substantial support for the economy. At our June meeting, the committee discussed the economy's progress toward our goals since we adopted our asset purchase guidance last December. While reaching the standard of substantial further progress is still a ways off, participants expect that progress will continue, and we will continue these discussions in coming meetings. As we've said, we'll provide advance notice before announcing any decision to make changes to our purchases. To wrap up, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. The resumption of our Fed Listens initiative will further strengthen our ongoing efforts to learn from a broad range of groups about how they are recovering from the economic hardships brought on by the pandemic. We at the Federal Reserve will do everything we can to support the recovery and foster progress toward our goals of maximum employment and stable prices. Thank you. I will look forward to our discussion.
Thank you very much, Chairman Powell. And I'd like to clarify that the end time for this hearing is 3 o'clock Pacific time and 12 p.m. Eastern time. So thank you very much. And at this time, I would now like to recognize myself for 5 minutes for questions. Chair Powell, I want to understand some of the data behind the recent inflation figures, specifically as it relates to housing and home prices.
Amazon moving, but I don't see any
According to the
news.
Monetary Policy Report we're discussing today, quote, new construction, home sales, and residential improvements have all been well above pre-pandemic levels, and demand has outpaced supply as construction has been limited by material shortages and sales have been constrained by low inventories, unquote. So demand for housing clearly outweighs the supply of housing. Chair Powell, you've said that this is a problem for first-time home buyers for sure. Can you elaborate on what you meant by that? Chair Powell, will you unmute?
I'm sorry, Madam Chair. So housing prices are moving up across the country at a high rate. And I suppose the good news is that this is not driven by the kind of reckless, irresponsible lending that led to the housing bubble, that led to the last financial crisis. Those kinds of things are not happening, at least so far. Nonetheless, housing prices are moving up. And of course, that makes it more difficult for entry-level buyers to get into the housing market. So that is a concern. I will also point out, though, that a number of things are driving up housing prices. Certainly, low rates are part of that. There are also changes in preference. People have wanted to move out of cities because of COVID into surrounding areas. So single-family housing demand has been quite high. In addition, prices have been driven up by material shortages and things like that, which we would hope would be alleviated.
Okay, so Chairman Powell, a lack of supply and constraints around housing stock are a factor in the recent increase in housing costs. If the Fed were to raise interest rates, what do you project the impact would be on addressing housing supply challenges?
Well, it wouldn't have any effect on the supply side, as I think you're suggesting. You know, there are limitations around the availability of some raw materials and of labor and of zoning and things like that, and nothing we can do can really affect that. It is true that interest rates are one factor that's supporting demand, but we really can't do much about the supply side.
Conversely, do you expect that increasing housing supply would help alleviate inflation?
I think housing, sure. I do think that more housing supply, if demand were to remain constant, would certainly imply that prices would stop going up as much as they have been.
The Great Recession was long, slow, and inequitable, in part because fiscal support provided by Congress was insufficient. And we left too much up to the Fed to stimulate the economy through low interest rates. I believe strongly that we cannot repeat that mistake. And as I look around at what is causing surging prices, I see a lot of places where more investment will help with long-term economic growth, especially more housing. Congress and the Biden administration have a job to do right now. It is for this reason I'm reintroducing my Housing is Infrastructure Act this week to ensure that Congress finally makes long overdue investments in the housing market. This bill would provide a historic investment of more than $600
Bruh, she sound like a YouTuber dropping merch. What the?
all across the country. And so, as you know, I'm focused very much on housing, and I understand that there's a great need for affordable housing. As you know, homelessness is just increasing all over this country, and some cities have given up on even trying to control the camps that are popping up on sidewalks and under bridges. And so how important do you think investment in housing is to this economy?
Well, the housing industry is a big one, and the problem of affordable housing is a big one too, albeit it's one largely outside of the ambit of the Fed's responsibilities, but certainly a very important issue. And I think as you point out, the rise in homelessness in the face of a very strong recovery is actually evidence of the unevenness of the recovery. So, which is something we try to keep in mind as well.
Well, thank you very much. I now call on the ranking member for 5 minutes for questions.
Chair Powell.
Mr. McHenry.
Chair Powell, thank you for being back. We have a lot of debate about monetary policy, but fiscal policy is also an important discussion. Chair Powell, when Congress, and I recognize, Chair Powell, you have say over monetary policy, but not fiscal policy. This is the responsibility of Congress. But Chair Powell, when Congress enacts new spending, does the Fed incorporate that new spending into its economic projections?
Yes, we do. Of course, we don't, as you know, we don't comment on or try in any way to play a role in fiscal policy, in particular fiscal policies. But yes, we take it as an external factor that we would factor into our models and into our assessment of the economy. Okay,
so that spending impacts the course of Fed's decision making, and the Fed will follow, in essence, right? You have no say over it, but you will incorporate that into your decision making. Will adding another $4.5 trillion in new spending impact the Fed's decision making?
So I should be clear, it's one of many factors that we consider. And, you know, so our focus is on maximum employment and price stability. So we would tend to look, one thing would be, you would want to know how much of it's paid for and that kind of thing, but sort of the net deficit spending would enter into anybody's projections really of the economy and ultimately into projections of the labor market and of inflation over time. It's hard to say exactly how without knowing a lot of the details, because it also depends, it matters what money is spent on and over what period of time and that sort of thing.
Sure. So the spend rate matters, but fiscal policy, both tax and spend policy, impacts the Fed's decision making. So for those in Congress that are saying that irresponsible spending won't impact the Fed's decision making and won't impact our economy long term, it certainly is not in keeping with how these decisions are made. So I want to switch subjects a little bit. Chair Powell, as you know, there's been a great interest in central bank digital currencies. Many countries, like China in particular, are focused on establishing a CBDC. You indicated this earlier this year, the Fed would study and issue a white paper on the subject. What is the status of that report?
We expect to publish a report around, could be early September, or plus or minus, right in that time frame. And the status of it is we're working hard on it right now. But let me tell you what it is really. We're going to address digital payments broadly. So that means stable coins, it means crypto assets, it means a CBDC. That whole group of issues and payment mechanisms, which we think are really at a critical point in terms of the appropriate regulation, and in the case of a CBDC, a central bank digital currency, laying out really questions for the public to respond to about what good it can do, what the costs and benefits of it would be. We want to begin really a major public consultation across many different groups, including Congress, of course, on a CBDC and also on stable coins and crypto.
But so there are certainly advantages to a central bank digital currency or a faster payment system. But there are certainly risks. That's the case, right? This is not a riskless proposition. It's a pretty bold proposition for the Federal Reserve, is it not?
Yes, and we'll lay out the possible potential benefits. We'll put those out on paper, and also, the potential risks that are undertaken. And I think those have been written up in many forums around the world, and I think both are real. And it really depends. A lot depends on the U.S. institutional context and on why we would need a central bank digital currency and how you weigh those costs and benefits. So that's really the nature of the exercise.
And so stable coins certainly have some advantages in terms of a faster payment system and have some of the attributes of a CBDC. But there are some risks with stable coins right now. Are there not? Are there concerns you have about stable coins?
Yeah, I think the issue, stable coins are a lot like money market funds or bank deposits or a narrow bank, depending on the terms of them, that kind of thing, but without the regulation. And I think we have a tradition in this country where the public's money is held in what is supposed to be a very safe asset. We have a pretty strong regulatory framework around bank deposits, for example, or money market funds. That doesn't exist really for stable coins. And if they're going to be a significant part of the payments universe, which we don't think crypto assets will be, but stable coins might be, then we need an appropriate regulatory framework, which frankly we don't have.
Thank you.
Thank you very much. Clarification. This hearing will end 3 p.m. Eastern time, and 12 p.m. Pacific time. Why didn't somebody say something?
Well, it's a relief for all of us.
I'm relieved.
Yeah, we don't like interrupting our chairwoman. That's why we knew you were figuring.
Excuse me, the gentlewoman from New York. Thank you, Ms. Maloney, who is also the chair of the House Committee on Oversight and Reform, is now recognized for 5 minutes.
Well, thank you for that correction.
You're welcome.
Chair Powell, it's very good to see you again. Last month, when you testified before the Select Subcommittee on Coronavirus and the crisis, you and I discussed the current economic recovery, and I expressed concern, along with other members, about prematurely cutting off this recovery by raising interest rates too soon. I want to touch on a related topic today, and that's the Fed's asset purchases. As you know, the Fed is currently supporting the economy by purchasing $120 billion a month in treasuries and mortgage securities. And the Fed has said that it will continue these purchases until, quote, substantial further progress has been made toward the committee's maximum employment and price stability goals, end quote. The minutes from last month's Fed's meeting stated that the Fed is continuing its asset purchases because participants generally did not believe that the goal of, quote, substantial further progress has been made yet. And I agree. I think it's far too early for the Fed to start tapering its asset purchases and pulling back on its support for the economy. So, Chairman Powell, would you please elaborate on what you believe, quote, substantial further progress, end quote, looks like? What do you need to see happen before you will support tapering the Fed's asset purchases?
So we'll know. I would say this: we didn't try to write down a particular set of numbers that would capture what we mean by that, and it would have been complicated and not particularly worthwhile. So we thought. So we said substantial further progress, which is similar to what we did during the recovery of the global financial crisis years ago. We had a similar kind of set of words for when we would taper asset purchases. So the thing is, it's very difficult to be precise about it because with maximum employment, there are no 3 or 4 or 5 or 6 metrics that you could point to. It really is a very broad range of things, including wages, unemployment, levels of employment, participation, all those things. So we just said substantial further progress. And we also said that we would provide advance notice, well in advance of actually tapering, so that understanding that this is somewhat of a discretionary test and that we don't want to surprise markets or the public. So we will provide lots of notice as we go forward on that. And by the way, we have another FOMC meeting in a couple of weeks from today, and we'll have another round of discussions on this very topic.
Great, thank you. Chair Powell, in May, President Biden took action through an executive order to address the serious threat that the climate crisis poses to our economy. And we are seeing numerous examples of that changing climate and extreme weather events that result from this threat. We saw extreme heat across the Pacific Northwest, which will have cascading effects on the U.S. economy. And part of that executive order was tasking Secretary Yellen with assessing climate-related financial risks through FSOC, of which the Fed is a member. And I know the Fed presented on climate risk during the first FSOC meeting of this year. Can you provide us with an update on the Fed's current work with FSOC on this topic and the Fed's broader work to address climate change in our financial system, particularly at these risks, how these risks can impact our broader economy through supply chain disruptions or disruptions to massive industries such as agriculture?
Sure, I'd be glad to. So the Fed's work on climate change really exists as part of our pre-existing mandates for supervising financial institutions and for the overall stability of the financial system. So as far as individual financial institutions are concerned, as supervisors, we want them to be aware of and capable of managing and understanding all of the risks that they run, including the risks to their business activities and business model from climate change. So we're in the beginning stages of working up a program that will engage with the financial institutions and make sure that that happens. On financial system more broadly, we have an overlapping effort that looks carefully at the broader financial system and asks how will climate change affect financial markets and other financial institutions that are not banks, for example, insurance companies and many others like that, asset managers. And so those are really two efforts that we're working on, and that's what we reported on to the FSOC.
Time has expired. Thank you very much. I yield back. Thank you.
The gentlewoman from Missouri, Ms. Wagner, is now recognized for 5 minutes.
I thank you, Madam Chairwoman, and Chairman Powell, thank you for being here with us again today. You and I have discussed at length my very grave concerns with higher inflation and the increased costs that consumers and businesses are experiencing, today. In February, you appeared before this committee and reiterated that the price spikes are only temporary. and that they will decrease in time and inflation will move towards your goal of 2%. I can tell you that the families and businesses that I represent in Missouri's 2nd Congressional District aren't feeling that these price spikes are very temporary. I am concerned with the most recent Consumer Price Index data showing price increases that are much higher than expectations. Housing costs are, as we've discussed here, are skyrocketing. Food costs are higher, electricity and gas prices are up. Even travel and hospitality costs have seen a great increase. I understand that some of these increases are due to supply chain disruptions and labor shortages, but to have prices across the board consistently higher than they were forecasted to be is deeply troubling as we look toward a strong economic growth for the rest of the year and beyond as we pull out of this pandemic. Chairman Powell, is it the Fed's policy or the Biden administration's policy that is, that's surrounded with massive spending that is causing consumer prices to skyrocket?
I can't really address that. I can tell you why I think we're having this inflation that we're having now. So what's really happening is, first of all, you're right. The incoming inflation data have been higher than expected and hoped for, but they're actually still consistent with what we've been talking about. The very high inflation readings are coming from a small group of goods and services that are directly tied to the reopening of the economy. It's new cars, used cars, rental cars, hotel rooms, airplane tickets, things that we understand how to connect.
With all due respect, Chairman Powell, I mean, it's housing, it's appliances, it's food prices, it's electricity, it's gas. Tell me, to what extent is the Federal Reserve willing to see consumer prices increase before intervention is necessary?
Well, so we are monitoring the situation very carefully, and we are committed to price stability. And if we were to see that inflation were remaining high and remaining materially higher above our target for a period of time, and that it was threatening to uproot inflation expectations and create a risk of a longer period of inflation, then we would absolutely change our policy as appropriate.
Well, unemployment is still well above the 3.5% figure it reached prior to the pandemic, and the labor force participation rate remains lower than in February of 2020. Now, a lot of that is because the administration is still, frankly, paying people not to work, and while job openings remain high at 9.2 million. In the FOMC minutes from June, some participants believed that the unemployment rate of 3.5% that the previous administration achieved is not feasible. Chairman Powell, with 9.2 million job openings and many employers raising wages and offering hiring bonuses, etc., what is causing some members of the FOMC to believe a 3.5% unemployment rate is not achievable?
I don't know that anyone said that. I didn't hear anyone say that 3.5% unemployment is.
It's in the minutes. It's in
No,
the
it's
minutes
not.
from June.
No, it's not. It must be something else.
He
It
said,
must
what
be
the
something
you
that
reading?
says,
Beep.
you might say that about labor force participation, for example, or employment to population. But I don't think I didn't hear anybody
No, it's not.
say that we
It's
couldn't
not.
get back to 3.5%.
No, it's not.
unemployment.
It's not.
In any case, I don't believe that. Let me just say that. I don't believe that. I think it's a long road back. It took us it took us 8 years of an expansion to get to 3.5%. But I think there's every reason to think that we can get back to that level.
With a vaccine readily available in small businesses with unfilled positions, what do you believe is causing the unemployment rate to remain steadily above 3.5%?
Well, so I think you're right that the demand for labor is very, very high, all-time record job openings, and there are also significant numbers of unemployed people. The market doesn't seem to clear, and I think some factors are weighing on labor supply, people going back to work. We think that those factors, though, such as school reopenings and perhaps also unemployment insurance, we think that those things will pass, and we do think that as a result, there'll be very strong job creation.
Thank you, Chairman Powell. My time's expired and I yield back.
The gentleman from New York, Mr. Meeks, who is also the chair of the House Committee on Foreign Affairs, is now recognized for 5 minutes.
Thank you, Madam Speaker, and welcome back, Chairman Powell. As you know, the Biden administration recently issued an executive order promoting competition in the American economy and encouraging the Attorney General, in consultation with the primary federal banking agencies, to update existing guidelines on bank mergers to provide more robust scrutiny on these transactions. And I support this executive order, considering the impact that bank consolidation can have on communities of color. Now, compliance with the Community Reinvestment Act is an important measure that the DOJ and the feds consider during the bank merger review process. And as you know, I've publicly supported the Fed's direction in modernizing CRA regulations so that things like the bank merger review process can adequately reflect the economic needs of today. So can you please explain how the Fed plans to coordinate with the DOJ in light of the bank merger executive order? And will the Fed's CRA reform efforts and the DOJ's bank merger updates happen in silos or in tandem?
Thank you. So we actually, we coordinate pretty closely with the Department of Justice over the years on bank antitrust standards. We each look at each merger, and so we understand each other. And we would look forward to the extent justice, I think, under the executive order, is encouraged to take a fresh look at bank merger standards. We would, of course, closely coordinate and try to understand what's going on. We haven't made any decision to change our merger standards, but we would certainly monitor that carefully and act appropriately. I can't presume to know what will happen out of this, but it's a process that we'll go through in coordination with justice.
Well, hopefully, the coordination is important, I believe, to act in tandem so that there's not several different CRA rules and regulations that comes out, as we've talked about with the OCC and others. So I appreciate the Fed making sure that there's some continuity in that regards and working in tandem. So also, the pandemic has really...
News just came in, USA to extend Trump-era halt to economic dialogue with China. So yeah, you got some China escalation there, essentially, or not reverting from it.
Homeowners relative to New York City at large. Now, in the pandemic's early days, the Fed rightfully intervened and purchased mortgage-backed securities in the billions, which helped keep the interest rates low, I understand. However, we've also experienced a rise now in housing prices, which some attribute to the Fed's asset purchases. Now, although others cite supply chain challenges. So I understand there's a debate at the Fed as to how quickly it should taper its MBS purchases, but what are some of the economic factors you are considering as you weigh both sides of this argument?
So housing prices are going up because of both demand and supply reasons, and you touched on them, Congressman. On the supply side, it is prices of raw materials and lack of labor, labor costs, zoning difficulties, all those things. So it's not just a demand story. On the demand side, rates are definitely low. Interest rates are certainly making mortgages cheaper and therefore supporting prices in housing. That's certainly a factor. There are other factors too. Changing preferences. People are household balance sheets are very strong right now because people were kind of forced to save because they couldn't go on trips, they couldn't go to restaurants for a year. So there are big amounts of savings on people's balance sheets. So all of that goes into demand for housing. Sorry, then your question on that was what?
So what are some of the economic factors that you are considering? In that argument, there's both.
Oh, on mortgage-backed securities. So on mortgage-backed securities in particular, so interest rates, our low interest rates and treasury purchases and MBS all go into creating a low interest rate environment and go into mortgage rates. Mortgage-backed securities purchases really work a lot like treasury purchases. They aren't especially important in what's happening with housing prices. They are nonetheless, they clearly are a factor among factors. So this is one of the things that we'll be considering as we go through this process of evaluating when to taper and in what form, what will be the composition of asset purchases going forward. Those are all issues that we'll be discussing at this next meeting in a couple of weeks.
Thank you. My time is expired. Goodbye.
Thank you very much. The gentleman from Indiana, Mr. Hollingsworth, is now recognized for 5 minutes.
Well, good afternoon, Chairman Powell. Appreciate you being here and certainly appreciate you answering our questions. I know this remains a tricky time in the recovery, and our collective understanding about the Fed's effort and reasoning here is very important. I have a long preamble that I hope ends in a question, so take a little bit of a journey with me. First and foremost, I want you to know I'm in no way besmirching the good work the Fed has done over the last year. The extraordinary economic cessation necessitated extreme action, and you took that action with vigor. I'm thankful for that, and my view on that is unchanged. Second, my question is not meant to imply that you need a hawkish stance. I think we can all agree that monetary policy is very accommodative at present, perhaps at the furthest end of the accommodative side of the spectrum, as is conceivable. I'm questioning merely the degree of accommodative stance, not asking to return to a restrictive side of the spectrum. Third, I have on many occasions endorsed your new symmetrical approach to inflation target. I believe this is exactly the right answer. My question today is not tied to recent inflation numbers, nor would I prognosticate about whether it's transitory or not, whether it's a monetary phenomenon, a demand phenomenon, nor the magnitude of what it may reach. But here's the crux of my question. I think there's a lot of data out in the economy showing that it is awash in liquidity. A panoply of statistics indicate the tremendous / unprecedented increase in liquidity over recent years. In recent weeks alone, you've raised the reverse repo rate to 0.05%, and the uptake on that product has been tremendous, which in and of itself is a reaction to money markets being overwhelmed with liquidity, which in and of itself is a reaction to bank deposits being overwhelmed. Yet the ultra accommodative stance by the Fed continues. And when asked about this over the last few months, and I think you indicated this in your earlier testimony, I've heard you say that there needs necessary further healing in the labor market for that ultra accommodative stance to change. I agree with this. There's much room to go. But what I don't understand about that answer is that a cornucopia of evidence suggests that challenges in the labor market are not related to monetary policy and frankly aren't susceptible to monetary policy's aid. The Fed, and no indictment on the Fed, monetary policy writ large isn't the right vehicle and doesn't have the right tools to resolve skills mismatch, to resolve no work incentive balancing, and to resolve geographic mismatch. As you said earlier, there isn't a lack of demand in the jobs market. So I guess getting to the specifics of my question, I believe the Fed is distorting significantly the financial economy for very little, if any, maybe marginal impact on the real economy. To couch specifically inside your mandate, are you jeopardizing long-term full employment and price stability by virtue of extreme monetary policy and picking up very little short-term benefit in full employment? I wondered if you might talk about your reasoning and your colleagues' reasoning for remaining and retaining that extreme accommodative stance and using labor market as justification, despite significant evidence indicating that the labor market needs are not monetary policy related. I think you're muted. Sorry.
I did it again. I would just say this. So policy is highly accommodative. That is correct. We're a long way from full employment. We have, as you know, 5.9% unemployment, and the true number is actually substantially above that. So we've got a ways to go. We see everything that you see, but I guess what we see is that our test for tapering asset purchases is an appropriate one, and we're making progress toward that. So we are in fact considering.
I guess just to needle into that for a second, we are making progress. I do not believe that progress is monthly asset purchases.
That's this guy.
I think I've seen significant evidence that indicates that monetary policy isn't making an impact on that. Other factors are making an impact on that, and I wonder whether the financial distortion that is occurring, and is by its nature monetary policy, isn't causing long-term problems for very little short-term gain.
Yeah, no, I guess that's where I would differ is I do think monetary policy is supporting demand and demand broadly in the economy and the recovery of the weak sectors and all of that. So it's still appropriate that monetary policy be accommodative, highly accommodative.
you believe that the difference between 60 billion and 120 billion, or 0 billion in purchasing 120 billion, is a material impact on the point at which we will reach full employment? Question mark.
I mean, it's hard to say that with any specificity, but yes, I think our overall policy stance is appropriate. And as you know, we are very much in the process of walking down the road and asking those very questions. And first on tapering, but I also think it's, we're a good ways away from maximum employment. And one of the conditions for lifting interest rates is that we are at labor market conditions that are comparable, in the range of maximum employment.
Thank you very much. The gentleman's time has expired. The gentleman from Massachusetts, Mr. Lynch, is now recognized for 5 minutes. Mr. Lynch?
You hear me?
Now I can.
Okay, thank you, Madam Chair. And Chairman Powell, thank you so much for your willingness to help the committee with its work. So I was very pleased to hear in your opening remarks that the Fed plans an open dialogue with the public and with stakeholders regarding CBDCs and as well as cryptocurrency generally. And I think that's much needed. And I'm very proud of the fact that the Boston Fed, under the leadership of Eric Rosengren, has been working with MIT in their cryptocurrency lab on working on this digital dollar for the United States and for the Fed. I am a little bit worried about the pace, though. We see, I think there's 86 separate central banks that are already engaged in this. Do we risk sacrificing the primacy and the reserve currency status by I think some would argue slowness in response to this? And does this dialogue that you envision stretch out the timeline for adopting, say, a digital dollar for the U.S.? Does it delay that considerably?
I would agree. No, actually, I think the opposite. I think this is the beginning of I would think accelerating that decision process. We have a lot of work left to do on the technical side and on the policy side, but a critical part of it is just the public consultation. But on reserve currency, the U.S. is the reserve currency. There really isn't a good competitor out there, because all the things you need to be the reserve currency, really, the United States has it. We're not in danger of losing it. Certainly not to China, which doesn't have an open capital account and that kind of thing. It's the kind of status that, as you well know, lasts for many, many years. So I'm not concerned about, I'm really concerned about getting this right. It does carry risks. It does have benefits. It's quite specific to the institutional context of each country. And I want to get it right. We are the reserve currency. We have first mover advantage by virtue of that. So I think it's way more important to get it right than it is to do it fast.
That's fair enough. Let me ask you another question. It's a little off topic, but recently China has taken somewhat hostile action against IPOs being launched in the United States. Didi, the ride-hailing business in China, is one of the recent examples. The Chinese government has offered several different reasons for wanting these Chinese companies to register in China versus in the U.S. They've given, like I say, they've given various reasons for that, the security of data being one of them. I was wondering if you had, this is probably a better question for Mr. Gensler, but I was wondering if you had thoughts on that, about what the ultimate reasons were for China taking that action.
Yeah, I would pass that to my friend Gary Gensler. I think it's right over his home plate there. So for him, I mean, I'll just say it's important that we have, open capital accounts and open capital markets and global rules that we all abide by. And but I don't know how how to address that one, because it's really for the SEC.
Okay, and lastly, do you think that I have 1 minute left? Do you think that maybe more swift action on a digital currency for the Fed, would that have a calming effect on the variety and the number of cryptocurrencies and stable coins that we see coming out? Wouldn't that be a more viable and reliable alternative than having all of these hundreds and perhaps 1,000 different cryptocurrencies emerging?
I think that may be the case, and I think that's one of the arguments that are offered in favor of a digital currency. That particularly you wouldn't need stable coins, you wouldn't need cryptocurrencies if you had a digital U.S. currency. I think that's one of the stronger arguments in its favor.
That's great. Madam Chair, I yield back. Thank you.
Thank you very much. The gentleman from Ohio, Mr. Gonzalez, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chairman Powell. I want to pick up where my friend, Mr. Hollingsworth, left off and want to focus specifically on the unemployment piece. And frankly, when I talk to my businesses back home, where I'm currently seated, the two biggest issues that they face, in particular small businesses, employment, not being able to get people back to work, and inflation. So a timely hearing right in your wheelhouse. So first, with respect to unemployment, in the monetary policy report, you cite several factors that are keeping people out of the workforce, most of which, or all of them, are virus related. So early retirements, caregiving responsibilities, fear of COVID, and expanded unemployment benefits. Using those factors, which you cited in the monetary policy report as responsible for diminished employment, would you agree that the zero interest rate posture is not a primary driver of getting people back into the workforce today? And maybe said differently, do you think if you lowered us to negative interest rates that would materially change the unemployment rate?
Ooh.
Hey, let me try to answer that this way. I would agree with you that the most important thing, it would be very important if we were to see a significant increase, as we expect we will see, in labor supply, just showing up in the form of better matching in the labor market. There are all these open jobs, and there are many unemployed people, but they just don't seem to be matching up. And maybe there's a speed limit on that. But in any case, as those factors wane, we should see more of that, and that's probably of first order importance at this time.
Okay, so not the rate of interest, and I think that's important because the commitment is to keep rates at zero until we get back to full employment. But we know what's happening is it's inflating asset bubbles. It's pushing people further and further out on the risk curve. I would argue it's creating systemic risk in a variety of markets. And so I would just encourage you all to consider that. And now moving on to the inflation bit, the common refrain from the Fed has been that inflation is transitory. There's nothing to worry about. And you will maintain rates at zero until inflation is moderately above 2% for, quote, some time. And you've said that a handful of times here. Well, we're looking at 4 consecutive months now, including the previous month at over 5%. So how long is, quote, some time? And what factors are you looking at that will tell you whether this is transitory or something more systemic?
Okay, let me say first on maximum employment, even after this expected wave of supply comes, it's likely that we'll still be short of maximum employment. And at that time, support for demand will be appropriate. And so that's why we wouldn't see that it's time to raise interest rates now, because we think it'll take some time even after this to get there. So getting to your inflation question.
Which is basically how long is some time? Because it keeps being used. We'll keep it over some time.
So that will be the answer really is it depends. You're really asking about that part of the guidance and how do we think about that? Right now, of course, inflation is not moderately above 2%. It's well above 2%. And it's nothing like moderately. So the question will be, and this will be a question for the committee, how to interpret the guidance. The question will be, where does this leave us in 6 months or so when inflation, as we expect, does move down? How will that part of the guidance work? And it will depend on the path of the economy. It really will. it may be that we'll look back and see it as having been met. It may be that we won't, but we're not going to address that right now. It's a good question.
Okay, thank you. I want to switch to stable coins and pick up where Mr. McHenry left off, specifically on Tether. So in recent months, there's been increased scrutiny of the stablecoin Tether due to concerns regarding the assets backing the coin, particularly the amount backed by commercial paper as opposed to US dollars, which is what they originally said. President Rosengren said that Tether does create a challenge and that we need to take seriously what happens when people run from these instruments very quickly. Do you share these concerns, and how is that the sort of thing that you'll be looking at and providing guidance on with the white paper?
Yes, absolutely. Yes. I mean, commercial paper, are short-term overnight obligations of companies, and most of the time they're investment grade. Most of the time they're very liquid. It's all good. But in both of the last two financial, during the acute phase of the crisis, the market just disappears, and that's when people will want their money. So, it's very simple. These are economic activities that are very similar to bank deposits and money market funds, and they need to be regulated.
ETN getting clapped, energy transfer.
That's how I see it.
Thank you. The gentleman's time has expired. The gentleman from New Jersey, Mr. Gottheimer, is now recognized for 5 minutes.
Thank you, Chairman Waters, and it's definitely Jersey.
The DOJ blocks Danfoss deal.
Thank you, Chairman Powell.
They got one of their deals blocked by the Department of Justice.
Deduction cap
ETN
through Congress in the 2017 tax hike bill raised taxes for a majority of the families in my district. These are my community's teachers and first responders, small business owners, young people trying to start a family, all groups who are struggling in this pandemic and now trying to get back on their feet. When you were before this committee earlier this year with Treasury Secretary Yellen, the secretary said that the SALT cap led to disparate treatment, quote, and that she would work with me to ensure that the inequities caused by the cap would be remedied. Chairman Powell, is increasing disposable income for households a crucial tool to stimulate the economy and ensure that our communities see the economic activity necessary to help small businesses come back from the pandemic? And do you think SALT's part of that solution, reinstating the SALT deduction?
So, we have really important jobs and powerful tools, but one of them is not fiscal policy. We don't really want to play a role on that. So I'd have to leave that with you.
Okay, well, I figured that'd be your answer, but I was going to ask it anyway. I'll turn to inflation, since obviously lots of questions today about that. Given the movements we are seeing in inflation across commodities, housing, and wages, should we be concerned about what happens to long-term interest rates once the Fed stops purchasing long-dated treasuries? And do you want long rates go up, and what will happen, do you believe, to the economy?
I wouldn't want to make a forecast. It's very hard to forecast long-term rates. If anybody had forecasted that we'd be able to borrow the amounts we've borrowed in the last 10 years, and that the federal funds rate would be at the 10-year treasury would be at 1.4%. No one would have forecast that. So it's really hard to say. There's tremendous demand for U.S. treasuries around the world. We are the safe asset. We are the reserve currency. And in any case, our role is to do maximum employment and price stability, and not fiscal policy.
Well, since the Fed is by far the largest buyer, you don't think that long-term rates will go up meaningfully when this occurs, when you stop?
Honestly, they may or may not. Markets work, as you know, work through expectations. So if markets foresee what we're going to do, then presumably, to some extent at least, what we're going to do should already be baked in. And it's very hard to predict markets' reactions to these things. But one of the reasons we're being so very transparent is that markets will incorporate, the timing and the form of the taper that we're going to ultimately undertake here, because we will have sort of communicated it well in advance.
Thank you. Chairman, you said that one of the causes of inflation that consumers are experiencing is from supply bottlenecks. Some of these supply issues are being attributed to strains on supply chains because America's infrastructure is unable to take on the increased demand as our economy reopens. Would you agree that these bottlenecks would be alleviated in part through the robust direct investment in infrastructure, addressing our issues with roads and bridges, rails and ports, and that spending in long-term infrastructure projects would help in keeping inflation under control?
again, I would, I wouldn't want to be seen as supporting any particular bill or form of spending. I do think it's clear, though, that investments in infrastructure, in good infrastructure, can add to to economic potential, provided the money is well spent. And but again, I don't want to. It's not appropriate for me to get involved in these discussions you're having.
I understand. I will espouse one and a bipartisan infrastructure package that the Problem Solvers Caucus in the House been working with a bipartisan group in the Senate to try to get our investment in infrastructure into law and our economy back on track and set up for long-term success. I believe that will obviously help deal with some of the challenges we're facing in making these investments in roads and bridges and rail and energy infrastructure and broadband connectivity, all crucial to ensure America remains competitive on the global stage. Last question there, are you concerned on the global stage, China spent about $3.7 trillion on infrastructure outside of the United States last year. Are you concerned at all about China's activity on this front and the spending they're doing outside the United States?
The issues of international economic relations are really with the Treasury Department and the State Department, not with us.
I will yield back, Chairwoman, my last seconds here. Thank you so much, Chairman Powell, for being here today.
Thank you.
Thank you very much, Mr. Gottheimer. And you forgot to add housing.
Sorry, I missed that. My litany. You're right, Chairwoman, from California.
The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairwoman Waters and Ranking Member McHenry. And thank you, Chairman Powell, for being here today and for your leadership throughout the pandemic and now during our economic recovery. I'm going to go ahead and dive right in. Chair Powell, in November, the Fed took important steps to provide temporary relief for certain community banking organizations who experienced an unexpected and sharp increase in assets due to their participation in federal coronavirus response programs, such as the Paycheck Protection Program. That regulatory relief is in effect until December 31st of this year. And since that deadline was put into place, the Biden administration, along with House Democrats, passed a $2 trillion bill that will have an impact that extends past the end of the year. Do you believe that the end of year deadline is sufficient, and would you be open to extending the regulatory flexibility past that date?
I don't know, to be perfectly honest. I'd be happy to take a look at that and get back to you. I'm well aware of those programs and of the deadline, but I don't know. I don't have an informed view of whether they would need to be extended, but I will look into it.
In building off of that, I hear constantly as I visit with community banks back here in Middle Tennessee that regulatory compliance continues to be one of their top expenses or costs. So I think this brings up the broader question of if we should be looking into permanently raising the threshold for increased regulatory and reporting standards for community banking organizations. What are your thoughts on that, Chair Powell? Is that something you would support?
Again, I'd have to look at that. I will say that we are very well aware of the pressures that are added to community banks because of fixed regulatory costs. You need to be bigger with fixed costs, and we try hard not to be part of the problem. We see community banks under pressure. We see the number diminishing, and we have a whole subcommittee led here by Governor Bowman, a former banker, that is designed to stop that sort of thing from happening. But it's something we work on all the time.
Well, I just would encourage you to do that and look at those thresholds, because what I hear repeatedly, and as a former director of a small national bank, community bank here in my community, it appears that the dramatic increase in assets resulting from the fiscal stimulus and other measures may not be as transitory as we would have had first expected, and yet has increased the balance sheets of these banks dramatically. So I hope you will take a look at that. In June, the unemployment rate was 5.9%, a far cry from the 3.5% pre-pandemic. Labor force participation has not moved up from the low rates that have prevailed for much of the past year. In the monetary policy report you submitted the committee, you write that enhanced unemployment benefits have allowed workers to reduce the intensity of their job search. Chair Powell, do you believe that the most recent stimulus in the American Rescue Act is the reason for prolonged high unemployment rates, and has it in fact slowed down our economic recovery?
So there are a bunch of factors. There are 4 or 5. I think Mr. Gonzalez or somebody went through them, and it's very hard to untangle them. But it may be that on unemployment insurance, for example, it may be that enables people to look a little bit longer and try to find a better job. And in the long run, that'll be better for the economy. We're going to find out, though, because the enhanced unemployment insurance will be gone within 60 days. And in many states, it's gone already. So we'll be able to look at the data. And it's too early to say, by the way, we can't really see a difference between states that have and haven't eliminated that. So we're going to be able to see. My own suspicion is it's one of a number of factors, and it interacts with the other factors. And it'll be really hard to get a clear answer on exactly how important that is.
How could another $3.5 trillion, as proposed by Senate Budget Chair Sanders, further stifle our economic recovery?
That would seem to be a question for you, really. I don't comment on fiscal policy, and I'll really leave that one with you, if I could.
Switching gears a little in my remaining time, and I want to talk about the GSIB surcharge. Throughout the pandemic, our largest banks remained strong and stable due to high asset quality and robust capital and liquidity positions. I believe that over the years, the GSIB surcharge has worked as it was intended. And if the GSIBs do not maintain sufficient capital cushion to absorb losses, it could undermine our economy. It seems that I'm out of time, but would welcome your response to the record to the questions I'll submit.
Thank you. Happy to do
I yield back, Madam Chair.
Thank you very much. The gentlewoman from Pennsylvania, Ms. Dean, is now recognized for 5 minutes.
Thank you, Madam Chair. And Chairman Powell, it is always good to be with you and to learn from what you are doing in your role. I too thank you for your steady leadership and stewardship over the course of your tenure, but maybe never so important as over the course of the last 18 months and moving forward. I also thank you for your recognition that this recovery has not been even. While we are enjoying a regrowth in our economy in really robust ways, I appreciate that you recognize it has not been even across all sectors. I wanted to start with to continue the conversation around inflation. And I say this as somebody who wants to be able to translate this to my constituents. I prefer plain English anytime we can. So I really appreciate your testimony around inflation, but if we talk about supply chain and the vulnerabilities that come in as a result during this economic reopening, the supply chain with manufactured goods, driving what is called transitory inflation. You cite in your own testimony the car industry. The biggest example may be the price of used cars up 10% in April alone. And a number of factors, one with particular worldwide shortage of semiconductors slowing down the rate of new car manufacturing, therefore driving dealers to have fewer cars on the lot and buyers moving more toward pre-owned. All of these things inflationary. What are your thoughts and how can I explain this to my constituents around this level of inflation in these smaller groups of goods and services? What should we be watching? And if you could, again, in plain English, what's the Fed doing in terms of this temporary or what might be called transitory inflation?
Well, so we always have the issue, and central banks generally always have the issue of looking at price increases and asking whether they're really threatening inflation. By inflation, we mean year after year after year, prices go up. And if something is a one-time price increase, then you don't react to it with monetary policy because, frankly, the way monetary policy works would be by slowing down the economy, slowing down the recovery, and therefore reducing inflationary pressure. So you wouldn't react to something that is likely to go away. So we have to look at this current situation where we have a number of categories of goods and services where inflation's moving up, as I mentioned, higher and than we've expected, and a little bit more persistent than we had expected and hoped. But we look at them and we look at the story, and the story with you mentioned around used cars and new cars and rental cars it's all kind of the same story. There's a shortage of semiconductors. There's also very high demand for various reasons. People are using less public transportation. They have money because they haven't been able to spend. And it's just a perfect storm of high demand and low supply. And it should pass unless we think there's going to be a multi-year, many-year shortage of used cars in the United States. We should look at this as temporary. And we very much think that it is. And so do all the forecasters I've seen think that these price increases for used cars and new cars they'll top out. And then in all likelihood, at some point in the future, and we can't say exactly when, they'll decline because supply will come back.
And do you think, rather than, I appreciate that, those recommendations and what your actions are, is this a time when you see this kinds of transitory inflation of a need for greater public or private investment?
I think there's what investment does is it raises the potential growth rate of the country and makes workers more productive and companies more productive and countries more productive, and that raises living standards. And so more of it is generally better as long as it's money well invested. Then it's worth looking seriously at any time.
I agree, and I would not call any of the things that we're trying to do irresponsible spending. I think you have demonstrated, and the economy is demonstrating, that our investment has been responsible spending to the growth of our economy, to the growth of working class families. I want to pivot to another thing that I care very much about.
How fucking high is
credit rating agencies? Last session, in a bipartisan way, I had the opportunity to work with Chairwoman Waters, Representative Barr, to introduce HR 6934, which requires the Fed to treat all nationally recognized statistical rating agencies, NRSROs, uniformly so that more creditworthy companies could have access to the emergency lending. I knew I would run out of time. I don't know if you'd be able to speak to the NRSRO's expansion.
Just briefly, I guess, at the very beginning of the crisis, we really had to get these facilities up and running, and we just kind of worked with the big three. We then consistently expanded over and over again, expanded the group of agencies that we worked with. As you know, be happy to talk about this more offline if you'd like.
Thank you so much. Thank you. I yield back.
Thank you. The gentleman from Wisconsin, Mr. Stile, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. Thank you, Mr. Chairman Powell, for being here today. I want to stay on the topic of inflation. As you know, I've been a bit of a broken record on this issue because it's so important to families in Wisconsin and across our country. In fact, the prospect of rising inflation, I brought this up in our committee last July, again last December. And in those meetings, you continue to suggest that you're not ready to take action to head off inflation. And yesterday we received more data confirming that prices are continuing to rise. And inflation is not an abstract concern. And although the White House social media team put out information that a 4th of July barbecue went down 16 cents from last year, and the Biden administration can claim what they want, but families are seeing rapid price increases with their own eyes. Now, I know it's not your role to comment on fiscal policy, but I'm very concerned with President Biden's spending plans and its impact on inflation. Last month, increase in consumer prices of 5.4% was the largest jump that we've seen since August of 2008, right before the financial crisis. And over the past year, used cars have gone up 30%, plane tickets have gone up 24%, shoes are up 7%. We've seen increases in coffee and sugar, cotton, propane, all double digits, and higher material costs have added $36,000 to the price of a new home. And I know you've responded to inflation concerns by saying that price increases we're seeing are temporary and they'll subside as supply chain and labor markets return to normal after COVID. But even if it's partially a case that inflation expectations may be changing and rising the prospects of a more persistent impact. In fact, a poll conducted recently showed that 87% of Americans said they're concerned about inflation. And on Monday, the New York Fed reported that consumers expected to see higher inflation over the medium term. Can you comment on how the Fed responds to signs that consumers are beginning to expect more persistent inflation?
Sure. So we think inflation expectations are very, very important. In a way, if businesses and households think that inflation should be 2%, then it probably will be 2% because they'll expect that and they'll demand that in effect. So we monitor, inflation expectations, surveys of households, surveys of experts, the market. You can, as you know, you can get inflation compensation readings out of the difference between tips and regular treasuries. So we look at all of those things. And I would say they all went down as a group at the beginning of the pandemic, which is not good. And they've all moved back up as a group just about to the level that I would say that is consistent with, in the range of consistent with our 2% inflation goal over time. And so we watch this very carefully, and we would be very concerned if they were to move persistently and materially above 2% and would react to that.
So let me build on this discussion. I want to just build in here to the distinction between the transitory and persistent inflation, in particular as it impacts home prices. According to the Case-Shiller Index, home prices have risen more than 14% over the past year. That's a very significant increase, and it's enough to put home ownership out of the reach of some Americans. Meanwhile, the Fed is continuing to buy around $40 billion in mortgage-backed securities. And here's my concern: if inflation is, in fact, as you suggest, temporary, does the potential abatement of inflation present a potential for a reset of housing prices? And if so, what are the likely impacts both on homeowners and what will be the impact on the Fed's MBS holdings?
So housing prices, as I'm sure you know, don't go directly into inflation. That's an asset. Housing is an asset, and housing prices, that's not a factor in inflation. What's a factor is rents. And then in effect, what the economists do is they take the value of a home and they impute a rental cost to that and they add it in. It's just the way they do it. So, housing prices, they went up overall 15% last year. That's too much. That's much higher than would be a normal level for housing prices to go up. I don't know what housing prices will do in the future. But there's just a lot of demand. People want to live they want to live in the suburbs now. They want to move out of cities. They want bigger houses. They've saved all this money because they couldn't travel and go to restaurants. So there's a lot of demand. So even if mortgage rates go up, as they ultimately will, I think we'll be looking at a lot of demand. Then the question will be how much supply can be brought to the market. And that's really out of our control. But as you know, if you look around your district, it's a question of zoning, it's a question of materials, labor, all those things.
But if we zero into the material costs, we've seen that about $36,000 increase in cost due to the material cost, largely inflation. Look at lumber and other areas. Maybe we'll continue this discussion offline, but appreciate your time as I'm out of time and I will yield back.
I'd be glad to do that.
Thank you. The gentlewoman from North Carolina, Ms. Adams, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chairman Powell, for being back with us. Like my colleagues, I want to touch on inflation. You have described current inflationary pressures as transitory and cited supply bottlenecks and temporary factors like the high price of lumber as the reason why inflation has been high in recent months. And though this may be temporary, these bottlenecks have had real world consequences. For example, my local housing partnership had to pause the construction of an affordable housing site because of a funding gap caused by the spike in lumber prices. And while lumber prices can be tied to the previous administration's actions, I know that many are still concerned about the rise in core prices. So I'm hoping that you can help us put some of these concerns to bed. So would you tell us why you believe that the recent inflation trends are temporary as the economy reopens, and what other factors are playing into the upward pressure on prices?
I'd be glad to try. So as you know, all these industries kind of shut down a little more than a year ago on the expectation that we were looking at a really bad, difficult time. And then sooner than expected, the economy's reopened and demand for housing and demand for many other things, cars, you name it, is really high because people saved. They saved money with all of the congressional fiscal support, more than 100% of income lost was replaced. So really the consumer's in very good shape to spend. And so what's happening is there's a lot of demand, but on the supply side, it's just hard. They can't build enough houses. There wasn't enough lumber. You mentioned lumber prices. Lumber prices went way up, but they've gone way down. They're still twice as high as they were before the pandemic came, but they're way off their highs. So we don't know it, but we think that'll be the pattern for at least for some of these things, where they go very, very high and then they come down as supply and demand, come together, as more supply comes online to meet the higher demand. So we have a very large but ultimately very flexible economy. It will adapt, we believe. It's not one of those economies that's rigid and has a lot of structural rigidities in it. It will adapt and fairly quickly, just as it adapted to the pandemic, much more quickly and better than, frankly, people expected. So I think that'll happen. And when that happens, we should see, I don't say that prices will come back down, but the level of inflation will return to more normal levels.
Okay, even with the unemployment rate still elevated near 6%, the reports of employers are offering higher wages and incentives to attract workers back to work in the workforce. And I've always said that working hard isn't enough if you don't make enough. So, Chairman Powell, what do you attribute the trend of workers receiving incentives to re-enter the workforce to? And does the Feds view these conditions as favorable, even if the reasons for them are not?
So we're seeing this particularly in service industries, where there's still lots and lots of job openings, and many people who used to work in service industries, relatively low paid jobs, but we're seeing incentives to go back in. I mean, there clearly is a very, very high level of demand for people to come into these jobs. And for whatever reason, people are taking a little bit of time to look maybe for a better job. And knowing that they're going to go back, these are people who were working in 2020 in February. They want to work. These are people who want to work, right? But they may be taking a little bit of extra time in many cases to look for a job that pays better, or that they like better, or their preferences for working from home may have changed. They might want to find a job where they can work from home. Who knows? But in any case, we're seeing difficulty in matching jobs and people up. And there really isn't a precedent. We can't look back and see, well, the last time this happened. There is no last time that this happened. So we're kind of finding out as we go. But I really do think, come back in 6 months, there'll be a whole lot of these people back to work, and wages will have moved up a little bit for people at the low end, and that's not a bad thing.
Okay, great. Well, thank you so much, and thank you for joining us today. Madam Chair, you're back.
Thank you.
Thank you very much. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Madam Chair, for holding this hearing, and thank you, Chair Powell, for being with us today and sharing your insight on recent developments in the economy. We've all seen the inflation numbers. Some may say it's only temporary, or this was bound to happen coming out of the pandemic, and there may be some truth to those arguments, but I think any economic observer realizes that usually with things like this, there's not a singular issue causing our trouble, but rather several converging factors. What is most frustrating, I think, to me, is that despite the very real inflation we are experiencing, temporary or not, and that is yet to be truly determined, and it seems that while you, Mr. Chairman, are still firmly in the transitory inflation camp, the Federal Open Market Committee minutes showed there is an increasing amount of disagreement on the Board of Governors on just how temporary it may be. And what is most frustrating to me about this entire episode is that after all of the fiscal stimulus that Congress has provided for the economy since March of last year, and now even with the greatest levels of inflation that we have seen since the financial crisis, this Congress is seriously considering spending several $1 trillion more, and most likely it will nowhere near be paid for. And I know you will not speak to the merits or lack thereof of any specific pieces of legislation, and I'm not asking you to. But as the chair of the Federal Reserve, where one of your statutory mandates is inflation control, could you provide us an expectation of the type of inflation we should be prepared for if Congress was to spend another $3 trillion in the next few months, and let's just say that only $1 trillion of that would be paid for with an assortment of tax increases?
I wouldn't be able really to provide you a real time. I mean, that's what Congressional Budget Office will be happy to do, is make that forecast for you. That's not something I could do here on the spot.
I had a feeling that would be the answer, but I think the answer to this question is obvious. High levels of inflation we're seeing would only increase and stick around longer. We would certainly not have transitory inflation if we poured that amount of fiscal gas on the fire. I also think the labor shortage we are seeing is a big piece of this puzzle, as several of my colleagues have already alluded to. Dozens and dozens of businesses in my district cannot get people to return to work and have critical businesses in their supply chain with the same problem. This is creating scarcity, which results in higher inflation. In South Carolina, we are returning to work at a drastically higher rate than the rest of the country. Our unemployment claims are down 93% from the pandemic high last year, leading the country in this regard. A recent survey showed that 1.8 million people have turned down work because of the overly generous unemployment benefits. And that's a large chunk of that 9 million person labor gap we keep mentioning. Could this problem be avoided if Congress simply removed disincentives to return to work, such as the unemployment benefits that in many states are in place through September?
Well, I think that's already happened. I mean, those will be expiring right in September. By the end of September, essentially all of those benefits are gone. And in many states, they're already gone, as you know, in South Carolina. So we'll see that. I mean, I think it won't, whatever effect those things are having now, it won't last much longer.
Well, South Carolina depends on businesses in other states. And when those states are not able to produce whatever is being supplied to South Carolina, it's creating a problem for my state. So I just think that we have created a disincentive to return to work, and that's not good. One last question on inflation. If the Fed were to move to increase interest rates, one result would be the increased debt service cost to the federal government's $30 trillion plus debt. Is that a factor that you would take into consideration when deciding to potentially change the benchmark rate?
No, absolutely not.
So hundreds of billions of dollars in increased cost to our debt service is not a factor in that? No.
I mean, first of all, the market will anticipate that we are raising rates, so it's probably baked into some pretty significant extent. Secondly, we borrow all across the curve. So when we raise short-term rates, it doesn't necessarily have a big effect on the government's borrowing costs very quickly. In any case, we're here to achieve maximum employment, price stability, financial stability, supervise the banks, look after the payment system. We're not in a position of considering, that. And the United States doesn't have to be in a position where that kind of a consideration gets into monetary policy, and it will not.
The United States doesn't have to right now. So I guess hopefully we're always in that position. I've got a couple questions on cybersecurity. I will submit those for the record. And thank you for your time with that. Madam Chair, I yield back. Thank you.
Thank you very much. The gentleman from Massachusetts, Mr. Auchincloss, is now recognized for 5 minutes.
Thank you, Madam Chair, and Chairman Powell for being with us this afternoon. Many of my colleagues have asked some really terrific probing questions about inflation in the short term and the effects on our economy and on getting back to work. I wanted to zoom out a little bit and ask about more long-term effects. One of the trends over the last at least 25 years has been the increasing returns to capital relative to the returns to labor. And there's been a lot of good theories about why that's happening, from undermining workers' organizing power to increased automation and technology. But it's clear that it would require sort of a discontinuous event to break that trend. And this pandemic seems like it could be. We're seeing that businesses that are striving to get people back into the labor force and back to work are offering higher wages, more flexibility, better benefits, really both quantitative and non-quantitative remuneration for employment. Do you think that the COVID-19 pandemic could be a discontinuous event that could actually change the balance between returns to labor versus returns to capital, whether it could give sort of a secular jolt to workers' bargaining power in the long term?
I don't know. There are so many things that are possible. And there will be things that cut in different directions. I mean, a lot of what we've seen is just increasing returns to education and people with relatively low skills in education having relatively low, having stagnant incomes and wages, and people at the high end with lots of education receiving very high levels of compensation. And a lot of that is just productivity is amplified by technology and knowledge and the ability to use it, and by globalization too. So there are a lot of factors that go into that. And the pandemic will do a number of things, but it would be hard to assess which way it will point. This is a good conversation to have, but
I hear your point about the increasing returns to education and technology. Certainly that's been evident in Massachusetts in the life sciences and clean energy and cybersecurity spaces. But there's also a huge portion of the workforce, primarily service economy workers, whose jobs are not automatable, they're not routine, either manually or cognitively, and they can't be automated. And even they have had downward pressure on their wages in the preceding decades. But now we're starting to see an uptick in what they can command in the labor market. And I think them in particular, do you think that they can have persistent wage increases over the next few years as we recover?
So I know the research you're referring to. So that is very important research that shows exactly what you suggest. And if you saw people at the lower end getting paid more, it would be hard for anybody to be against that, right? And could we be seeing that? What we are seeing is sort of entry level.
So, that's going to go on for another about hour or so. I'm going to keep this transcript up here. So if you guys need any updates here, you can read along. But I don't know. Something came over me. I love Powell. I love Jerome Powell. They didn't really discuss too much. I'm glad and thankfully that you guys are here. Make sure you drop your like on the video before you leave because we're about to get into something new right now. But God bless you. We're live Monday through Friday, 30 minutes before open. Okay? So I love you. I hope you're having a good day. It's a good day. It's a good day to have a good day. But oh, yes. Yes. Yes, 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 yes. It is that time, ladies and gentlemen. So again, anything power related, we're still watching the market, so keep that up. But this is philo time. So if you do not like personal development, if you do not like positive concepts, you may not like this moment. This one is a little bit deep, but I encourage you to listen to it, okay? Don't, regardless of your background, belief, anything like that, if you don't get anything, this one's a good one. I'm telling you, I like it. I like it. We're going to talk some personal development, but if you don't like it, you should probably head out, hit your like on the way out. Make sure you hug somebody, hug yourself, maybe stretch a little bit, whatever you need to do. But it's going to be good, baby. It's going to be good. Are you ready for this? Are you ready, Chad? Are you ready, Chad? How are you feeling? How are you feeling? Good? You know what we're going to talk about today? Oh, it's a good one. We're going to talk about, well, let me ask you this. Let me ask you a question. What is the difference between being forgiven and being excused? That's how I'm starting. That's how we started right now. That's how we starting right now. What's the difference? Oh, I have such a positive message. I'm telling you, you better stay. I'm telling you, you better stay. Trust me. In the next 15 minutes, you're going to hear something that will blow your mind. Trust me. The after effects, heart, when you burp, coming in hot, deep. Damn, AT&T pushing 5G, big difference. Change of heart, acceptance. Whoa, oh. One, you did something wrong. Okay, dive right in, I guess. All ears, redemption, I'm ready. Never felt more grateful about my young hairline. Amen. Being excused does not dismiss sin. Forgiving is more personal. Forgiveness for the heart. Forgiving, caring to rectify. Excused is not caring to fix the issue. Ooh. You're not looking to be excused, but forgiving takes effort on both ends. Right versus wrong. It's a good one, huh? This is a good one. So listen, that's what we're going to talk about today. And before I dive into the main thing I need to give you, you are going to have to understand the difference between these two things. So forgiveness pretty much means not to hold anything against somebody, right? If you did something wrong against me, I'm going to forgive you. I mean, I hope all of you have seen forgiveness here in the chat, right? Again, you could break the rules. If you break the rules and get banned, I will not hold it against you in the future. We will unban you. We'll do something. Some of y'all troll a lot, you know, and sometimes it's hard to actually do that. But even now, think about that in many other ways, right? Forgiveness, you pretty much can not hold something against somebody, but it doesn't mean that nothing happened. Oh, y'all don't feel me. That's what I'm talking about right now. It doesn't mean that anything happened, or it means that something had to happen. You know, think about it. You had to have done something to ever get forgiveness, right? If you did nothing wrong, what is there to even forgive? Does that make sense? The key concept you have to understand with this is that without any blame, there is no forgiveness. That's why some people do get confused. They'll get banned and they won't take blame for what they did. They'll say, wait a minute, I didn't do anything, but you were just spewing political nonsense at people, attacking them for no reason, whatever it may be, right? Or maybe you were going to ask somebody forgiveness and then sometimes you don't think you did anything wrong. That wouldn't make sense. So what's the other side of the coin? Excuses, or being excused, right? And a lot of us probably want to get excused if you think about it. Most of the time, our behavior, myself included, I mean, this is just like I'm saying, it's hard. You have to really think about it. You know, we will ask for forgiveness, but a lot of times we'll even ask God for forgiveness, but what will end up happening? You know, we'll say, oh, well, God, forgive me. There was a extenuating circumstance. Oh, essentially, you made a mistake, but it's not your fault. Y'all don't feel me. You know, it's not our fault that we're human. It's not my fault that, you know, yeah, I did something, but it was because, you know, my banking and my checkings, and then there was like this, I grew up like this, and then he was acting like that, so I had to. Oh, you feel me? So do you see the difference? That's why some people want to be excused half the time. Some people, they don't want to be forgiven. They want to be excused for their behavior. Do you see the difference? Again, it's saying I did something wrong, but there's no blame on my part. Ooh. Ooh. It's a good one. It's a good one. I haven't got to the best part, okay? I haven't even got to the best part. I just need you to understand this background. Because we could get really, really deep with this, right? We could talk about forgiveness and excuses and then that's why loving your neighbor is so important, to be honest with you. You know, God will forgive you if you forgive others. I hope you know that. And if you don't believe in God, it's called damn karma. Think about it. A lot of us, if you want to be forgiven, you want good vibes, you want good things coming back to you, but you can't do it to other people. Yikes. Think about it. Think about how easy it is for us to have excuses for our own behavior, right? If I make a mistake, you make a mistake, you make a bad choice, you're going to justify it so heavy. You're going to be like, no. Well, yeah, you know, this is an excuse, but then when somebody offends you or makes a mistake towards you, we won't even believe their excuses nor excuse them, even if it was a good excuse. Oh. But I hope you understand the difference between forgiving and being excused. Because this is the point. Okay? This is the point that I'm talking about. I had a thought with this yesterday, and it was a pretty cool thought. And it really changed my outlook on things. And I hope it is able to give you the same outlook on some other stuff. But I want to talk about the forgiveness and blame, but I'm telling you, it's a really positive message. It's not that deep. I know I'm saying a lot of stuff. I'm bringing up God. I'm bringing up this. I'm bringing up that. You know, for those concepts alone, forgiveness and blame, people don't really like them. So it's not that deep. It's just very, very simple. Okay? And this is the simple thought. When you get to heaven, when it's all said and done, wherever it is, when the road is done for you, I think a lot of you will be surprised with what you were excused for and forgiven for. But more so what you were excused for. Ooh. Do y'all feel me on that? Just think about that. You die. You go to heaven. You talk to God. You're going through and you can see your life events, how it played out. And you remember that one moment and you thought you did something. You know, think about that for real. Some of you probably made some crazy mistakes. And you might even have had trouble forgiving yourself with certain things. Some of you walk around with the shame and you don't even know it. I see it. I love y'all. It's all positive vibes. That's why I have to always push myself to be more positive with all of you. And I hope all of you could do that with other people. Because come on, you can see it on people. You can see it when they type shit in the chat. Come on. You can see it when you walk around. You know people like that. Some it's you. So really think about that. But imagine when you get up there and you're going over some of those life events and you might realize something. You really will be probably surprised that God didn't hold you as accountable to something that you held yourself more accountable to, believe it or not. Now, this isn't a philo to do whatever you want. It's not saying this, please be rational in taking this. But hopefully you see what I'm saying here is that at the end of the day, he knew the truly extenuating circumstances. So some things you wanted to be excused, you really needed forgiveness. You were the one to blame. And I'm not saying it's going to be this or that. You know what I'm saying? Think about that. I'm just saying, though, you're going to look one day and you might say, well, I thought I didn't need forgiveness for that one. But then there's something that you thought you had to blame, but you didn't really know what was going on. Only God may ever know that. This is an element of philosophy where it is exploring free will and actions that you may have not even perceived. This is really deep. I don't know if you feel me on this. Like, think about it. Have you ever you did something in a certain situation and you thought that was probably the worst you could do, but in the nature of like how free will is, and if you really looked at it from the top down, that's why I'm saying if you were in heaven and you were looking down, to you at this point of view, you're like, yo, this was the worst thing ever. I can't believe I did that. I can't believe this happened. But then to a whole nother scale, it could have played out way different. And you would have had no idea. You probably you are not even aware of the potential evil that you could have committed. And then vice versa on the same end, you may have thought it was bad and you may have thought you fucked up somewhere. But when you look at it, there might have been a reason you didn't see. So all I'm trying to give you is this positive message. Is that you will think about that moment. When you go back up, when it's all said and done, wherever, I don't care what you believe in, afterlife, all of that. But when you go and look back at your life, I think a lot of people will be surprised with what was excused versus forgiven, but mainly what was excused. And why is that should be very exciting for some of you. Because I think it highlights a very special point that, one, God knows everything, but some of you might be holding a big weight on your shoulders, carrying a lot of stuff, when in reality, you really weren't the one to blame. And only time will show that. And this is a very fine line to walk. I hope you guys are with me on this. Because some people might take this the wrong way. You know what I'm saying? Some people legitimately might use this as an excuse to say, okay, I wasn't wrong ever. That's not true. But really, at the end of the day, if you really look down at how things have played out in your life, this should kind of give you a little bit of ease of heart and make you a little bit excited to know that, you may not be as judged as you are judging yourself. And when you really look at what has gone on and the extenuating circumstances, it may have been something you didn't even know. So you may have made a big mistake. You may have failed in some area. But have you really, what went into it? And is what I'm asking, is there a possibility that there is more to that story than what actually happened? And guess what? Here's the best part. If you already feel the blame for something, you already qualify for the forgiveness aspect, which is great. I think it would be better to seek forgiveness and be excused rather than seek excused without forgiveness. So, I think it's very simple. I think it's exciting. Again, it goes really, really deep, but I'm just keeping it simple. That's all it is. But just think about that moment. Honestly, think about when you go through your life, when it's done, though. And if there was this ability to see how things could have played out, or now when you actually eventually go back up and you get to see what was actually contributing to your life, you didn't know that what happened 5 years ago played into that moment, or that at that moment there was actually other people acting maliciously and you never had an idea about it. Oh, y'all don't feel me. This is really exciting. Because this, for me, it feels like it gives a certain level of hope, and that's why I want to bring that back here with what we talked about this week. But overall, I hope you understand it. I hope you're excited, and I hope a lot of you at the same time can accept what I'm saying, take it positively, but then also at the same time, please note, forgiveness is brought up in the Bible, in a lot of religious texts a lot, even the main prayer. Why? Why do they always say, forgive me? Why is the main prayer, Lord, forgive me as I forgive others who sinned against me? Why does it say it all the time? You would think such a basic concept of the said religion would be inherently implied all the time. Why? But why is it so repeated all the time? It's because this is something that needs to be polished and refined, and this is my warning with it. If you can't forgive others, what are you expecting back? And again, forgiveness and excuses are different. Some people have done you wrong and they want excuses for it. That's not what we're saying here, right? Someone could have stole something from you. I can forgive them. I won't hold it against them in the future, but I'm probably not going to leave stuff around them. You see what I'm saying? This isn't telling you to be a pushover. It's not telling you this, but just understand when it all comes down to excuses and forgiveness, your experience here with people, it's going to reflect that moment. I'm telling you, when you go up and it's all said and done and you look back at your life, you're going to set the standard to how you want it to play out as well, too. So, it's exciting. Should make you happy. Should be positive. You shouldn't condemn yourself as much. Or at the very least, this should open the window of opportunity for you to realize, wow, maybe there was something outside of my control that caused some of this, and I don't have to carry all the blame. And that's beautiful, and that's positive, and that could take you a long way. But then at the same time, if that makes you feel a certain way, and you can't even apply that to your human brother on earth, think about that. You got that? So, I hope it's exciting. But overall, I hope you guys can take the positivity with this. And I hope some of you can walk with your chin up, your chest to the sun, and realize, the journey is not over. And when you really do look back at your journey, you will realize what it has led to, And it's not probably, some things are what it seems, but something wasn't. And maybe some of these instances we hold against ourselves, it may not be what you actually thought. So what I'm trying to tell you is that blame is not yours to hold. But the fact that you want it is kind of, it highlights something about you, which isn't negative. But get rid of it in the sense of you could give that to somebody else and you might be able to feel it a little bit more. But overall, y'all are forgiven. I hope you take it. I hope you take it. It's a load off the shoulders. And you may have done a lot of things better than what you actually thought. And that's the positive message I want to give. That you have done a lot better than you may have perceived it. And when it's all said and done, at one point you will realize that. So keep that in mind as you move forward. And next time you have an option to make a good decision or a bad decision, just keep that in mind. Because a lot of people make a bad decision after thinking about what they're holding negative. But that's a positive one you should keep in your head. So I hope it's good, man. I hope it's good. And I hope you enjoy it. But that is your philosophy. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hi chat. X out that chat. Hit the thumbs up button. Second link for the Nightly Watch and main channel. First link for the Scream Alerts Bootcamp and Real Estate course. Follow me on Instagram at the Trading Fraternity. And I think I might just put Powell back on. Low key.
By raising rates at the cost of putting people at the bottom end of the income spectrum back to work? No, of course we wouldn't do that. So I think we're doing the right thing with what we do. And, we're ultimately giving people a shot to get a good job and get a good wage and accumulate that wealth.
I'm going to quickly interject. So in the same op-ed, Ms. Petro points out that companies are taking out cheap debt not to finance investments in infrastructure and workforce development, but rather to finance larger profits and stock buybacks. What's your response to that argument?
I think businesses make rational decisions generally about what they should invest in and when they should give money back to their shareholders. What that has to do with monetary policy is not clear to me. I see an economy that created 3.5% unemployment and wage gains for the lowest paid people over the last 2 years or so of the last expansion, and all of that in the context of low interest rates and accommodative monetary policy. So I guess I'm just not seeing that.
And I know the Fed has a statutory obligation to promote price stability and maximum employment. What are your thoughts on the relationship between monetary policy and inequality? What do you take to be your obligations with respect to wealth inequality in America?
We don't take inequality as a mandate. We think we can. We have these, disparate outcomes in the economy over the years, which have frankly, in some cases, gotten worse. And we see those as weighing on the potential for the economy. I think everyone does. If you don't have a chance to take part in contributing to and then benefiting from the economy, then the economy is not all that it can be. Now, what can the Fed do? We can support maximum employment. That's what we can do. We can push the job market to a place where, consistent with our price stability obligations, where jobs are widely available. Really, though, we can't be the lead on that. That really, it's fiscal policy and education and things like that are really going to matter much more over time than monetary policy. But I think it's appropriate for us to call it out and to use our tools as we can.
And my final question before my time expires is about just the multifamily housing market. In New York City, we draw more than half of our revenues from real estate. And when real estate fails, it has implications for a wide range of actors. It has implications for tenants who suffer from deferred maintenance. It has implications for property owners. It has implications for local governments, which depend heavily on property taxes and sewer and water fees, and it has implications for the financial system that might have an interest in those properties. What role can the Fed play in shoring up multifamily properties and real estate in America? And that'll be my final question.
Yeah, we really can't directly operate on that. I'd say what we do is we supervise banks who do lending, and we make sure that they have good risk management practices and conduct themselves professionally and with appropriate care in the loans that they make, and have capital to absorb losses should they happen.
Thank you very much. The gentleman's time has expired. The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes.
Thank you, Madam Chair, and welcome, Chairman Powell. It's good to see you again. Always enjoy our conversations. You've been asked a lot of questions today, a wide range of topics. And by the time we get to the end of the day here, it seems like
Yo.
everything's already been asked. I've got a whole bunch.
This is the guy with the Clint Eastwood books? Or who is that again? I remember him.
That I have on my end from the standpoint of concerns. I'm also the ranking member on small business, so these things affect small businesses as well. A lot of things you've been talking about today. And one of them that's really been quite harmful is this $300 unemployment benefit. This morning there was a Morning Consult poll that came out that said 1.8 million people turned down jobs due to the unemployment benefits. Recently there was another poll that said 40% can make more staying home than they can by drawing this benefit than they can by going to work. You indicated a while ago that you look at all the vulnerabilities. It would seem to me that this would be a vulnerability that you need to be factoring into your equations for the economy and the projections. Would you agree with that?
Well, but the thing is, those enhanced unemployment benefits are lapsing now, in many states already lapsing, and lapsing at the federal level by September. So that's, in macroeconomic time, that's a short period of time. So I do think that the unemployment insurance has been interacting with other things like the lack of childcare, like schools being closed in a lot of places, fear of COVID, various things. And I think you'll see that that's no longer a factor come the fall. It may take a while for things to.
Well, I would agree with that, but I would agree with that, but I would hope that you would agree also that it is a factor right now in your projections when you see that some states. And in fact, I have an article right here from the Wall Street Journal just a couple of weeks ago that indicates that Americans are leaving unemployment rolls more quickly in states cutting off benefits. That's the headline. So it would seem to me that that would be an extraneous variable or vulnerability that you would be taking in consideration. So I guess that's just my point, is that small businesses are directly affected by this. The numbers of folks are staggering when you start looking at those sort of things with concerns that they have. I have another issue I want to talk to you very quickly on here with regards to the IMF. I don't know if you saw this article, but I saw an article today with regards to, it said that a Biden administration backed international fund proposal to issue an unprecedented $650 billion worth of special drawing rights this year alone will also help reshape the international financial system. Would you like to comment on that? That seems to me, or have you seen the article, or are you aware of it, or?
So I'm familiar with the issue, and it's very much an issue for the Treasury Department and maybe for you, but it's not an issue for the Fed. We don't have any role in that at all.
Well, as the article goes on here, it talks about affecting the reserve currency status of the United States. So I would think that would be a pretty important take on that for you, would it not?
Yeah, again, the SDR issue is to do with funding the IMF. We are not, it would be hard to say that single action will be the thing that threatens our status as the reserve currency. And, we don't have, the Fed doesn't own own the reserve currency issue. That's an issue we share with other parts of the government as well.
Just quickly, I know the Chinese are trying to economically compete with us. Would you say that they are trying to weaponize their economy against us to try and take us over? Would that be a fair statement?
I would go so far as to say we certainly are in a strategic and economic competition with China, but ultimately these questions about competition with other countries are really for the government, for the administration, not for the Fed.
Well, all due respect, sir, this morning this hearing is about monetary policy and state of the economy. It would seem to me that things that would affect the economy, challenges to our economy, would be something to be talking about, especially when it's monetary policy. And it would seem that the Chinese, if our money and investment money is going over there to empower and help their economy against our economy, it looks to me like that would be something of interest to you, would it not?
Those are issues that they're absolutely in the province of the Treasury Department and the administration and the Congress. You've given us powerful tools and independence and all that. And if we wander all over the landscape taking on issues that are really not assigned to us, then I'd have a hard time explaining to you why we should be independent.
Okay. Mr. Chairman, I appreciate your conversation this morning. We're not really going to disagree on this one, but I think it is a very important issue with regards to our economy. Thank you very much, and I yield back, Madam Chair.
Thank you. The gentleman's time has expired. The gentlewoman from Ohio, Mrs. Beatty, is also the chair of the Subcommittee on Diversity and Inclusion. She is now recognized for 5 minutes.
Thank you so much, Madam Chair, for holding this hearing today, and to our ranking member. But also, let me just thank you to my friend, Director Powell. Thank you so much for being here and always being willing to reach out and discuss whether it's monetary policy or if we're looking at forecasting of what the future looks like on the state of the economy. First, I know you don't weigh in directly, but I think it's worth me noting that as I've been looking at the vacant seats, there is a vacant governor's seat at the Federal Reserve that has not been appointed yet. I know it's appointed by the president, but just a FYI to you, I'd like to see someone nominated with more diversity. You know, we've had long and ongoing conversations about diversity. But today, I want to ask the question, we've heard a lot because of the pandemic, and as you stated in your monetary report, which I've had an opportunity to go through, thank you. We've heard a lot about housing costs, lumber, et cetera. But housing is so important to us. I serve on the Housing Committee, and purchasing homes has continued to have an upward trajectory, especially in cities in the Midwest like my city. And despite the strong housing market, the Federal Reserve has continued to purchase mortgage-backed securities by $40 billion per month. Can you briefly explain the Federal Reserve's thought process on the need for these purchases, and if these purchases will have any effect on the cost of housing?
Sure. So we buy treasuries and mortgage-backed securities, and we really buy them for the same reason. We're not trying to. They're not intended to provide support directly to any industry, and including the housing industry. That said, low interest rates and asset purchases like that do keep longer-term interest rates low. They do support low mortgage rates, which does indirectly support or directly support the housing industry. So, but it's not that we're looking at the housing market and thinking this is for the housing market. It's really more that we want to support overall demand. And we want to support demand because we're still a long way from maximum employment. And we think it's appropriate. Even once people go back to work, start going back to work at higher rates, which we expect later this year, we still think it'll be, some time will have to take place to, for us to get all the way back to that place where we were in February of 2020 and or a place like that. That makes sense. So
let me quickly go to my second question. In the first few months of 2021, the price of lumber, and we've heard this earlier, skyrocketed to more than $17.30 per thousand board feet in May. But in the last few months, suppliers come back online. Prices have plunged to 60% and now are negative for the year. Is this the type of transitionary inflation that the Federal Reserve was anticipating? And how do you differentiate between the rising prices due to supplier constraints as a result of the pandemic and the potential long-term inflation?
So broadly, yes, that's the kind of thing that we'd like to see a lot more of. I mean, I wish we had seen more of it. Lumber, of course, is a great example, but we'd like to see a bunch more examples. But it's the same story. It's a situation where there's a shortage, there's a lot of demand, supply can't react, prices go up. In the case of lumber, there's just a lot of buying, almost panic buying. And we may be seeing some of that with used cars right now, where we have very, very high rates. But that's one of the things we expect is that our very flexible economy will equilibrate supply and demand, and you'll see inflation move down and maybe even have the prices themselves move down as we get here.
And that is a great answer, because that's another reason when we talk about infrastructure, we should be talking about housing and the supply and demand for housing. My last is basically a statement, my last 30 seconds. In your report, you have an area that's called special topics, and it talks about the uneven recovery in the labor force participation. You might want to take a look at it, because when it talks a great statement, it makes a true statement that factors are still contributing contributing to the disparities with certain populations, whether it's age, poverty, or race. Black Americans are not listed. And let me make it very clear. When we talk about unemployment rates, when we say it's great for America, it's double in the negative for Black folks that we're still struggling. You mentioned Hispanics, but there is no mention of Black Americans. So I'd like somebody to take a look at that, because we still are dealing with very high unemployment rates.
Thank you.
Thank you very much. The gentlelady's time has expired. The gentleman from Michigan, Mr. Huizinga, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. And, you know, there's been a lot of discussion about lumber from my colleague from Ohio, who just discussed that as to whether how that may or may not indicate transitory inflation as it actually buys lumber. One of the things that I do is we have a real estate developing firm as a family, and we are also in the sand and gravel operation. So I'm intimately involved in construction. I can tell you that the lumber that I had to buy at the beginning of this year, which is currently building the home that is hopefully going to be occupied, was going to be beginning of August. Now it looks like it's going to be more like middle of September because of supply constraints, labor constraints, demand, all the things that are going on. I'm not going to be able to lower that price of that condominium because of current lumber prices. Those are baked in and fixed. And that's what I think a lot of my colleagues aren't really understanding the effects of what those price increases mean in the longer run. And at the end of the day, I wish I could. I wish I could go back and rewrite that contract. But when it's already stick and concrete in the ground, and it's going up and it's got a roof on it, I can't do that. So that's going to be a problem that I think this administration is going to have to wrestle with. And
why he blurring out the background? How is this some Instagram effect?
About inflation today.
It's kind of tight.
I'm not going to dive too deep into it, but I needed to make sure that I lent my name, and as people are having the tally of who was bringing up inflation, I wanted to be one of those people. I didn't think I'd find myself in agreement with Larry Summers on some of his concerns about what's been going on with inflation. But whether it's Larry Summers or NFIB, which is saying that nearly half of all of their members, by the way, I'm also a member of NFIB, that they have had to do price increases which are affecting their customers. We've got to keep an eye on inflation. And my parting thought on this is, what I'm afraid of is we won't know it's too late until, frankly, it's too late. And that is the problem with having such a retrospective look back when you're diving into those numbers. So you don't have to respond to that. You're welcome to if you would like to, but I do want to hit on LIBOR. This is something that has not been brought up today. You have been very committed in your support, as well as other financial regulators, of completing the conversion away from the LIBOR-based interest rate benchmarks. It's absolutely essential, I do believe, to provide certainty for those tough legacy LIBOR contracts, and you have expressed that in the past. You've also stated in previous testimony that although the secure overnight rate funding rate, or SOFR, will serve a significant part of the market, you said, quote, market participants should seek to transition away from LIBOR in the manner that is most appropriate given their specific circumstances, close quote. And I've heard from many financial institutions in Michigan and across the country that SOFR doesn't necessarily fit all of their needs for their various sized institutions. Last few weeks, we've heard rhetoric coming out of members of the FSOC about the need to put parameters about the choice that financial institutions have to determine which benchmark replacement works best for their institution, their customers, or their lending activity. And while I agree there needs to be a standard for a qualified labor replacement rate, I'm concerned that some of the most recent statements sound like the Federal Reserve and other U.S. financial regulators may be changing their previous views before this committee, suggesting that SOFR, a rate based on the repo market, a market dominated by the largest money center banks, should be imposed on every institution and borrower as a one-size-fits-all solution. So Chair Powell, is the Federal Reserve's view that there should be a choice among qualified benchmarks as it relates to those regional and community institutions that believe there are more appropriate options other than SOFR, given their business model, lending activity size, and customer base?
Yes, and I mean, honestly, I think we've been pretty clear on that. We think people, use of SOFR is voluntary, and market participants can use other suitable replacement rates if they see fit.
So that SOFR needs to be put into legislation, or does there need to be more?
All right, he's gonna go on for another 45 minutes. We could keep it there, but I'd rather talk to you guys, or I'll take a nap. It's getting kind of sleepy. Oh, I need to turn on the AC. It's getting hot in here. So buy your long-term stocks. I am getting long-term, and I trade some options with a little Amazon and a little bit of Apple. I was getting bored. Well, he's talking about LIBOR and SOFR. They've gotten away from the inflation question. Powell did it again. Again, I think he started off very bullish this morning, or very hawkish or dovish, excuse me. And as it's continuing into today, I think, the market will probably do good coming into tomorrow based on the history of it. He hasn't really said anything crazy, more or less. So they're not off topic. It's just not as what's the word? It's not the main thing that's going to be the driver of the market there. Everybody wants to know about the rates, transitory or not. The Beige Book did come out, and it said some participants now think everything is transitory, or some of their business contacts. So that makes it interesting. Please hold. It's getting hot in here. So buy your long-term side. With a little bit of and a little bit of and now I like it when it's long term. So baby, what's the long term? Ooh. Oops, I did it again. I play with your rates and lost in the game. Oh pal, oops, I did it again. I raised interest rates. I don't know, it doesn't flow the same. Anyways, each of these meanings can be summed up to inflation is totally not happening and much diversity quotas. Kind of, for the most part. Again, we were, I think, in an official Fed capacity, we will get a better response from Powell. But again, I mean, even if you watched the watch list yesterday, I said we're going to watch for Powell, watch how the markets and bond balances back and forth. But none of this seemed really actionable until we get into the policy. I mean, even Powell even said it. Did you guys hear that? He gave a little hint in there. He said, in the next 6 months, kind of what he expects. He said, by the next 6 months, you'll be surprised how many people are going back to work. So I do, I believe him in that. And that's because that's what I was suspecting prior. Not necessarily employment, but overall, I think he's going to have to do something by then. And depending on what China does. Inflation is happening. Well, yes, inflation is occurring. You can't look at a 5% CPI and say that it's not. But at the end of the day, he's not worried about runaway inflation. They're saying it's happening. It's going to come down. It's not going to stay like this. And that's kind of that's the view. And you can't say there isn't inflation. Well, there is inflation no matter what. I mean, anybody who is even arguing on the factor of transitory, when it's all said and done, that just means that they think the inflation is going to be persistent and keep going. If you think it's not transitory, that's what you're assuming. But if you think it's transitory, then you're saying it's going to come back to normal. Is Viacom running block trade? A little bit. Ooh, big trade. And then those Bank of Americas, apparently those Beyond Meats from earlier today or earlier this week, those are up 40%. And then the Bank of America, I'm down 100% on it now, but I don't know if you guys saw, I came back to break even during the meeting, so it wasn't that bad. Welcome to Credit Spread Life. Yeah, Powell just said inflation, though moderate, will likely expand, or though elevated, will likely moderate. And someone get into with 2K, no credit, get into real estate. Not like buying a house in the sense of a traditional, like, if you only have $2,000 and you have no job and you want to go and try to buy a house a normal way, that's not going to work. But if you have $2,000 and a lot of time and are willing to call people and talk to people and put yourself out there, you could definitely do it with $2,000. I mean, I did do my first house flip occurred at 18 years old, and I was able to do that right out of high school, essentially, just by finding a good deal on a house. I found a house for very, very cheap, and when you have equity in the house, it makes it easier to get funding. I did save up money. It wasn't $2,000, but if I knew about wholesaling back then, I probably could have wholesaled it, but the market wasn't the same thing. Legs or arm. Today's a rest day. I hit chest tries yesterday, back buys the day before that, and then I did back buys again. I did twice the day before. So today I need a rest. I don't know. I kind of want to go though. We'll see how I feel. We'll see. Norton LifeLock in talks to buy Avast. I don't know how it's gonna affect them. Norton's dropping off that. Norton making a pop drop. News right there. Norton in talks to buy Avast. Train some forearms and grip. Ooh, that could be good. Yeah, Norton's dropping on that news. Yeah, target's coming up here towards the high. My thoughts on biotech. It's a hot market right now, and it's been you're entering a pretty important year. And especially by like 2022, I think any year that ends like on a multiple of 4 years, those are great for biotechs. Just because of the biotech cycle. Federal Reserve is not part of the government. No, they are independent. They are the only private company with the exclusive monopoly to print United States dollars. So even though they are not part of the government, they have the exclusive monopoly on being able to print currency. So nobody else, not even the government, can print currency. Only they can. It's a monopoly. Money print monopoly. MMT philosophy. Bitch, I got degrees, but I make more than the whole faculty. See you in your feelings, that ain't really good for profiting. You should use a philo, maybe go and take a jog and shit. Ooh. It's a good business model. Yeah, they got any monopoly is good, kind of. Big volume on Coca-Cola, not necessarily a big pop. Colt Real Estate meeting tonight, free 99. Yeah, Norton Life buy Avast at more than $8 billion. Stock is still reacting. Avast is not publicly traded. Oh, Willem came down. They got us. Asa. Oops, I did it again. I play with the bonds. Got lost in the rates. Oh, baby, baby. Oh, I did. That was a good one. There you go. Well, I could keep up the updates if you guys want the Powell stuff. Here it is. Like, latest update, he said he would be surprised if something would happen that would require the Fed to raise rates quickly without any warning, a.k.a. China. And China is not going to happen abruptly. They'll probably ease 2 more times. I think even during that meeting, you got the weed bill released too, I think. Quit playing games with my bonds. With my bonds. Stop. We can't. We still got hour and a half. Still got an hour and a half, baby. Hopefully your Wednesday is beautiful. Hopefully you're smiling. Hopefully you're feeling good. Hopefully, what did Pixie say? Pixie says, she's like, Josh just absolved everybody of their sins. You know, that wasn't me. I can't absolve any sins. But, you know, I know my people out there. I hope y'all can smile on your face. I hope you can relax. I hope you have a good day. Enjoy the rest of the year so you can have a nice, clear mind so that you can just take advantage of the opportunities we're going to get. It's going to be very, very good. It's going to be very, very good. So smile. Jumia down 8. Damn. Walmart's on the high. Norton making a lot of moves. Michael Brow withdrawing nomination for Pentagon weapons buyer. Biden was picked for undersecretary for acquisition. Brown was picked for undersecretary. So Pentagon's nomination for weapons buyer, he's like, I don't want. He's like, I'm out. That shows the market the day after House speaks. That was the chart. I'll have to find it on here. Let me find it on the other one, and I'll bring it up for you. Quit playing games with my heart. Finally convinced my brother to get the long term. He came in my room super pissed about his high growth getting smashed for months, ready to say F it. Well, when did you convince him to do it? But, I mean, time in the market beats time in the market. Just tell him don't look at it. That's the thing. If you pick up the stocks as like a, like if you need to look at it, it's not good. If that makes sense. Like, it's not like some people people like stocks like crypto. Like, I treat crypto how a lot of people treat stocks, and then that's why I get over crypto. And then I stop looking at it. But, like, if you view it as, like, an event, does that make sense? Like, I remember when I first started trading, like, I would be on 15-minute delay, and I would still refresh it. Y'all don't feel me. Y'all don't feel me. You know, back in the day, live quotes was, like, a big deal. Y'all don't feel me. Y'all don't feel me. Y'all really don't feel me. You know that back in my day, when my first trading experience, like, nobody had live quotes. You realize that, right? You were on a 15-minute delay no matter what. And then we would literally, I would sit there and I would refresh it until it took me like a month to figure that out, that I could only refresh it once every 15 minutes. Or I could refresh it and it would change, but like it was stupid. It still is, but now most of it, like, I still don't get live quotes because of it. Now most of it is you have a way easier access. Way, way easier access. $10. Yeah, I was paying $20 a trade commission back then. It was $19.99 a trade. And then it dropped to $9.99 and we were like, what? That's crazy. $9.99, we gonna get rich. And then they dropped it to $7.99. And then I was with E-Trade for so long, they gave me an exclusive $2.99 before. I was like, you know what I'm saying? It's crazy. So here's the chart. This is the day after testimony. Here's the 10-year. Then the next day performance, the Dow Jones, next day performance, SPY, next day performance, and then commodities. So since 2018, since Powell has spoke before Congress, commodities all but one time ended up positive the next day. This SPY 3 out of 7 times has ended up negative. So 4 out of 7 is positive. The Dow, 9 or 6 out of 7 times has ended up positive. And then the bonds, 5 out of 7 times have been very, very volatile. So there you go. Let me, I'll keep this one. I'm sure you guys are going to want this one on the watch list. This one's key. Let's get this one. There you go. Look, you have a pretty chart rate waiting for you. Look at that, man. We got you. We got you. Everything you need. Watch list. Second link. Don't miss anything. Amen. Amen. And then I showed this chart. That's how I know you're a boomer. Well, listen, man. I don't take offense to that. I'm not going to roast you for being young. You know what I'm saying? Because youth is amazing. And I hope you use it to the best of your abilities. You know what I'm saying? So you better be making a lot of money. That's all I'm saying. That's all. Okay? Because the boomers are rich as hell. Then that's why I don't take offense to that. No, I can't roast him. I don't need to roast him. I love him. There's nothing for me to, that's all. I just want to make sure he's good. You know, Anch talks a little sideways every now and then, like 9 out of 10 of his comments. So I let him slide, but I'm just making sure he knows that, you know, before you call someone boomer, you better be out booming the boomer. You see what I'm saying? You got to be out booming the boomer. That's all. Otherwise, you could learn from them. You know, what do they say in Richest Man in Babylon? Youth is like the shooting star. You know, it's a shooting star through the skies. Here today, it's gone tomorrow. It has a bright idea, but the older, the knowledge of wisdom is fixed like the moon and the sun. Oh, they don't feel me. And then here's another chart, though. This was during the whole thing. I think this chart is very interesting. This is literally the Case-Shiller Home Index. So do you guys realize what it's showing you? What is this showing with real estate prices? This is showing something. That's why, again, this is why prices have gone up a lot. But like really, like, see, at the x-axis is the dates. So this is that's the time frame. This is 2001. Here's 06, the real estate bubble. TPST Chick-fil-A upside, yeah, they're already up 28%. This one's been running all week, I think. Yeah. Just check little bro's screen time. 17 hours on TikTok in the last 4 days. How many is that? That's 4 hours a day? Damn, that's 4 hours and 15 minutes a day. That's school. Does he go to school? The fuck? He'd be like, yo, G. Yeah, Troy called that out at 5%. He said, put respect on my name. You know what I'm saying? He said, I've been calling him out. Amen. Troy killer. We knew Troy was a killer from a long, long time ago. Before he had that 1-year badge, we knew. It's hot girl. No, it's hot stock summer. It's hot stock summer. Oh, it's on summer though. Oh, okay. But what do you notice about this chart with real estate? Come on, man. Y'all really gonna play me like that? Y'all really gonna play me like that, huh? You're gonna play me on this. They gonna play me on this. That's cool. That's fine. Y'all gonna play me on the real estate chart. Everyone gonna act like they don't see anything. What do you see with the Case-Shiller Home Index? It says bubble territory, but like that's the I disagree with the pretty title. I disagree. Can I edit the title? I can't edit the title. Inverse head and shoulders. That's exactly what I was looking at. I was like, look at the inverse fucking head and shoulder. Ding, 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 ding. Nah. Real estate, man. The prices aren't that expensive. Unpopular opinion. You mean to tell me House prices are just peaking. Let me see. Can we do it? How do I annotate this? So where are we? You're right there. You're right there. This is where we are. You're back to 06 prices. That's crazy. That's not high at all. That means you're telling me almost 20 years later. So what, 14 years later? 15 years later? Well, it can't be right because this is this is the home index. So this is based off of the index, but it's showing you, I think it's just the U.S. national home price. So obviously some areas more than others, but when you're looking at that in general, I mean, because the fact that index is moving up shows a lot, but it's the point is the real estate market, even if it's year over year, anything, this is all bringing back. You're not seeing anything that hasn't been seen before, and it's not as if you're entering a level where it's like, oh my God. Does that make sense? Where it's if it was, I know the prices are high, but like prices were moving very, very aggressively back then. It was a much, much different story. That's what I'm saying. There's a lot more money in the economy. The dollar's weaker. I would argue that prices were a lot higher then, and to a degree. Like 05 prices were crazy. It's moving more aggressive. I mean, well, this was also factoring the pandemic. Even if you compared it to the stock market, it just like this looks like Amazon. But then when you're pulling it out on the 20-year, Amazon is at all-time highs. Tech is at all-time highs. NASDAQ, S&P. But if you want to look at the home index of home prices, it is not at all-time highs. Pretty much, you've seen a price move like this in real estate. It is not being eclipsed where most other assets have eclipsed their highs on everything. Even bonds had the biggest rally ever when they went down like they did. So everything from bonds to NASDAQ, tech stocks, even value stocks are hitting all-time highs. But real estate is not even, it's now approaching the craziness that it's got without the same amount of leverage. So I think it's a cool chart. I think it highlights a lot. TPST popping again. The bubble in real estate hasn't started yet. Well, kind of not really. I mean, that's what I was saying. I mean, remember I was saying in January, February when Dogecoin was going up, I said the real move is going to be a real estate bubble. I said we want to front run it. That's why I sent you guys, that's why I showed you non-QM loans. And then what happened? Rates and everything went crazy. I'm drained. I hit the gym hard last night. That happened to me too. Bro, I woke up today and like my triceps were still jello. You know that jello feeling after you work out, like 2 hours when you get home and they're like jello-y? Damn, Overstock is down 9.9, the most in over 2 months. Jeez. We're at 06 levels. Wait till we're at 21 levels. I agree. The bubble is it's dependent, it seems. Exactly. I agree with that. And that's why I'm saying back then, for prices to go that high back then, that was ridiculous. That's where you have to really look. Like, people don't understand how crazy it was, but like, look at the effect of the dollar, the money supply, all of that. For a house to be, for the national average to be at the same price it was 15 years ago, that's not, it's hard to argue that you're in that same bubble territory, whereas Bitcoin is reaching all-time highs, you know, or was at least a couple months ago during the same time. Like 06 was crazy. The price moves. It was similar to like this though, where you were buying houses and you would be able to buy a house and then resell it if a month later and make $100,000. It was just crazy. But the prices were a lot higher then. Because again, and there was a lot more leverage, but there was not as much money. Well, housing, it all depends though, and it does suck though, because when it comes down to it, you do have a lot of people in like people are weird, essentially. Like I don't know how to explain it, where there's good deal. You have to find a deal with it. But now, like, I look at houses every day and I see people, you know, you see idiots. Like, you see people getting greedy. Like, I can see it, like, even to the point you'll notice it. Like, if you ever see a house on like Zillow and it doesn't show you his estimate, it's because the owner is just trying to fucking pump it. That means he's just trying to sell it super high. Again, we even have clients who are just saying, hey, I want to list my house $200,000 above what my neighbor sold his house for. So that's what that's what I'm saying. You could get a good deal if you know what the value is, even if you buy it on market, but you can't what's it called? You can't do it. Oh, I got outbid the other day. Are you ready for this? Are you ready for this, though? I want to tell you these stories, but I feel like it bothers some of you. I'm just trying to share my experience in the market so you guys can see. But I really encourage you, if you're going to hear these stories and feel like distraught or negative that you're never going to get a house, please, like, that's the damn devil. I rebuke that. That's not why I'm sharing you these stories. It's so you can see, like, I hope you guys are looking at you're witnessing me do it. I'm talking about it, everything else, but it's not like you're not watching me FOMO on it. It's a lot different than stocks or anything like that. And that's why I'm saying, like, I'm sharing missed opportunities, or I'm sharing you my failures with it, or what's really happening, so that you don't so you could get a reality of what's going on for everybody. It's not, and don't let that discourage you, because in all of these stories that I've given you, I've literally kept shopping. You know what I'm saying? And I've still bought houses. I've found some good deals here and there, but I'm still going and doing it, okay? So that's why I'll share this story with you. It's ridiculous. It's fucking stupid. You're going to hear it and you're going to be like, this is the problem. I'm never going to get a house. This is why. But that's a lie. You will get a house. And if you really set a goal to it and you want to do it, it's totally possible. Not everybody's like this. And the market is so sporadic right now, even then, to the point where I'll tell you this much. I put in an offer above asking, and I even told Lending Tips, I said, listen, if they accept it, I don't want it. Think about that from a buyer perspective. Think about that. Don't forget the finickiness of humans. So I bid on this house. It was $1.5 million, right? And I offered 1.777. And, I did my 777 trick, right? So I bid $277,000 above asking price. Why? Because I looked at the house. They listed it at 1.5. This house was easy worth 800. Easy 800 minimum. And if I fixed it, I could put $100,000 into it. I probably would have sold this for like $3.5 million. It was the house was valued at way more. The lady listed it way too low. Way too low. That's why I could have justified pricing over. And that's why I was like, I want this house. It was a deal. It was a deal. Even at 177, I was going to make money on it. Right? And $100K only, probably less. Honestly, it wasn't too crazy. It just had good location, good view, good everything on there. TLT popping. So that's what happened. And 1,777, 277,000 above list price. What do you think happened? It's very easy to see how this story ended up. But even then, I even said this though Because I wanted to come in at 165, and Lending Tip said go 17. He was like, trust me, it's worth way more. He was like, you're not going to get accepted. But I even told him, I said, hey, if she accepts 1.7, I don't want it. I said, I don't want it. Because then I was like, if she accepts 1.7, I think 1.6, you know, there's a big divergence right now. But the agent hits us up. We talked to the agent. She saw us in person. You know, we gave her a nice story with it. We said, you know, we were being looking. We're not in a rush, but we could do this. We got everything she needed. And then she says, we've taken a higher offer. Guess who bought the house? The damn neighbor. The neighbor fucking bought the house. And she wouldn't even counter us. I said, can you counter us? I said, can we get a counter offer? We'll pay more then. What do you want? And then she said, we don't want a counter offer. So literally, think about that. She didn't even counter me. We offered almost 300 grand above asking, and she didn't even counter it. She wasted your time. I don't see it as a waste of time, because if I was right, I would have made like $1 million. You know, I'm not bad with it. Sounds like they colluded. Well, I don't care. We shoot your shot, baby. Shoot your shot. So why you had to meet? Because we wanted to see the house. She was there. There's nothing that you see. That's part of the game. Sometimes it gets frustrating, but I mean, y'all looking at it way too deep. There's a deal. You have a price. Put an offer. If it hits, it hits. If it doesn't, move on to the next one. You're gonna get one eventually. Y'all don't feel me. Y'all don't feel me. If it doesn't hit by Roblox, that's what I did in the beginning. I've been getting a lot more. I've just, I have been slowing down on the houses. I'm just kind of, just letting people do their thing. I don't really care. Oh man, that house sold for $650. Run it. That's good. Why wouldn't you go through with the offer? Because as a buyer, I'm like, wait a minute. If she accepted my offer at 1.7, that means we were wrong about everybody else bidding on it. Because it looked very like that's what I said 165, but Lending Tips was like, dude, I saw everybody at the property there. He went back twice and he was like, it's gonna go for 1.7 minimum. He was like, you won't even get entertained at 1.6, and we didn't even get entertained at 1.77. I don't even know what the neighbor bought it for. We'll find out in 30 days. But that's why I'm saying if she accepted 1.7, I would have been like, this is too much. I would have been like, that means she didn't get a better offer. That's why I'd be like, nah, I'm not down. I'm not down. And that's what I'm saying. There's a lot of people like that in the market where people will go back and forth with it. And that's what I'm saying. You have that ability where you just got to make sure you get a good deal. Like there's been a lot of, bro, you don't know how many people have been doing that where they've been FOMOing. They really want a house. They go over, and then what happens? They get their offer accepted. And then what happens? And then what happens? They get buyer's remorse without even buying the house. That's it. Then they're like, They're like, I don't know. Maybe we could get something else. I don't know. Maybe it's so funny. You'll spend 5 months looking for a house, getting outbid on all of them, and then you'll get it. And then you'll eventually be like, I don't know. So welcome to real estate, but it's fun. I think there's a lot of opportunities, but even then, I'm still sticking by my 10-year target on real estate. I think the best 10-year investment right now is real estate, hands down. And I said that in the beginning of the year. I stand by it. I see real estate as lagging behind every single financial asset class right now. But I'm not. I've already made. I front ran it a lot. So I'm just kind of. I still want more, but now I'm being a little bit more picky, unless it's like super good deal. That's it. All you have to do is just look and steal value. That's it. All you got to do is just wait, find a good play, and then make your offer, and that's it. And wait till it will fall in your lap if you're diligent enough and you keep looking. So keep your rental, yeah, or sell it to me, but I would keep it. You know, that's the best part. I mean, I'll buy it from you, as long as you're not. If you want crazy market rates, you want to deal with people, and that, go list it. But most people, you know, they ask me that. They say, "Should I sell my rental?" I say, "I'll buy it from you, dude." I say that to people. That's why I'm like, if I want to buy it from you, what does that tell you? I fucking want it for a reason. And that's what people are missing. People are missing that point. And I said it in the video months ago, when people are overbidding for a house and you're watching that trend happen massively across the nation, there's a reason why people are pricing that into the future. They see the same exact thing. At least a lot of people do. So I would keep it. Honestly, if you have a good position, if it's paying for itself, you may have the opportunity to get a nice cash payment. But like, you know, you don't be a rapper. Again, it's like signing a record deal. A lot of people see the value of their homes right now and they want to sell it. And then they're like, okay, I'm going to sell it. I could get a big dollar amount. And you see that dollar amount, like, you know, like Lil Yachty makes more money than Tupac did. You know what I'm saying? That's crazy. That's crazy. Lil Yachty has more earnings from rap music than any other, you know, anybody from the 80s or 90s. Any of them. Why? They take, again, think about the money and the offers there. They signed 5-10-year deals back then. They go and they got their advances, all of that. That's all it is. It's so that's why I'm saying, it's like, some people are like, damn, I could get 200 grand for my house. 10 years, you're going to get $1 million. Maybe. Don't take that with a grain of salt, but that's what I'm saying, that in the long term, there's probably going to be more that it's offering. You know, he's a Virgo too. I'm not a Virgo. Is there any way around condos saying no rentals? No. It just, even if that was your plan, don't buy it. Don't deal with that. It's going to be a nightmare. So, yep, take over the HOA. That's a long process. That's an activist investor move. I see the house I sent you. Yeah, actually, that was a really good one. I liked it. I said I was gonna offer on it, but they made you can't offer until you see the house. That's what they said. So there's probably something there. LA, where's a decent place? I like, for a good deal, Sherman Oaks, Studio City. Can't go wrong in LA. It's the Valley, but you have cheaper homes. You have some good deals there. Or West Hollywood if you want a condo. Good rents and they're cheaper. Most you could bid sight unseen, but there was a specific house Robert sent me, and it looked like a really nice one. It had a good view. It was really, really cheap. And I was like, wow, I like it. It was really good. But then when they usually say that means the house looks different. So whenever they say they won't let you offer on it until you see it, that means that there's probably something. You're going to walk into the house and there might be like a kid in the basement or something. I don't know, some crazy shit. Or it's going to be lit half on fire, or it's going to have, termites and half the house is sinking. You know what I'm saying? Would you pay 3.6 in Encinitas, Ocean View, 6 bedrooms next to Tony Hawk? I could email. Yeah. Tradingfraternity@gmail.com. But if the house is comp for it at $2 million, I would say you're lucky I'm Christian, because that's some bullshit that you're running by me. You know what I'm saying? Because I'll be like, that's bullshit that you think I'm going to pay you $1.5 million more over the comps. That, I say you got the wrong one, buddy. You got the wrong one. But if that's the current comps and it's around that value, and I could, make a value assessment and it's a fair price, I would be more than interested. Other than that, though, it's not then, you know, that's what I've been getting a lot of lately. PLXP, is this the Walmart drug? You forget about companies like Boxable making sustainable, affordable housing. People will not be able to afford properties. I've seen those. Those are going to be cool, and that's going to be in certain areas. But I think those will be used for like rentals. But people will be able to afford houses. I don't think, you know, house prices will go up, and house prices in the 70s till now have went up a lot. People could still afford houses. Other things are going to adjust with it, and that's the whole logic there with it. So, I mean, I don't think you guys are all going to miss out. Like, no matter what, everybody will have a chance to buy a house at some point, assuming you're not, you know, fucking around and, like, you know, blowing your money everywhere, or, you know what I'm saying? Like, if you are like the traditional model of saving and having a job and setting aside money, and now you factor in a long term, all of that, your time is going to come, and that's in the real estate market moves a lot to a degree. So that's it. This is a funny article. This came across The Wire. Why are the biggest trolls middle-aged women? At the age of 43 with 3 kids under my belt, I'm reluctant to admit it, but I probably fall into the category of middle-aged mom. And apparently, middle-aged mothers are more likely to be online trolls, most likely, secretly or not so secretly. Came on Tuesday, a Lifestyle Institute appeared in front of the Digital Culture Media Committee. Part of his research into growth and influence. During her evidence, she revealed that a majority of negative comments she receives online, often in response to a sponsored paid post by an advertiser or something as simple as a selfie, came from women with children. These are grown women with actually very good jobs and seemingly very good lives who are doing this. And that's the saddest part about all of it. So from now on, I'm going to call some of you middle-aged women. At a glance, it's easy for me to see why feelings of envy might arise from Sheldon's Instagram. Some 127,000 followers on her holidays. She seemed carefree. Let's see, this is too long. That's pretty funny. Well, there you have it. Damn, my wife made the move. My wife made the news. That's funny. Uh-oh. So people are getting ready for a big bond move. Position squaring. Open interest in 10-year usually Treasury notes as low as since May. Mounting anxiety about inflation is taking toll on the U.S. Treasury futures. Open interest in September 21, 10-year notes fell 1.3 to 4.1 million on Tuesday, the lowest in its life as the front month contract after the government consumer price report showed bigger than expected increases in June, sparked by a bond market sell-off. The number of 10-year futures contracts in use has fallen to 266,000 from June 16 peak, a decline worth 22.3 million in risk peer basis point move in yield. Get this over here. That's wild. Ooh, another chart. More pretty charts. You like them? You like your pretty charts? Big tech high flyers are cheaper than the broader sector. Tech high flyers are often loved for the strength of their finances and loathed for the hefty price tag that comes with it, but maybe things aren't as bad as many think. As prices of so-called FAAMG of FANG stocks have advanced, so have analyst estimates on the cohort's future profits. As a result, the FANG high flyers, Facebook, Amazon, Apple, Microsoft, and Alphabet, now trade below the average multiple of the broader tech sector for the first time since 2013. Data compiled by Sanford C. Bernstein. Here's a chart from the analysis. That's crazy, actually. So pretty much the price to earnings on dog shit tech has risen so much that now the premiums and multiples on big tech is lower because they've raised their earnings estimates while the prices have stayed the same while everything else has rocketed. It's pretty funny. That's pretty surprising. First time since 2013. And then Powell's over right now. They finished 4 minutes ago. I don't know if that's broadening market. I think it's more or less that's just price to earnings. That's just showing you, I think that's the market dislocating from real value overall. Like I'm saying, I think, people have been so willing to buy, when you buy a stock that doesn't make money, or if you buy a stock that doesn't make a lot of money, like even Roblox is an example, right? You're paying a high premium, you're paying a high future growth. So with all of these other stocks holding these high PEs and price to earnings, and then now big tech hasn't really moved too much, and then they're raising their guidance, that is saying that, what's ended up happening is now you're paying a cheaper price to earnings multiple on bigger tech than some less safer options. Apple on fire. Yeah, Tesla's a good example of high future growth. New all-time high. 12:05 power hour. Power hour. What's your experience renting in not so great neighborhoods? Oh, all sorts of shit. Like, you mean like buying a rental in like just like a shitty ass place? Like, how shitty are we talking here? Like, I have a friend of mine, he bought like a 50 or 100 houses in Buffalo back in the day, and he got sued because 2 people got shot in a drive-by. And then there's other properties, it's so bad that you will even have difficulty collecting rent, or rental companies won't even service those areas. So, yeah, there's a lot of crazy shit. College towns are decent, but college towns don't really, you have to understand, a college renter is there. It's his property. So it's everybody, everybody could get, you own the house. But college houses are good. You could get high rent. You get a high yield on college properties, but then you have to understand the renters. Like, that's why, like, if you've never been to college, you may not get it, but like, I would hate, like, I love college properties, but I hate them at the same time. You're just going to get dog shit renter. They're going to destroy your house. They're going to flush fucking beer cans down the toilet and then make the whole house flood. Like, yeah, they just break shit. They break shit. They party. It's just not like, you cannot expect, you can't expect the property to be maintained, but you will get paid high yield. You'll get paid double what you'll get. Go rent in a college town, your cap rate is going to be double, but the property class is going to be awful. It's going to be a lower class property, probably a C class. You're going to need to fix it up every 12 months minimum. I got evicted from my first ever apartment in college. So then, why are you asking me about my experience? You know what rent. You know what it's like. You like, hi Josh, have you ever dealt with difficult renters? I have 16 evictions on my. Like, what? Come on, you know what it's like. Levi and Apple, the benefit of $300 per child refund paid. That's like Mustafa asking me about Off-White t-shirts. So what the fuck? Like, wow, you would know that better than me. You have personal experience with it. I am he. Can you recommend any apps for finding roommates for college? Don't. That's the last thing. That's your worst case scenario, G, okay? Either let this school put you with the random. Otherwise, if you going to end up with some weird Craigslist roommates. You're going to be 16 people living in that house. Maybe go on Tinder. I don't know. Like, are you into older women? No, I'm kidding. I'm totally kidding. But maybe social media on there. If you know anybody, if that probably would be the best. Or if you could find like maybe a small one. But just try to roommate with somebody in the college. It was the best bet. Maybe you could ask your school if they have any resources, or join a school group. I would say, like, if you're a freshman or a sophomore, they usually have like those Facebook groups for the college, and then you'll see there, and then like go, try to find normal people. But the last thing you want to deal with in college. I've heard the weirdest roommate stories of people who like move to a town and then they just get like a room off Craigslist, and then it's just like sometimes it's very good, sometimes it's very bad. It's really a coin flip. Craigslist misconnections. Yeah, I usually take the random assignment. That's what I did. And it was crazy actually. The first month of school, it took a month for people. The roommate I got in my dorm, people thought he was my dad for the first month. So like, he would hang out with us. He was cool at first, kind of. It was just like he was definitely like different from me. A lot, but like, he was my roommate. I was like, let's go. I was like, let's go party, bro. I vibe, you know what I'm saying? Like, I was like, fuck it, it's college. I was like, let's go. We gonna get this kid outside. He want to party, let's party. And I took him with me. And then like after a month, somebody came up and asked me, and they said, why is your dad still here? Like, isn't orientation over? And like, they're like, why do you bring him to all the parties? Like, I'm like, that's not my dad. That's my dorm roommate. And then there was a lot of other experiences that I probably cannot share because, yeah, it was crazy. It was an interesting experience. That wasn't a good roommate story is what I'll tell you. It just was not a good roommate story. It just was not. No, he was a little bit older, but then he looked older, and like he dressed older. I looked really young. Like we really had like father-son vibes going on there. I could see it. I see where they were coming from. You know what I'm saying? I was like, okay. Dorm life was crazy, yeah. It's a good time, though. Josh looked 12 years old. I have a pic, bro. I was skinny. Bro, I was built so different. Like, I have a pic, bro. I was tiny. Like, I had an 8-pack. That's how, like, I was like those guys who were just skinny with, like, muscles, you know what I'm saying? Like, I didn't have big muscles, but, like, I was just skinny. So I had an 8-pack, and, like, oh, my, bro, I was built different. I looked like a twig. I saw a picture. My mom sent it to me, and I was like, what? I was, like, 18, 19. I was a twig. It was crazy. Like, it was crazy. Like, I was really small. That's why. It's just, like, it was just, I am built different. Yes, now I am. It's called fast food and sitting down in front of a computer screen and then no car like that. I was young. I was running around. I'd have to walk to the gym back then in college. It's crazy. And y'all like, I don't need push-ups. I got technical analysis. Who gonna need push-ups? I gotta make this money. You know what I'm saying? I don't need none of that push-up. What are you doing, man? We got focus. Focus. Bro, 19, people were confusing my roommate with my dad. Okay? That's it, the long term. I was just long terming back then. I didn't get back into like trading till like end of college when I was like, fuck all this. This is all stupid. Right when I was like, all these kids immature as hell, and I'm immature myself, but still. I was like, this is it. We got to keep, college is fun for 2 years. Best time of my life by far. That's why I hope none of you knock college too hard. If you have the opportunity, I would do it just to have fun and to network. Again, you'll learn a lot of stuff too if you're actually, if you apply yourself. I did apply myself a lot with it. So, I learned a lot of what I learned in college, or at least I was exposed to it in terms of political economics, economics in general. You know, I always had a knack for it, but it was, you know, you could get a crazy experience out of there. I would go if you have the opportunity, and if it's not like, you know, if it's not going to put you in too bad of a financial situation, you should do it. Yeah, I graduated early because I came in with like AP credits, and then I was you know, I was on a budget, so I had to do that. I dropped out for a semester. And then I came back. I dropped out to pursue a business. I went to LA, and then I had to come back because I was like, this isn't. I was like, you know, I could finish it, but I had a lot of extra credit, and I did summer sessions, so because it was cheaper, because I had to pay for college out of state. So if I did a summer session, here's a little life hack for you. If you go to an out of state college, you could sign up for 15 units on the summer session, and they all charge you the same price as in-state for summer. So pretty much I was able to knock out a year of college at in-state tuition by doing 2 summer sessions, and then I did a 3rd summer session to make up for me dropping out. Yeah. Ghetto spread in college, baby. Yeah, and summer's easy. Bro, it's so easy. I would do it online. I was in San Diego doing 15 credits. This was before they had Zoom. I would just do it all online. I would literally, I got almost a year and a half of college by fucking posting on forums. They just put you in like a little classroom, and you have to just do discussion boards, and then you get quizzes and tests. It's so easy. It was crazy. No, I'm from San Diego, but I didn't go to San Diego. I went to Arizona. Bear down, baby. And I cried when I got accepted to Arizona because I thought it was a shit school. I was so sad. I was like, I'm staying home. I'm going to community college. I'm staying home. I worked this hard. I did 6 AP classes just so I could go to Arizona. I thought I was going to Harvard, bro. Amazon selling. Is that why? Spy's coming down. Everything's coming down. Yeah, I cried. And then my brother slapped me. Because I was a bitch. We went to the orientation. He slapped the shit out of me and yelled at me. He's like, bro, you're the only one with the opportunity who actually took school seriously and could actually go to a college, and you're crying right now. I was like, wow. He said, you need to have an open mind. He said, you can't be a little bitch. But he said, if you can have an open mind and then see if you like it, that's it. Your brother slaps me when I was 18. Yeah, I think he would slap me today too. I don't think he would hesitate, honestly. We're not that type of family. We're not really confined to social norms. That's why I tell some of you. What do you think I tell some of you? I said, I'll slap you. That's why I say some of y'all just need a slap. I'm telling a slap, bro. It'll change your whole life. I'm telling you. It'll change your whole. You just get slapped. You get a bitch slapped once. You're going to be like, did he just. You like, what? Y'all, you going to rethink your whole life. Y'all don't feel me. Arizona have the hottest girls. I mean, it was very competitive. It was great. But I've moved on from my college days. You know, it's a lot of it's a certain type. If you like blonde hair, yeah, even just blonde on everybody, like it just don't matter what, just everybody was blonde. That's it. If you like blonde girls, it don't matter. Like I saw Arab girls at Arizona and they were blonde. I'm like, how did that even? Whatever. Everybody blonde. Everybody fucking blonde. It was just crazy. Even the guys were blonde. You know, you know how many blonde kids were in my frat? It was crazy. I was like, damn, that's crazy. I applied to a lot of places, but I got denied everywhere. That's why I was so devastated. and I had really good grades. I had a good ACT. My SAT was dog shit, but my ACT was fire. I had a lot of AP credits. I thought I was supposed to go to a good college. Like, I genuinely thought I was gonna go to UCLA, Stanford, Harvard, and then something happened. God, let thy will be done, and that's it. And then I was like, fuck. You had blonde Jerry curls? Nah, I didn't even have, bro. I had the freshest lineup. I was 18. I still had a hairline. You fucking crazy. Ooh, I had the nicest taper fade with the lineup. Point the edges, no box shit. Point them. Oh, y'all don't feel me. I had, ooh. You crazy. You crazy. Illest lineup in the game for like a year and a half. That's it. Once you start hitting like 20, 21, I was like, time keeps on slipping, slipping, slipping into my hairline. Yeah, everyone was blonde except me. I was exotic. I got that. It was great. And from California. You know that? I didn't know that. And watch out for the SPY here if we break below, because bonds might hit another high. If you break below here, it's going to change the rest of the trend. This is where you started dropping earlier, so keep your eye on there. But yeah, I didn't know. I was saying this to somebody the other day. They're going to college, and I was telling them that. They're like, what do you say when you talk to people? Like, I was like, bro, just tell them where you're from. Bro, people used to trip. I don't know if they do it now, but when you go to college and you meet a bunch of people, everybody, I would say California, and they would trip like you were the Prince of Qatar or some shit. It was crazy. California, people are like, you're from California? What's it like? Whoa. They like instantly just thought you were just a different animal. It was crazy. They were like, what? That's nuts. They're like, what? Dog, everyone trips. I lived there my whole life. I'm like, what do you mean? Like, yeah, I thought San Diego was whack. And everybody's like, no, you went there? You lived there? What was that like? How must it be? You guys got good weed, huh? I'm like, yeah, okay. That's how you acted when you met people from Cal. So crazy. So crazy. Yeah, Keanu, wow, that's crazy. Why am I talking like from California? Damn. Do ladies toss themselves on you? No, I'm ugly and short, so I had to work a little bit harder. But, it wasn't out of the question, though. I still, And then when you go to college, for some of the ugly short guys out there, there's like really hot girls, and they don't even know they're hot because they went to, they like grew up in the middle of Ohio or some shit. So they only had like 15 people at their school, right? And then they go to college, and then they're at this dorm, and they're trying to meet everybody. And then all of a sudden, they don't even understand how hot they are. It's this, no, that was a trip. I had to digest that. That was an uncrowded trade back then. Walgreens raising dividend. Yeah, they boost quarterly dividend to they raised it 2.1%. Ooh. So many girls. Nah, man, Instagram kind of ruined it for you, man. That's every girl. Now, you get an Instagram, you're hot. That's it. That's the new 2021 logic. But no, that's a good one. I got you. I got tips for days for some of y'all. Y'all need help. That's why. Just keep your head in the game. Work hard. Don't let anybody tell you anything. There's always a way to figure out anything. It's just how bad do you want it? How bad do you want it? Everything. Stocks, California, girls, anything. Just do your thing. Dividends. Woo. No news. I don't think there's any news on Overstock. I could double check, though. Just down most in 2 months. No, the last update was the Needham. There's literally nothing on it. Your girl fine, only 300 followers. No, I'm saying like any girl nowadays can make an Instagram and then some dude in India is going to be like, yo, let me marry you, princess. You are so beautiful. She'll probably like 17 of those in her DMs on the first day with one picture, and then that's it. Then that's it. The secret's out. They'll know. They have people telling them every day now. That's back in my college days. That's it. Girl from Nebraska had no clue. No clue. I was like, you're beautiful. She's like, no, I'm not. I'm like, okay, fair enough. TOT. Yeah, so watch out. Watch if we break here, though, because TOT's hitting a new level while market's at a breaking point. Got 30 minutes left, a little longer. Uncrowded trade. I'm glad someone got that joke. Why has it been falling? It's been falling because the CEO, they had a new CEO, they killed earnings. Everything was great, but then some of the plans from the new CEO, people are kind of doubting. Remember, this was the CEO. They got a boost. She just gave back her boost because the earnings were good, but it wasn't through the roof or so. I'm very excited to go back. I hope you have fun. That's why, again, moral of the story, y'all should probably, if you have the opportunity, again, college is not for everybody. You don't need it to be successful. It's not really, I think it's hard to say the impact it had on my life. But a lot of things changed for me, and it was a really good experience. So, just if you're already in that opportunity, if you're already in college, make the most of it and enjoy it, and realize you're in the best time of your life right now. Apple, well, you kind of have a bigger, broader market move more or less today. Oh shit. Visa been hitting it all up. My college is online. Go take an in-person class. Go study at the Starbucks on campus. I can't give you all of my tricks. No, I would not. I kind of would do that when I was younger. But nah, that would get old quick. Gary C says, take your college money and go travel. Yeah, I disagree with that. If like you're already in college and like you have the choice to like go to college, like go to a university, or like take the money and like go to fucking Thailand, like I'm pare down, baby. I'm fucking going to college. Screw that. I'm not gonna go get fucking malaria and then fucking meet people I can't talk to. What kind of shit is this? I'm out. I'm gonna pass on that, Gary. So right now, S&P is 50-50. It's 50-50. Dow is about 50-50. It's actually more components are up on the Dow, believe it or not. Went to community college. They saved me money, but it was not fun. Yeah, that's what I'm saying. It's not. And even then, we have a lot of people, even in our office, and in Lending Tips too. You should see his community college transcripts. It took Lending Tips, I think, 8 years to get his associate's degree, but he still did very, very well. You miss out on the fun and the networking. That's it. That's the way I kind of view it. Coming down a little bit, so watch out. It's a little bit slow. We got 30 minutes left. I'd even be cautious here of the 10-minute rigged. We'll see. I feel like Lending Tips made so many friends in college. I don't think he made any friends from community college. I think his thing was like he just makes friends everywhere he goes. Lending Tips just talks a lot. And he's like he'll just like engage in like he'll just say whatever's on his mind. Like where was I the other day? I was with him somewhere and somebody was wearing a fucking Samsung watch. And this motherfucker got into like a 7-minute conversation over the damn Samsung watch. And I was like, damn, I didn't see that opportunity for a conversation. I didn't think that was going to happen. I really did not think, like, he was like, oh, is that a Samsung watch? How do you like that? What do you got going? Let me see that. Oh, yeah, I got the Apple Watch. Oh, yeah. I was like, okay. Fair enough. I was like, damn, that's it. Swing trades, we made Wilhelmina today. And we did the Bank of America. That got clapped. It's kind of in the middle. Actually, no, I think the Bank of America came back. I think those are the only ones. And then I sold out some of the Beyonds. The Beyonds are still up, I think. You guys remember that Beyond play was a dud. That's 25% now. So I just made I made it free. And I trimmed it down to like $50. So those are some of the ones that are coming in here. Where's Bank of America? Still, I'm only down $80 on that. Remember, I was down $400 on that this morning, which sucks because do you guys see that? If I waited a little bit longer, I could have sold the premium when it was really high, and I could have made a lot more money on that. You see that? So I'm only down 80 on it, $90 now. And again, it's out of the money. So by tomorrow, it should work in my favor. But it shows you a little bit how that play and why, playing time, not panicking, understand that a little bit. Been so relaxing. I decided not to give a F about anything, just to get the breathing. Amen. I feel you. That was my vibe. Very good vibe I've had. I just wake up tired because of the gym, but it's so worth it. So y'all should run. GM warns about Bolt EV owners. Kind of coming down. Watch the SPY slowly breaking this point, so at least it's not happening fast, but you're getting a move there. Look at the mods. So quick on the news, baby. We love it. I thought you walked. I do. Okay, yeah. I mean, like, go. I lift, though, so I do a lot. But just get the body moving. Do whatever you want. Just move the body around. Lift some weights, too, if you like. After recalls, people think GM's going to get it right. The only thing GM has in its favor is it's a legacy automaker. There's not too many car companies existing in the world, believe it or not, and they're one of the legacies. So that's where, they have infrastructure built out, which you can't underestimate. GM can make 1 million cars. Tesla can't. Like, a lot of people can't. GM can make millions of cars. They already have everything ready to go. They got dealerships. They could ship it. They could build it. They have a lot of stuff, and the connections, too. They're going to get chips before everybody. Ford and GM, think about it. They're all old. They have a lot of people there. Moo says he forgot his hair tie at my house. He's going to come back and get it next month. Nope. I told you, you have 1 more week. That's it. After that, that's it. And you know why. I told you. I said you got 2 weeks. You got 2 weeks. I'll give you a free access pass. But that's it. I can't. Anything else beyond that, man, I'm sorry. That's it. I'm never going to see you again. Moomoo's like, wait, is he serious? Or what? That's a girl trick. Yeah, I'm stupid. I'm just like, oh, sorry. I threw it away. No, I would actually use it. I've been learning how to use hair ties. It helps. I didn't realize my hair was. I learned how to do the little, put it on your wrist and then put it over your hair and then back on your wrist thing. You know, that's just good. I've learned how to tie my hair. UNH before earnings or before market tomorrow. SQBG, wasn't that running earlier today? TLT, new highs. What a move. Mm. Is BurgerFi public or are they going SPAC? I think they're good. I've even tried their burgers and they're good, but I've heard they have a high turnover rate for their franchises. I think a lot of them get clapped. FDA requests that Amgen cease any violations of Federal Drug and Cosmetic Act. Just hitting all-time highs. There's never many people. It's a good they're good burgers. It's tasty. Yes. I like it a lot, but then I remember I went to one and then I went back 3 months later and it was closed. They shut it down and they just opened it. They opened it 3 months before I went there. And I was like, "What?" And then I even Googled it and I think they had a report on it. Their turnover rate is pretty high. Their burger is good. Their urban style fries are undefeated. Do you work for them or something, Mumu? Relax. Why did you use the actual, why didn't you just say their fries? He's like, their new tomato onion burger is amazing. And if you tried their urban style fries, so delicious. Why so specific? Found only at select locations. Amgen, it could have just been a smaller, it may have been something that's not really material. There to die for. Don't talk about burgers. Can't you eat a Beyond Meat? Let's get some Beyond Meat. Get a plant-based burger. And just pretend it's real. They taste good. I like Beyond Meat burgers. Beyond and the other one. What's the other one called? Unreal or some shit? What do they call the other one? Unreal Burger? Impossible. I thought Unreal and Impossible. Close. Yeah, those are good. Both of them are really good, but they're just, it's different. But I mean, it's not something I would eat unless, society got me to at that point because we ran out of food. Beyond got a 9% drop. Damn. Apple weather app refuses to show the temperature as 69 degrees. Jeez. Stonkburger. Meme Street Eatery. That's immature of them, right? Well, that's immature, Apple. 3 large pen blocks in the last 10 minutes. Yeah, no, that's from the New York Post. Apple weather app refuses to show the temperatures as 69 degrees. The temperature, what would it say? It may when it's 70 and then drop to 68. This is a real article, bro. We got this source. We got this source. You say Demi Moore with the, man, that's all you have to say on that? The little thumbnail? He saw, man, that's, somebody, listen, somebody got mad at me for my, where they said I was judging them. They said, email me about their OnlyFans addiction. And I don't judge any of y'all, okay? Yeah, all I said is I'm going to slap you just because I just, let's just look at the base fiscal concept of it. I love all of you. I don't do whatever you want to do. I don't care, man. Not here to make anybody feel a certain way. You like certain shit. That's great. But it's just the fiscal principle of, spending money on something you could get for free. That's at the very simplest. You know what I'm saying? That's like the very simple, just basic that I could say to it. That's all. That's all I'm saying. So it's just, I'm just trying to help you make money. Like, you know what I'm saying? And like that $5, $10, $20 a month, like you don't even have stream alerts. Like, what the fuck? Stream alerts will pay for itself, dude. Like, that's what I'm trying to tell you. Okay? Like, but even then, let's just save the money everywhere. That's great. We could save the money on every single angle, but like, if you could get it for free, that's why I'm saying just watch the stream. You see, the fiscal concept remains. You pay for stream alerts if you can't be on the stream. See what I'm saying? So don't, that's all I'm saying. That's all I'm saying. I'm losing out to the only, nah, man, I respect their hustle. Let them do what they want. I love everybody. I just, somebody thought I was like, they felt like I judged them. And they felt they were like, man, they felt a certain way about me just saying, hey, man, we got to save money if we don't. That just on that area. So I'm just trying to clear that up because that's not, I love all of you. I'm trying to look out for you with the fiscal attitude. And we get a higher dividend. Josh gonna be in the back of his head now. Good. No. I know, bro. That dividend news, that's great. That means it's a 2% increase, but shit. So what does that make the yield? I don't think it raises the yield too much. Yeah, man, look at this. Bank of America Bank of America's shares are set to fall after earnings for a 7th straight quarter. Look at that. So B of A price change on earnings day since April. Then the next day they move bigger. But every single, dude, they've dropped almost 5% on every single one. So B of A is probably going to move tomorrow. $15 related. That doesn't make any sense. But we're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hi chat. X out the chat. Hit the thumbs up button. Second link for the Nightly Watch. This is the main channel. First link for the Scream Alerts boot camp and real estate course. Follow me on Instagram at the Trading Fraternity. 16 minutes related. I don't know what the fuck I just said, bro. That was crazy. 16 minutes related. Oh. Okay, I'm going to go pee. Please hold. That's crazy, bro. I saw a little piece of hair on the ground, and it looked like a spider, but it was just my hair. We good. Da-da-da-da-da. I'm in a cup. Man, oh man. You drop one piece of your hair, that's like 86% of your head. That hurts my feelings. Okay? Okay, I was just talking about how I used to have a hairline, bro. Come on. Okay, Mr. Hunchback at Notre Dame. I don't want to hear it. This guy looks like Fabio in the face and hair. And then the rest is just he looked like a hunchback. It's the trippiest thing I've ever seen in my life. That's why he only posts face avatars, like of his face. None of his profile pics will have his body ever. It's just his face. He knows. It's okay. I know too. That's why I don't show my face. You see? See what I'm saying? You know what I'm saying? It's fine. That's why the closer the picture, the fatter they. Okay. Should have stayed calm. Yeah, you should have stayed quiet. You're free game. I could clap you any day, Mumu. You know, anybody else gets clapped, they're gonna think I'm like being hateful and mean to them. I'm gonna get like 10 emails. Like, you know, I love you. You know, I love you. That's it. That's why I like Mustafa. He's a good guy. He's a very good person. But that posture is whack as hell. I've never complained about getting clapped. Well, you're on the road to Mumu. And I don't know if that's good or bad. But no, I appreciate you. I appreciate it. It's all love, man. It's all love. We have fun. You know, we got to keep it positive and respectful, too. That's why I just know Mumu. So Mumu knows me. I know him. So that way, you know, when we go back and forth, it's, it's like I know him and he knows me. So it's not as, he knows I'm not actually trying to roast him. Banter. That's what European people say. They say just banter. Look at the fuck's banter, dude. Is that stock? What's the ticker? Banta. It's just banta. Just bantering. Can I hit Mumu with my blind stick? I don't know. His posture's in a fragile state. I don't know. I never shamed you for the speeding ticket. Oh, yeah, I remember that. You sent me that video. You're crazy. Dude, he's a Snapchat Levi sent me a video of him like going like 100 something past a cop, and then he has it on dash cam getting pulled over. I can't encourage that behavior. I can't, I drive really slow, believe it or not, most of the time. That's why I just keep it cool. I chill. I think philo when I drive. I relax. UNH called credit spread, protect the downside. I think it's going to be a good earnings. I think we'll see. I don't know what the prices are. I was thinking of selling puts. So for the upside on UNH. 10-minute rigged. Sounds like an excuse, not taking any blame for something other than positivity. I knew we needed one. I appreciate you. But, I mean, I would leave that up to Mumu to determine whether or not I'm being negative or not to him. I've shown him a lot of love. We needed one, though. We needed one. So it's good. It's realistic. Earnings before open, TSM, Morgan Stanley, UNH, USB, BK, CTAS, TFC, Home, THTX, PGR, WIT, WNC, and WABC. Senate passes bill on climate and energy initiative that could shape energy measures in bipartisan bill. New Viacom play. I have the old one. I still have the old one. The last candle makes me. Well, that's at 10 minutes. I don't know. Again, you had Powell today. The prepared statement was very dovish. He didn't really say. He said the same. The market is confused. That's what I'm saying. Like, that's why the market isn't too jumpy. They're like, I guess what he said was good. But I really think, give it a little bit of time here. We're going to see some earnings. You're going to hear Powell again tomorrow. But I think the next Fed meeting is right around the corner. Isn't it next week? Yeah. Right? I think you get the Fed right before Amazon earnings. That loan program is for residential properties, but also up to like 3 or 4 units, I think, too. Tomorrow, Powell is, so today he was in front of the House. Tomorrow he's going to be in front of the Senate. Key points, sadly, nothing. In the sense that there wasn't necessarily anything except he said inflation is going to be hotter, but he's not expecting anything. They highlighted real estate as a cause of, a lot more questions, but he said it's nice. He highlighted the imbalance in the recovery. And then you had the beige book that was highlighting that I think it was most participants in the last one, but some of the business connects see transitory as inflationary. any interview tips, ask a question yourself. So when it comes down to it, at the end of the interview, you should have a question about the company or your job, or in a sense, act like you actually give a shit. Okay, everything sounds good, but now you start asking him questions. I don't know where you're applying to, though, so I can't give you an example. Not to Dwight Schrute, though. Good. I have some questions for you now. TLT, big pop right there for the end of the day. It's going to be an exciting one. It's going to be an exciting one. Let's see, what are those at? Hobbin. Oh, I don't think these will get filled. BAC. Oh, hell yeah. Yeah, see. So eventually that play is now working out for us. Again, I'm 50 cents out of the money now, I think. Almost. But even then, with the time decay and everything, it should be good. But BAC is probably going to, historically, it has dropped based on that last one. But as you guys see, that play was ugly this morning. Now I'm up on it. Hey, $10, son. Look at that. That was crazy. We flip-flopped. I sold right below the money over here, but then it fell in the money. I sold close to BA got that C. So I sold outside of the money, then it fell in the money, and now it fell out again. It's just because it moved a lot. A news article came up, but I don't think I could show you guys. Funny headline and funny associated pictures. You got 7 minutes left. Not 7, 3 minutes, I meant. All right, ladies and gentlemen, we're making our final approach here. As we make our final approach, if you guys are holding on to any bags, please stow them in the overhead bins above or firmly beneath your seat. We'll be coming through the aisles with the trash bag if you'd like to dispose of those. But as we make this final approach, we're going to be landing here into the second link terminal in the description. That's going to be the nightly watch list and main channel layover. And then we're going to be taking out promptly around 6 a.m. out of sunny San Diego, California. As we make this final approach here, we're going to be landing into the second link terminal, San Diego International Airport. It is about 83 and sunny, a little bit windy, not too sunny, not too cloudy, but overall perfect as always. If you're interested in your Cold Rapid Rewards program card, please fly it down there, flight attendant. We'll get that to you as soon as possible. And as always, we appreciate your business and thank you for flying with the Colt. Oh, yeah. Clapped. Don't get clapped. Oh, flight attendants are ready. There you go. You see them. Ready to go. Ready to go. Yes, baby. 1 minute! Wow, a 10? I thought a 9. It cracked a little bit. It was aggressive, but it cracked. Oh, man, I'll take it, baby. Let's go. Let's go. Run it up. Run it up, baby. You got 30 seconds remaining. I think one of these clock. Yeah, this clock is behind. This one's behind. Get ready. How are we going to close it out? What's the volume on the day? Again, you have Powell. You got more earnings and more Powell on the way tomorrow. So keep that in mind. We got the weed legislation bill. You got the budget as well today. I think we got a couple of other things here too, but nothing too impactful besides Powell. 5 seconds. 4, 3, 2, 1. Ding 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 ding. On. Let's go, baby. Let's go. We did it. GG, baby. Another 7 hours. Woo! How do you feel? How do you feel, huh? How do you feel? Hold on. GG, hold on. I got a phone call. They called me right at 1 p.m. They say, okay, stock market closed. Stock market closed. I know you available. Stock market closed. Look at it right at 1 a.m. At 1 p.m. 1 p.m. But GG in the chat. I said, hold on. We got a GG in the chat. We got a GG, baby. Let's. So God bless you all. Thank you for being here. 1.9 thousand likes. Hard. Let's go. Let's go, baby. Shout out to the Chad. I love all of you, and God bless you. Listen, thank you for being here. Before you head out, I hope you know we're grateful for the fact that you're here. Thank you for being here. Thank you for giving me the opportunity, whether you like me or not. You gave me an opportunity. You know that? You know that? That's what I see. You know, look at the dislikes. I see 55 opportunities, and I say, man, that's unfortunate. I'm sure we probably could have been great friends. I'm sure things may have worked out, but I said that's 55 opportunities. That's a lot of opportunity. Oh, y'all don't feel me. Y'all don't feel me. Let's go, baby. That's it. The day's over. Shout out to all the members. Shout out all the people who kept it positive, all the members rocking the badge. You know, sometimes they're not always the most positive, but they got the badge. But we still appreciate them supporting. All of you guys hold it down regardless. All the people who are positive, the people on the stream alerts, thank you, thank you, thank you. First link in the description. They hold it down, baby. I love all of y'all, man. The chat, baby. It's all the chat. We love you, baby. God bless you. And all my beautiful people out there, listen. We didn't ever expected anything from you. We don't want you to give anything. Y'all show some love on the donations. Some of y'all got the members. Some of y'all got the stream alerts, but we show up every day. We are never expecting anything, and the fact that we get something in return is amazing, and the fact that people keep it positive. So I hope you know, whether you got a badge or not, anything of that nature, we didn't want anything from you. We do respect and appreciate the fact that you came here with positivity. You contributed to the chat. You posted the news. You at least made it a good environment, and that goes a long way, baby. Amen. Amen, baby. Come on. Amen. So get hyped. Get a smile on your face. That's it. The day is over. First link for the Scream Alerts Bootcamp and free long-term. Free long-term. Oh, my God. Limited time only. Free long-term. That's what I'm going to do. I'm going to look at this. Look at psychology. I'm going to turn off the free long-term. So if you don't sign up, I mean, that's it. I'm going to get rid of it. Limited time only. Limited time only. Act now. Only 2 hours left. But only 2 hours left. Only 2. Oh, now what? Yeah, you see? That's because just get the long term. You don't need to be baited into it. You don't need to be tricked into it. You know what I'm saying? Oh, y'all don't feel me. They don't feel me. You see that? They don't feel me. They don't feel me. You see, they don't feel me. That's why I say it. Just do it. Just do it. Get the damn long term. You got free tools. Free tools. Tools to build. Oh, man. They don't feel me, man. They don't feel me. But I love all of you. Second link for the Nightly Watch List, the main channel. Third link for that membership badge. Fourth link for that merch. And check out the new channels. Cult Real Estate, Cult Cars, Cult Philo, Cult Music. Follow me on Instagram at The Trading Fraternity. Keep it positive and respectful. We love you all. How to find option 1000% gainers. If you haven't watched this tutorial, you should. Or if you've gotten better at trading options and feel like you figured it out a little bit, this video might help. How to set up the long term. And finally, the prayer request wall, baby. The prayer request wall. Oh, yeah. Just signed up for the long term. Amen. 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 That's good, baby. Now let's build a long term and let's be patient. And you know what I'm saying? Just get ready for it. Get ready for it. But listen, it's the prayer request wall, okay? So I love all of you. I don't care what you believe in. We just want to root for you. That's it. That's all it is. You don't need to believe anything. It's just good to have somebody rooting for you. You know, my mama is reading these, praying for y'all every day. My own mama. That's what my own mama do. She pray for y'all. I pray for y'all too. I love y'all. You know that I said it yesterday. I was like, I do only look at this on the weekends and pray, but I do pray for all of you every single day. You are in my thoughts and prayers every single day. And, you know, you may take this really crazy religious. You may take it as this or that, but all I'm saying, that's just sending good vibes, man. You know what I'm saying? That's being surrounded by people who actually give a shit. You know, you got people choosing to make good decisions, and we got a lot of that here. I'm not talking about myself. I'm saying the Chad, baby. I'm saying the Chad. That's why it's hard not to think about the Chad. Hard not to send good vibes. That's what I'm saying. Just start cultivating some good vibes. You know, send some prayers out there. You don't have to pray. I get it. Maybe you ain't talked to God in a long time. You can still send good vibes. You can root for somebody. That's all we doing out here. That's it. So pray for your brothers and sisters. It's very simple. We love y'all. Just vibe with it, man. Say, hey, man, it's all vibes. Some people fail the vibe check, hella. Like, just crazy. I'm like, come on. Oh, yes. Tell them, Flav. Tell them. If it don't flow through you. Oh, if it can't flow through you, it won't flow to you. Ooh. So let's go, baby. Let's go, baby. Let's go, baby. Woo! Tell the truth why you want the reason, why you want people to get the long term. The truth is, if you get the long term and if you follow it, you're going to make money with it in the long term, make the most of your time, and then I will be involved in your life forever. Why? Because nobody has ever done that. And that's it. And people don't promote this. And the only thing that has made me just consistent, without a doubt, the easiest, biggest amount of money has been the long term. And people don't see that. And people don't get it. And that's it. Are we building a cult for a very long time? So then we're going to have a big real estate network. We're going to have a big finance network. That's exactly why I want you to get the long term. And then you're going to look back 1 year, 5 year, 10 year and be like, damn, he actually gave me something of immense value. Oh, and then that's the truth. That's why. That's what I'm trying to do. I'm trying to get you hooked. That's what I get you hooked on the long term. That's it. I give you something so valuable. That's it. That's it. That's why. That's the truth behind it. They're going to get hooked. And you're going to be like, wow, I made the most of my stock market experience. Thank God I knew it. Oh, watch. Give me. I only had 2 years and you saw it. That's how I'm a long-term dealer. Amen. Wait in 5. Wait till you see all your friends. Oh, you know? And never compare yourself. And never flaunt on anybody in that. But I'm just saying, 5 years from now, oh, when all of it's said and done, when this blip is past, oh, you know what's going to happen, right? Oh, you know how many people you're going to know who knew about the stock market but never knew about the long term and never really stuck to it with that level of discipline? Oh, and you have guidance on it too. That's it. Anytime you come at me with some bullshit, I'm trying to sell this. Oh my God. Oh, you get a whole rant explaining it and then showing it. We've never sold anything. There's no confusion. There's no fucking confusion with it. There's no, I'm going to sell here, I'm going to buy here and sell here and then buy here and then time this. No, there's no confusion. It's simple. It's just buy and hold. Oh, come on. So just watch. That's why. That's the truth. So get it. Do it before my heart changes, maybe. Who knows? Maybe the world is a sick place. You should see my emails. You should see the people who report me for flagrant and just malicious stuff. Oh, you should see. What if my heart changes one day? And I said, screw helping. Do it now. That's all. That's why. And do it for yourself, and do it for your family, and best of all, do it for the future generation. Y'all don't feel me. Come on. You don't see it, but little by little, we have had our hand in stock market culture. And that's it. That's fine with me. I don't care how it plays out. But to know we had a positive influence, that's fine. Woo! They don't feel me. They don't feel me, man. That's it. They don't feel me. Woo! So there it is. So fill out a prayer. That was a little philo, but that's not even the philo. Just remember what I told you today, okay? So let's wrap it up, okay? You got the energy. I need you to take the energy. I'll get to that in a second. But listen, when it's all said and done, I hope some of y'all can walk with your chest to the sun today. You have a lot better opportunity than you think. And what I mean by that, it's not as bad as you thought it was. So some of y'all need to stop blaming yourself for certain things, because when you get to audit it back in, God's going to audit it one day. And you're going to realize, wow, that's crazy. I wasn't as bad as I thought. Okay, can you say that for a second? Will you say that out loud? Oh, y'all don't feel me. Y'all don't feel. Just say it out loud. Come on. Tell me how you feel. Just say, I wasn't as bad as what I thought. Oh, they don't feel me. Oh, they don't feel me. You see that? Whoa. Woo. Woo. So let me balance it out. There's some things you thought you did good, but you actually need forgiveness on it. That's what you're going to find out too. But then you will find out some things you were excused for and you didn't realize it. Oh, isn't that crazy? Imagine 5 years from now, E-Trade sends you a check and says, hey, you lost money on these trades, but it was actually our fault that you, oh, wow. You hear me? Oh, that should have hit. Oh, you would be like, what? Think about it. And then you would go and imagine you started you changed your trading style and everything because of what happened. Oh, and then you look back and you're like, whoa, that's crazy. Ooh. Woo-hoo. Wow. Wow. That's all I'm saying. You weren't as bad as you thought. So that's your philo, baby. Take it. Run with it. You get the rest of the day today. Breathe in. Go. Breathe in. Come on. Do it again. Do it again. Do it again. Do it again. Just take a moment. Look around. Look at the computer screen. Look at your room right now. Look at what you're looking at. Maybe you're in your car. Maybe you're at work. But take it all in and breathe in. And just realize what's around you. And that you're alive. The sensation of being alive. Just think about that, okay? That's it. Just think about that for a second. You're still alive. Oh, you have all this thing, all these feelings. Woo! Woo-hoo! That's a beauty. That's a beauty. You alive, baby. So feel that. You got the rest of the day. Not every day is promised. You know that? Oh, so take the most of it. It's a nice day outside. Amen. Take advantage of it. Keep the energy up. You already made 7 hours today. Oh, you got the rest of the day. And you got the hype. You got the energy. Oh, let's go. Get the body moving. Take care of your body. You'll feel even better. You know, exercising is like a pyramid scheme. It gives you more energy, but you have to give energy to get, it's a pyramid scheme, but it works. Okay? So move your body today. Go get some exercise. Go do something. Go do something. But just feel it. Go to work. Listen, if you're at work right now, can you have the best fucking day ever? Please? Please? Can you do what you're doing just to do it good? I want you to make a competition with yourself. You don't have to get too competitive. But all I'm saying is just whatever you're doing for the rest of the day, just do it the fucking best. You know what I'm saying? You know what I'm saying? I don't care if it's simple. I don't care what it is. Just do it the best. You just feel it. Be like, I'm alive. Oh, I got to just try. I'm going to just do it. There's a hierarchy. You know that? I forgot what it was. Jordan Peterson said it. There's a hierarchy of, I'm blanking on it. But it's when you do. There's a difference between doing something and doing it well. Oh, come on. Come on. Just do it well. Just try. Use the energy. let's go. Wake up and drive. That's your attitude. That's it. I'm just giving you an attitude hack right there. Whatever you're doing right now, just say, I'm gonna try to do it the best. Just give it all. Let's go. That's what you need. That's it. Enjoy it. Watch. If you're good at it, just be good. Kill that salad, baby. Yes, hierarchy of competence. That's what it is. There is a hierarchy of competence. It's exactly what it is. And that's why, you know what? And you should reward the hierarchy of competence. If you do something good, do it. What did JP say? He said, anybody could be a plumber. Like, if you're going to be a plumber just to be a plumber, what's the point? Well, you're going to be a plumber and not do your job well. You're going to cause more harm than not. Well, you're going to just fix pipes with a bunch of leaks in it? Come on. Just be the best plumber and you'll get rewarded. Oh, they don't feel me. Just do it. Do it the best. Do it the best. Just do it the best. Be the best plumber you can reasonably be. All within reason. Yes. Amen. So let's go, baby. Let's go. Finish the day. Take the energy. You're not a chameleon. You're going to wake up and drive. You determine your attitude in the morning. Don't forget this. I hope my annoying ass voice is in your head in the morning. Well, drive, baby. Drive. Put it in drive. That's it. That's it. You're not going to react to your environment and let a negativity thing make your attitude some way type of, you going to feel some type of way? No. You already made a decision. D is for decision. Oh, they don't feel me. It's game time. So do it well. When this stream turns off, you are going to have an opportunity to do something well. Oh, you don't feel me. You don't feel me. Someone's going to walk up to you. Someone's going to ask you for something. Someone's going to piss you off. Oh, you're going to have a choice to make between food that you're going to eat. You're going to have a choice to work out or not work out. Oh, you see what I'm saying? Right when this stream ends, you are going to have the opportunity to do something well. I hope you take it. I hope you take it. I hope you take it. That's all. That's it. I love all of you. God bless you. I'll see you on the watch list tonight. And don't ever forget, you got to read your books, Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. You can add Lead the Field by Earl Nightingale. And don't forget why we're here. Why do we do things well? Why do we give it 100%? Regardless of any reward. You see that? The reward just sweetens everything. Why do you choose to do what not everybody would do? Why did you choose not to conform? Why? At least I can tell you why I did it. Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. So go, baby. Go. Get out of here. That's it. Get out of here. Go get that opportunity. Go. Get out of here. That's it. It's over. Your opportunity to do something well it might happen in 5 seconds. Might happen in 5 minutes, or maybe in the next few hours. I don't know. But go. Go and take it. That's it. I love you all. I will see you on the watch list tonight, baby. Peace out. Oh, hey, Josh. I want an opportunity for a pony. Okay, love you.